What's up, team? How you guys doing this morning? Sorry, I was a little bit behind. I was trying to get a couple of things done before this market opens. So there's our bounce there. I would look. I would look to the. Uh, you know, I would look either to the south side or sideways a bit. I do have a couple plays I want to go over with you guys real quick. Um, we, First we can start with Roku. Obviously, we're going to look for Microsoft Meta. Google is strong, so we're going to cover them real quick before this market opens for you guys. If you guys could take the time, like, share, and subscribe. Post your plays down below. Right, we're all here trying to help one another. I watched it. I didn't have any coffee this morning. I ran out of coffee, so I had Red Bull in there, thankfully. Um, After watching some of the stuff I heard yesterday on somebody's channel, like, I'm not here to disrespect anybody or anything, guys. Really, not at all. I just feel like for the amount of viewers that's had on this person's channel, and for him to say this is what you want to see and not this, pretty much, right? He's saying that this is what you want to see to go to the long side, guys. This is what you want to see to go short. Do you know what I'm saying? What would you rather do? And I want you guys to tell me in chat if anybody's here. Would you rather go long here or would you rather short that? All right. There is an immediate reaction away from that price level. The sellers just step aside for a minute. The buyers here are not in a hurry to bring it up as quick as the sellers are in a hurry to bring it down off of that level. All right. So no, yeah, you can sit there for a little bit, but the longer you sit there at a level, that greater that chance that that level is going to break. So no, you don't want to just see a stock just sit there on the level and just sit there. You don't. Trust me. I know this. Mid caps, small caps, large caps, you don't want to see that. You don't want to see that. You don't want to see the SPY try to break out to a new high and then immediately put in a new low. That's all bearish sentiment. So I'm not yelling at you guys. I know it seems like it, but I'm like, this motherfucker got X amount of people watching this shit right now, and he's giving them all false information. All right, that's not what you want to look for to have confidence in a long. You want to have confidence in the short or the long because that price is moving away from that area or that whatever that price level is. That price action is moving away from it in whatever direction to the upside or downside. That tells you a good, that tells you a lot. That tells you more than what down here is telling you. Down here, buyers are not in control as much as the sellers are in control up here. And hell, you even put in a new low here. Like all these little signs. All right, let me set my charts up. So Roku, we want to look for a break of the 50-day. You can look for a break if this 50-day isn't able to hold as support and the markets do go to the downside. We can look at Roku for a short. You have a small gap fill up here at 73.65 area. Let me get this fixed real quick. Let me get everything situated. She had me up again last night, which the only thing I can think to do is keep her up. Like, start doing everything I got to do earlier. And I don't know why she just started this. Like now she's in the other room sleeping. Like, I'm like, so I don't know. She's never done that before her whole life that I've had her. She's never like done this. So I'm trying to figure out why. But I gave her food last night. She did it once, and then I went in and I gave her more food. It wasn't like she didn't have any, and she ended up just coming in and laying on me. But as soon as I'm telling you guys, as soon as I fell asleep, meow, I'm like, oh my god, I'm gonna kick your ass. But again, what are you guys watching today? I'm gonna go through mine. I don't know what's going on with my brain right now. There we go. Ad studies. There we go. No. What the? This is all holding me up. Come on, man. What the... So right now I'm just trying to bring up MACD. Okay. And RSI. Add study. All studies. So please, person, if you're out there and you tell them that 441 is the price action you want to see, don't ever say that again. Don't ever say that again. I mean, I just want people to have the right information, that's all. Not that the person's watching the streaming news about me. So, alright. RSI, MACD, M, okay. Did you notice how it just took all my moving averages away? So Google Strong today, guys. Studies. Add study, all study, MACD, and then RSI. I don't really need the RSI, but kind of do. Alright, time and sales. Let's go. So how are you guys doing this morning? Is everybody good? Great, grand, wonderful, good. Great, grand, wonderful. Alright, so the S&Ps are holding up for the most part right now. Again, on the daily chart, we are a bit oversold. What's up, Bingo? Sorry, I didn't see your comment because I have my screens kind of blocking it right this second. Yeah, and it also has a price upgrade. Nice job. I hope you do too, man. Have a great day, man. Have a great day in class. I'm going to try and have a decent day today. If the market gives it to me. I'm not blind to the fact it might sit sideways, so. I appreciate you, man. Greatly appreciate you. And we got a couple small caps. A couple earnings, Neo. Just getting they're pretty much spending too much money from the way I take it. Appearances. I was watching Tesla also, so there's Google to the upside. It's got a bit of strength today. So look what I seen on on Tesla. All right, here comes the market open. So I'm going to bring you guys to a daily chart. Look at how Tesla has been rejecting this 9 EMA in the 20-day, right? This 20-day daily moving average. But look at the 9 EMA, even with Meta. So I was looking at it last night. So here we go. Look, we're going to push into yesterday's close on Tesla. And let's see if we are able to pull it back and hold yesterday's close on Tesla. Right? I'm going to be looking at Meta. I'm looking at Google. Alright, give me 1 second. As soon as I come up with my plays, or not that I come up with them, but as soon as if I get into anything, I will let you guys know. Man, that would have been a nice short on Tesla there. Let's give the markets a little bit, see what they want to do. I did take that Microsoft small. It is down 32%, but I took a really small position on that with the markets being as weak as they are. So we can look at this a few different ways. If it doesn't hold this, I'm going to give it to the 100-day moving average. I was able to buy this thing. What time was it? Was it about 2 o'clock? Yeah, it was about 2 o'clock or so. I can't remember what time, but that's the reason why I bought it, is because it was right here by the 100-day moving average. And I'm like, there's my risk to reward, right? I'm buying it pretty damn close to the 100-day moving average. If for some reason this market holds up, I got a little bit of time on this thing. If for some reason the market holds up, then there we go, right? So I'm going to let this thing do what it does. Amazon. People are saying that it's weak, but look at that. It's holding really nicely. It held the 50-day really nice yesterday. Let me see here. And it sucks that we don't have much news or much going on right now. We do get a little bit of data. But again, we won't really see these markets move until we start getting into the end of the week. So what I'm going to look for also is, so there is the close yesterday, right, on the S&Ps. I'm going to see if we can hold, look, so far we're holding yesterday's close on the S&Ps, guys. Right, so far we're holding the close on the S&Ps. So one of the other reasons why I took that Microsoft was because of the Dow. So there's Amazon. So we had a light volume pullback on Microsoft, and it's not the greatest. So there's some nice upside there on Amazon, guys. Shit. I'm gonna wait for the pullback on Amazon. Got to. I missed it. Fuck. I missed that. Damn it. Excuse me, I don't mean to cuss, guys, but man, I missed it. I want to see if we can hold this. Hold that there. So we have a previous double top here on Amazon. Actually, right there would be the area I want to look for. $134. It's a bit oversold. So it looks like the S&Ps are rejecting up here. You're starting to get less volume. We're a bit oversold. So you guys see that daily rejection to that yellow line? Let's see if Amazon can pull itself back to 133. And I want to look at Google real quick as well. See if it pulls itself back down into here to yesterday's close, guys. See, that's a nice short right there. That could be a nice short. You do have a previous double top here at 138.80. right? You break that, um, you would obviously look to see if it does break and you get a pullback in the VWAP, turn into resistance. There's a couple different ways to play it, right? You follow the volume. That's an increase in volume to the buy side. It's not much though. It's not much. We don't have. I feel like we don't have much participation. Um, let me see here. Let me see here. There's MSFT. I just want to check on Microsoft. No, come on. MSFT. Google is strong as well, guys. Just so you guys know, Google is strong. And Meta is strong. Gonna watch Tesla. So here's all right, 133. I don't know what the news was on Google. If anybody has it, I have it on here. I can look, and I will here in just a few minutes. Jolts, job openings, losses, and quits. Like pretty much the amount of people that retire versus the amount of people that quit or get laid off. All right, that's what it is. Tej. Man, I can't let this Microsoft drain me like this. I'm gonna hold off on it a little bit. Yeah, no problem, buddy. I can Google it for you too, just to give it the actual definition. Um, Job openings and labor turnover. That's what that is. Which is the labor turnover. Would be people retiring, people quitting versus people getting laid off. Pretty much what it is. Um, where am I at here? Yeah, I can't let this Microsoft continue to just drain me like this. This would be stupid to fight this trend. I'm gonna try and hold it for a little bit. The volume's increasing on the S&Ps. What's the Dow doing? The only reason I got Microsoft yesterday, and I should have took the profits, was because of the Dow, right? Well, look, if the Dow continues to get some strength today, but to me it feels like the Dow is rejecting that 50-day moving average, right? So I'm not just going to sit in a losing position. I made it small for a reason because I didn't have much confidence in it. So it's where I want to see if the sellers can just step away for a little bit and see if we can get a little bit of upside. And who wouldn't want to sell their shares at a higher price, right? Yeah, this thing doesn't have any type of news or anything with it. So the thing though is that it was holding this 100-day moving average, and this was pretty much to me a low volume pullback. It was a low volume pullback yesterday, but again, I don't have too much faith in this thing. Just want to see if we can get a little bit of a bounce today in the markets because I feel like we're a bit oversold. I feel like we're a bit oversold. I'd like to see this RSI get up here to 56. We're at 45 right now. You know, so it's unfortunate, but it is what it is. You know, sometimes things happen. That's why it's best to just sit on your hands. So where's Goog? Old Goog. Let's see here. There we go. So there goes the S&Ps. We're going to look for this 444 area, guys. So this thing pulled itself back. This has a low float here, TIVC. This is where I would look. Did I write that down? No, TIGR, GSAT. Look at AMD, guys. Wow. Look at that. I'm not sure if there's any type of news. Holy cow. And here's Microsoft, still stuck and can't get out of its own way. Wow. I feel like I messed up. Wow. Look at AMD, guys. Big. Come on, baby. Are we going to get this push to the 50-day on the SPY? Come on. Let's get that push. Let's get that push back up into the 50-day. That's what we need. Microsoft sitting still at its 100-day moving average. That weak bastard. I need to get out of that thing, man. Look, it's still down. Are you kidding me? The market's up and Microsoft is down. Oh, how foolish of me. How foolish of me to not take that little bit of profit it gave me yesterday. So they have a deal going on too, though. Like Microsoft has this deal going, and I think that's why it's just going to sit here and consolidate. And you're stuck between this 20-day moving average, and not like a 4-hour or 1 hour. Like I'm so I watched this one person, and after he started saying and doing some of the shit he was doing, I couldn't turn away from it. I'm like, what the fuck? He's talking about like what his 100, like his daily, the moving averages, and I'm not gonna spend time on it. So clear rejection there. I'm gonna give Microsoft just a couple more days because I don't think I can lose that much more on this position. And I went small on it for a reason, so I'm gonna see where we close today, and I feel like the volume isn't that great either. Hotel Kilo. What was it, dude? Come on. I hate when they say that stupid shit because they can't. Hotel Tango what? Hotel. Where is it at? Let me see it on this. Looks like you got some strength here in like Pinduo Duo. Look at that gap up. I'm not I'm not sure what happened there for Pinduo Duo, guys. Oh, earnings. They had earnings yesterday. Oh, that's PDD. I don't know. I'm thinking of something else. I think I'm gonna take this Microsoft off, guys. Even if it's the wrong thing to do, I can't. It's giving me back the majority of. That's the area. I'm gonna take this Microsoft off. That way. Um. Oh my fucking god! You're such a dickbag. Fuck. It gives me one order and fills me at another. What the fuck? And watch it climb higher. Watch it climb higher. So there was that pullback, guys, on Amazon. See, look at that, right to the T, guys, right to a T. Um, I'm gonna look to. I'm gonna watch the volume on the S&Ps. Not sure how much I have faith in this rally. It did exactly what I wanted to. Right, this morning I came in and said I want to see if we can get that bounce to the upside, and we'll see if we can attack it up here at this 50 day. I don't know if I moved it yet. I'm sure I could set it up to where it's. My charts are messing up badly today, I'm noticing. So yeah, like as I was looking this morning, I wanted to see if we were going to bounce a bit higher for a few different reasons. HKIT? HKIT? High Tech Global? Something's going on with High Tech Global. I don't know what the hell that is. Alright, so what sectors do we have that are strong? There's JP Morgan. UNH to the downside. The Dow is on its way up. Trying to. Fuck. I should have held, guys. I should have held it a little bit, but I would have still been down. Mm. I just felt like Microsoft was dead money. Felt like Microsoft was dead money. It's all good. Sometimes you just gotta be patient and wait for the setups. Let me let's do something real quick. Oh, that's right, guys. As well as Oracle, they got an update and an upgrade. I'm not sure how much that's going to do. Not sure like what all that's going to do for them and what it's not going to do. So I wrote down last night. I was looking at Tesla, 240. No. Let me see here, because I was up at like really early this morning. So there's a pullback and hold of this area at 238.50. So she's already pretty much taken off on you. What I would look for, if there's any way we can get another pullback, and you want to see if you start to hold, if you can hold this previous double bottom, right? This double bottom right here. See if you can, regain that to get confidence to get up through this next level. I want to see if Tesla can get itself somewhat of a bounce. I don't know how much it's going to get a bounce with the market if it cannot, it's got, so the S&Ps have this 50-day moving average to contend with. If we get back up to that 50-day, I will be short. I will be short. Because I don't know if it breaks the first try. And if it does break, into what manner and on what news. Like, it's going to have a catalyst to break back through that to get back up into this area of highs. Oh, man. Microsoft, you booger. I'm going to get something to drink. I'm going to look around. Like Amazon, right? It did an alright job trying to hold its 50-day, right? Look, bounce, 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 and it's like the bounces aren't getting that much bigger off of the 50-day. Same thing with Google. So I'm kind of just going to be patient again. This is the job that it entails. Is you wait for what it is that you're waiting for, and you attack. Right? You attack. Yesterday, look at that. That's a really nice bounce on Apple off of the 100-day moving average. Right? We brought that up yesterday. I'm gonna go get another Red Bull, get something to drink real quick. I'll be right back. And really real quick, this 100-day or this 445 on the hourly chart on the S&Ps is a good area to make it resistance. It's like 444.81 to 445, right? That previous pivot high up here. That's where your 50-day is as well. So if I pull up an hourly chart, see, it's going to look different from from what I'm looking at on my phone. I like the way that it's set up, and it has just the I don't know, like it times like from wherever it starts the timing in the morning on it, it paints the picture pretty clear. So right here, guys, right? 444 would be like right here. Yeah, it's pretty much 445 is where it shows it. See, it looks so much different on my phone than it does here. But yeah, 445 area. That's so weird. It looks so much different. Because there's like a previous like pivot low and a bounce, which it looks like it would be there, but it's not, because this is showing me 444.37, 444.37. Maybe it is right, I guess. I don't know. It's still weird. And if you guys have any questions, throw them in the chat. If you guys have anything, any plays that you're looking at, any runners, anything that's going on in the market, throw it in the chat. I don't see from my eye and what I'm looking at, I don't see much even in the small cap, for small caps either. You have that one, that H. So here we go. Data's getting ready to come out, guys. All right.
Jolts opening 8.827 million versus the 9.465 million.
8.827 million, something like that, versus the 9.
Consumer confidence index is 106.1 versus the 116 expected.
1.8 versus 9. That's what the markets want to see. Let's listen up real quick to disappointing.
Job openings since March of 2021. So really reverting there, and that really comes at a time where our last look at 9,582,000 now gets retrograded to 9,165,000.
Wow.
So we can see the trends here. Now let's start looking at consumer confidence. These are from the conference board the month of August. If you recall, a number last time at 117, that was the best in 2 years. But boy, did we drop down 106.1, 106.1. To go from the best in 2 years to the weakest since May when it was.
I fucking knew it, man. Sorry to cuss. I knew it, man. I didn't know it, but there's our test of the 50-day, guys. We're right at the 50-day. Look at Tesla just soaring. Fuck. Unreal. Sorry to fail you guys. Look at that Microsoft. If you would have taken that Microsoft yesterday, brutal. I think we need more to get through that 50-day, though. I really do. I think we're going to need more, guys. So, that would have been a nice area to take that Microsoft off, though. Man, let's see here. Let me see. All right, so if we are able to pull it back on the SPY, I should get long, but I can't. I can't get long. Remember, guys, we do have a hurricane coming. You guys may want to check out. Shit, I gotta use all my. You You might want to check out, like I said the other day, Home Depot, things like that. Oil. I just don't know, you know, I would say more so Home Depot. Alright, so who's going to lead to the downside? So there goes Home Depot. It actually just went to the downside. I want to see the Dow. Come on. Let's see if the Dow rejects that 50-day. Let me see the Qs. So the Dow is, there it goes. I think you're going to, I don't think this market gets through the 50-day until you get PCE. I don't think you get it until you get this inflation data. All right, here's Tom Lee. Let's see what he has to say. I want to hear what he has to say.
It certainly does. I put this in the camp that inflation's on a glide path lower because with lower job openings, a lot of anecdotal evidence that it's been easier to hire and even new job postings have lower wages. That really takes the wind out of someone saying wage pressure is going to keep inflation high. So there's a lot of data this week, but I do think that by the end of the week we're going to really see a picture of inflation falling faster than consensus expects.
What is the lag between those kinds of prints and the kind of Fed rhetoric that was back in?
I cannot believe I got shaken out of my fucking position, guys.
That's a great question, Carl, because we've had some really soft inflation readings for some time. And
Unbelievable.
have FOMC
I just had to dwindle that loss. It's the only way you're going to be able to do it, right? I mean, it's easy for me to sit here and say, like I said last night, it's easy for me to sit here and say, hey, look at the market, it's up. Yeah, well, it could easily be just as, it could be down just as easy. I had a feeling that we were going to hold. That's why I brought up that hourly chart I was looking at on the SPY, that it was holding, and it really solidified the hold of this 444, 443 area. What's Meta doing? Meta was another strong one.
Tango Golf, Tango, TGT.
Everything as if it's a hawkish statement. I kind of looked at Jackson Hole and I thought it was actually a real validation that if inflation comes in soft, the Fed's going to change its view.
I'm with Tom on that.
46.
But you're right, a lot of people
44.66.50.
I'm with Tom on that.
Nearly a percent here at 26,325.
Look at Tesla, guys. Wow.
At 10 o'clock on that data. Crude continuing lower here and spiking lower now.
Nice job, man. Great job, Tej. Great job, dude. Great job.
At 79.39.
Yes and no. I think people overstate the impact of the...
And look at the volume on Tesla. It's actually decent.
If anyone's going to be buying equities globally, the U.S. stock market remains the most liquid. As you know, outside the U.S., it's pretty much a small cap world anyways, small and mid cap.
Yeah, that volume on Microsoft isn't too great. Man, this is insane, guys.
Not looking at NVIDIA's stock price reaction. Look at the guidance changes. So to me, those are core stories to the U.S., the technology leadership, pretty central to...
I gotta get something. I gotta find myself something.
I think they're important stocks.
And I'm okay to be impatient, right? I'm okay being patient.
Well, there's one of them right now that's actually in the green for the first time since it reported those incredible earnings. Any takeaway at all from you, Tom, in terms of NVIDIA's...
That's what happens when we come embarrassed. I wish I still felt like I felt yesterday, and maybe I should have stuck to the plan. I don't know. I gotta manage risk. I'm trying to think if there was anything wrong that I did by taking Microsoft off, but I feel like, you know, I was giving back what I put in pretty much. So I wasn't, you know, I had to take it in case it reversed on me and went even redder. I had the chance to take it off. It wasn't a good setup. There's no reason to be in it. That's why I took it off. You know, I don't know if I'm the, you know, it's because it's easy for me to look at it now and say that it's up, but if this is really going to hold, we're going to get a pullback to that previous double top, or at least a pullback into the 50-day in that 444.72 area. We're going to get a pullback in here and see if it holds, but I don't think it will.
52 cents. That's Gulf, Echo, Foxtrot, GEF.
I can't see the market going higher because we have PCE, the Fed's inflation data. We have, I mean, not even really GDP, but we get so much data this week that I don't understand how the markets don't wait to move.
Ends up underestimating the outcome and the leadership of a handful of companies. So, there's a lot of books. I actually am certain that there's going to be a lot of demand for AI. I mean, it's pretty relevant today because of labor shortages and the need to actually improve processes and actually improve judgment. So I do think there's a real future there. But you're right, there's a lot of hype. I mean, I'm not sure it should be additive to the overall stock market. There'll be winners and losers.
Yeah, we'll see. Maybe some of the presentations from a variety of
Come on.
competitors in the next few weeks, Tom, can give us
Watch Bitcoin and yields, guys, as well. That's why I had also a little bit of a bullish case. So there's the pullback in the twos. All right, let's look at Bitcoin. That's BTC USD. Bitcoin is going to be risk on, and we're not seeing it just yet. Seeing it a little bit.
And finally, a look at the race to the bottom in fintech and what PayPal has to do with it. Big show still ahead. Dow's up 120, 10-year 414.
It's a nice candle on Bitcoin. Still feels like it's got a lot of supply ahead up there. So there we go, right? The 10 years finally pulling back. These yields are finally pulling back. We can, the markets can take a breather. This is going to help the markets. This is why I wanted to be long in the markets. And I need to start writing my thoughts down to say, hey, this is what we were looking for. I said, is the dollar overextended? That was my video on Saturday. I said, is the dollar overextended? Look at that. Look at that move. Now, I'm not going to sit here and talk too soon because it's still pretty high. Right? No, no, no. So, if you guys don't know, I put out a video Saturday. And this was the video. It was about the dollar. It was about a lot of things, right? But I felt like we were going to get our pullback on the dollar this week. Let me do this. Let me do this. Where am I at here? I need to figure out how to get some more people here so we can have a community of traders. I don't know how to help people identify that we are even here. Why? No, I don't want to go. What? No.
Way more into what you're into when you stream on the Xfinity 10G network.
Heavy diet of upgrades and downgrades from the street this morning, including AT&T and Verizon. Christina Partsinevelos has them. Hey, Christina.
Hi, Carl. Well, could the tides be turning for telecom? Citi seems to think so, or at least for the larger cap ones like Verizon and AT&T, calling them both a buy. They say the wireless environment.
I thought so too.
That's helping operating margins and improved free cash flow could support those super high dividend payouts, which are at 7.8%. There's one big uncertainty, though: continued risk from lead exposure found in cabling around the country. Verizon, and that's a big part of why Verizon is trading near its lowest level in a decade, and AT&T hit its lowest level since the Switching gears, Oracle getting some love from UBS, an upgrade to buy from mutual with a price target of $140, so clearly a little bit higher than the 118 we're seeing now. Analysts did their own digging and they suggest Oracle snapped up a lot of NVIDIA graphic processing units relative to the size of the company, and that bodes well for its generative AI applications. It also helps that Oracle is a pretty good close partner with NVIDIA, and Oracle only 6% off its June high that we saw at $127.54. JP Morgan removing Salesforce from its focus list, but are sticking with an overweight rating. They cite the stock's big 60% year, not 57% year-to-date gains, among other things like the muted pace of business and sluggish sentiment. Salesforce is set to report earnings after bell. Shares are down about 1.4% right now. And last but not least, Disney getting added to Redbird Atlantic's sell list. Analysts say that even though Disney is home to some of the world's most enduring franchises, it faces too many negative catalysts, especially with the difficult transition to streaming and its impact on advertising revenues. Disney has been a laggard this year, down about 3%. David?
All right, Christina, thank you. The Biden administration announcing the first ever price negotiations on 10 prescription medicines by the Medicare Health Program. Included are drugs from Bristol Myers, Pfizer, and of course a lot of other names. What does it all mean for many of the big providers of these drugs? Christina Smolinski is
Wow. Was that our hold? I can't believe it. I can believe it, but I wasn't ready.
For having me. I would say that, look, this long-awaited list for Medicare to negotiate these drugs in 2026.
There's GSAT. I don't know what type of volume it has in here. There's a break through the high.
J&J, Bristol Myers, AstraZeneca, Merck.
I don't like this volume there.
Surprises for sure. So insulin on the list. Remember that Medicare beneficiaries have a $35 out-of-pocket cap on insulin, so it's a little bit of a head scratcher as to why that is there. It won't necessarily change the out-of-pocket for seniors. And then Stelara, J&J, that is a medicine for psoriasis. That was something that is supposed to have a biosimilar, which is essentially a copy.
Wow, guys. I can't believe this, man. I am such... I don't know. I protected my downside. That's all I can ask for, and there it is. There it is, man. Well, we got in these yesterday, Microsoft longs. Maybe it's because as I was waking up, I was listening to a goofball who said that, I don't know. I'm not even good. I need to not go that way. I need to not go that route.
So I think investors have had a little bit of a yawn or a sigh as far as this list. I think the more critical lists are going to be for.
All right, let's get this planned out here.
As you know, there are a number of
Look at ARK, guys. ARK is ripping. Ripping.
Fifth Amendment, Eighth Amendment. I think with the list
So there's your innovation,
today, it also creates some breathing room for some more law,
right? Like Roku.
potentially some
Look at Roku.
arguments.
Yeah, why in the out years or 26, 27, why is that going to be a more important list?
Unbelievable.
Well, I think because in some ways we all can look at Medicare spending.
This is insane. Hold on. This is insane.
And then 2028 more
We got long yesterday. We obviously saw something. I come in today and I feel like I'm seeing the opposite.
the oncolytics, MS,
I feel like
RA, those are the more
I feel like I just bamboozled myself.
and could have a bigger hit to
What did I do to bamboozle myself?
You mentioned some of the lawsuits
Was it what I put in my ear earlier this morning?
successful in terms of creating some sort of preliminary injunction that halts all of this. We have done a legal analysis of the 8 or so.
So we are above this area now, guys.
You know, I would say about 30% odds that a preliminary injunction halts all of this right now. The preliminary injunction would be for October 1st because now that the list is out, manufacturers only have about a month, it's around the corner where they need to now, I guess.
Look at Tesla.
Contract
They bought the dip on your ass.
CMS. So
Oh my god.
that it gets tossed right now. There are some
Wow.
summary judgments
Unbelievable. Now you're going to start getting some real
of the companies and the plaintiffs.
exuberance, guys. Irrational exuberance.
Some of the trade groups were smart in that they initiated legal legal proceedings in various district courts
continuing higher here.
because it just increases your odds that the IRA
You gotta be kidding me.
Supreme Court some days.
I went fucking long yesterday.
Likely years of legal
Yeah,
proceedings.
but to your point, perhaps resolved prior to those very important
Coming
out
up in
years
about
or
10
years
minutes, the
27,
Dallas Fed
28,
Services
for example.
revenue
But
for
Stephen, thank
August
you. Appreciate
and
it.
Texas Service
Thank you.
sector outlook for August.
That's what confused me, guys, is when what's his name on CNBC came on and said that it wasn't good news. And I'm like, no, this is actually good news. From the way I took it,
Shares of Unity, ticker U, also seeing new highs.
this is what the Fed wants to see.
36,
Jobs.
03,
There were less job openings,
ticker U.
right? Technically, job openings. 8.8 versus a 9.1. The estimate was 9.4 with a consensus forecast, or a consensus 9.4, and then forecasting 9.5. The job openings was way under. This is the labor market. This is what the Fed wants. This is what Harker said on Friday. This is what I've been trying to relate, is if you listen to the actual voting members and what it is that they want, you'll be able to say, hey, yeah, that's a good thing for the market. And that's what I said. And Rick Santelli was like, this is horrible data. This is horrible. I'd like to know his reasoning why. He's a very smart guy. I respect what he does, and I respect his opinion, and, you know, I actually look forward to hearing his opinion. That's why I turned him up. But when we got into lower job openings number, I'm like, man, watch out. This is it's pretty big. All right, this is exactly what the Fed wants. We're starting to see job openings come down.
Bitcoin futures are spiking here.
There goes Bitcoin futures. It's a risk-on type of day, guys. So, oh, man, we've already ran so much. I can't get long again now.
Bitcoin related
Unbelievable, man. We were fucking long Tesla. Fuck! Sorry. Again, I didn't know what the data was going to be. It just about, you know, it was a small loss, so I need to not even worry about it. But, oh my god. And you know what else? You know what else, guys? I want to show you guys something. I don't know how many people are here, but I want to show you guys something. You guys are going to like this, for anybody that is here. Watch this. I'm going to show you guys something. And if you guys start doing this, this is what the professionals do. Right? You start doing this. I got to remember where I did it from. I know. Look at that. We pulled back right to the 26.3 fib on that pullback. Right? But what else? What is this? What is that? What are we trying to do? We're trying to take back COVID, right? We're trying to take back COVID. That's your 50% retracement. You've retraced 50% of COVID. You've taken back that 50% that we gave back. And that was a 26%, 23.6 pullback on that. We still need to retest this, but there goes Riot. All right, watch Bitcoin related stocks, guys. Watch Coinbase, things like that. I think it was granted the coin.
So just keep that in mind. Riot, Mara, BTBT as well, all just popping up in front of me on a scanner. ARCW as well, also just popping up in front of me. Grayscale permission to convert to an ETF. Here's a couple other ones moving around here. TIBC.
Unbelievable, man. What the fuck?
ABC to market one of their.
I don't even want to look at those contracts. I know I would be get sick right now.
Right now. I'm going to get back to reading this, guys. It looks like this ETF decision for Grayscale has been approved.
Talked obviously about the capital
Obviously, great news there for anybody that's holding against Bitcoin with that huge move up. You see a nice move up there for Coinbase. Again, don't know what exactly this means for Coinbase. It's for me, it's more legitimacy maybe in the space. With Bitcoin and whatnot, but look at this pullback. I tried to short that 81 there when that news came out because we saw that top and it just turned out to be exactly the top. So if it does come back in there, we'll see about 80. So really need one short if we're lucky enough to get that. It could blow up in our face, so we will get out. 38 cents each, that's something like that. There for Coinbase, but again,
Oh,
it's
that's
not
from.
concerned about it. Just giving us this $81 level here. It looks like it's going to be good news for crypto. So again, there's Mara possibly on the not possibly. Brendan just talked about it. Some of these names on the move right now, and holy crap, this is a nice little candle right here on the 1 minute chart. This is Ethereum. So again, nice move up from Ethereum. See what's good for the universe is good for them all. That's Ethereum. Let's switch this over here and get on BTC and see what that's doing right now. I don't know, Brendan, what is it? Just
You guys have any questions or anything?
Seen a report that Grayscale has won its lawsuit against the SEC.
Oh my god, the fucking scanner. This is why you guys don't need to buy that stupid shit.
That likely the cause of that spike in Bitcoin and Bitcoin
Well, it is, dude. Are you late?
minutes ago.
There's your squawk box for I think Bitcoin has won the case. I mean, Christ, CNBC covered it before you got on it. Come on, man. And they want to charge people a shitload of money for it. Let's see if we can get a pullback on Coinbase. And let's see what this means. It's coming up to the 50-day here. You have a pretty nice setup. It's already put in a really strong candle to the upside. Let's see here. 62, 70, 73. I would be careful. I would not be going long any of it. Alright. I'm going to be focused on the SPY for right now. Because I want to see if we can hold this 50-day. I want to see if we can hold it. That's what I'm going to be watching for. Guess I was caught lacking today. What's up, man?
Not just theft, is actually less than 10 basis points worse than it was in fiscal year 2020. The retailer has done a lot when it comes to educating.
If you guys could hit that like button. If you guys are just joining us, hit that like button. Man, unreal. You guys taking everybody's. Everybody said, I see a head and shoulders. I see a head and shoulders. Look, guys, I see a head and shoulders. So, just like they saw an island reversal, they saw it the wrong way. So, for instance, this daily chart. What a joke. So I want to know what's their stance on Russia, right? By coming over here in China and working on trade agreements, we're good trade partners. Let's shake hands. But yet we're just letting Russia just take over Ukraine and kill innocent people. But yeah, we're gonna stand firm. We're standing with Ukraine. We're standing with Ukraine by tying up with the only motherfucker that buys from Russia, China. You guys gotta get them fucking dumbasses out of there, please. Especially this one. Especially her. Her own mother wasn't happy about her doing what she's doing. About getting in the politician game. They should be over in Ukraine, right? Figuring out how they're going to help rebuild Ukraine and help those go apologize to all those innocent people. At least Joe does. Joe needs to go over there because him and his son and all the other individuals that were in on that whole let's remove this person and put someone else that we like in started all this back in the day, and they need to go the fuck over there and finish it. That's what needs to happen. That's 8 years of Obama and Joe and crew. I don't understand. I really don't. I don't understand. What's the message? And why did any of the other Republicans? Because I'm neither. Listen, I don't vote. I don't vote. I don't know why they wouldn't use this type of stuff against them. They should. Right? They're making a trap for themselves by saying, you guys say one thing, right, and then you do another. You say one thing and you do another. It is crazy, isn't it? It's still going up. I know. This is why I got long Microsoft and I'm like, what am I doing? But again, this is why the data is important, because this is what the Fed wants to see. They want to see this labor market start to cool off, and if you're getting signs of the labor market cooling off, they can cut. This is when that means that, it's going to get to where they want. They're not going to have to do higher for longer. And I said it. I said if we get back up through here and hold that 50-day, you're going to see a rip like you haven't seen. And there were a couple reasons last night why I was aiming to the long side. Like, look at this. Like, not just because we're oversold and stuff. Let me see here. I don't know. I don't know where it was. I mean, I know where it was. Like, I know the longer term time frame with this, but This could still be a lower high that we got to watch for. I want to make this, I want to make the 50-day support. So I'll let the SPY do what it does. I just know it will start to close candles on a daily time frame and work its way back down to the 50-day, just like it worked its way below it and back up, below it, back up. That was the whole play on Microsoft yesterday, and it's up at 127. I don't even want to look at those contracts right now, because the Dow, here was the other reason, because the Dow also hit its 100-day moving average and ripped and bounced off of it, right? So if the Dow is finding support and the Dow is weighted on stock price, the stocks that are in the Dow, it's weighted on stock price, and they're all pulling back. This is where we want to be long, right? There's the 100-day bounce. We got the bounce on what? We got it on an increase in volume. Yesterday was a low volume day, but I don't know what I did wrong. I was just trying to manage my risk, I guess. It's the only thing I could say. I should have let the position do what it needed to do, but you don't know what the data is going to be when it comes out, so.
And so if it were to break, I would need to replace it. That eventually will happen for most consumers. And then third, innovation. There'll be things more like augmented reality.
I wonder what happened to what's his name. He doesn't show up anymore. I forget his name. But he stopped showing up. I haven't seen him around in a little while.
One other point that I would mention is Best Buy generates about a third of its profitability from its private label credit card. And what's going to probably happen over the next couple of quarters is the losses on many credit portfolios will start to rise, and that's going to impact the profitability of that book, which could mean that source of earnings for Best Buy is under some pressure.
Interesting. A third. Michael, given your view, though, I'm curious as to what your reaction is to the fact that the stock's up almost 6%, having one of the best days it's seen in a long time. What's the market seeing that you're not?
There we go. There we go.
Expectations were low heading into print, and positioning has mattered a ton in terms of short-term reactions to stock prices over the course of this retail reporting season.
There we go. Let's do this. There we go.
The puts and takes of what we're seeing across the retail space. Best Buy's doing, as I mentioned, a good job of managing through. We just think there are better opportunities in retail stocks at this point, like Ulta Beauty. Target is another one that's poised for recovery, and we like those stocks better than we do Best Buy at this point.
I've seen on the cost discipline side, I've seen some work that argues that SG&A as a percentage of sales at Best Buy actually hasn't grown that much since 2019 relative to some other players like Chewy, for example. Does that mean they are cost disciplined at the moment?
So I think you are making a good point, Carl, which is that Best Buy has had to adjust its model to the realities of its changing business. The reality is prior to the pandemic, about 20% of Best Buy sales were done.
What's up, man?
During its peak, 40%.
How you guys doing?
Online now on a steady state basis, about a third of that.
Yeah, I appreciate that, TJ. Yeah, man. You're right, and that's all it was, because like you say, this jobs data could have came out a bit different, but I was leaning bullish for a couple reasons, and I put it on for a reason, and it is what it is. I was just kind of curious if me listening to that goofball this morning changed my opinion, but I don't think so.
So you're
But I would look for a pullback into this 50-day area. You got some decent selling coming in there, and that's what I was mentioning last night on the watch list, was that let's see if these sellers are still there. Where are the sellers? Because they're still there. They're not gonna be buying too much of anything up here, at least of the indexes. Let's see what we can get out of here. That's a nice double bottom from yesterday. You still got to be able to make this area of resistance or support, right? You broke it, you got to make it support. Even the 50-day. It's a trip 1, 2, 3, 4. Look at that, 4 up and out. We know, man. I usually say that too a lot, is that you get that 4th breakout. Let me go to futures real quick, guys. Let me go to futures real quick so I can get my level for this break. Now, notice the volume on that selling is pretty much higher than other than when the data came out. Other than when that data came out, the sell side volume is where it's at. Where it's at. Got to where it's at. Right, sellers are still there. 450, 445, 80. All right, let me go to futures real quick. You're gonna want to watch time and sales and level 2 as well to really get a feel with what's going on here. There we go. So we finally made that area resistance. Nice. See if we can bounce it back up. I'm going to show you guys what I'm looking for. I want to see if we can bounce it back up and turn this area here back into resistance. It's up at like 446. Yeah, 446 area. 446. See if we try and get push back up, and we can't get through this like low 446 area. I'm gonna bring up futures real quick. Let me see here. All right, so we haven't broken the 50-day on futures.
Apple, Alphabet, Meta, Amazon, Nvidia, and Tesla make up about 20% of the total net market value held by hedge funds. Joining us now to discuss how he's
Undo. Come on. There we go.
Dressed like he's ready to see further gains in these magnificent sevens. Very cheerful.
448.
Signal to the bears that a downturn could be near. I mean, does any of that concern you at all?
And I think those are all the arguments that the bears have made. I think it just comes down to growth.
Dan Ives.
I think we'll see with Salesforce. I think
Let me see. He's been making his runs the past couple days.
fundamental performance from tech, from software, from chips could go in the second half of the year. And in my opinion, despite the Fed, despite what we see in terms of the 10-year, I think they kept power.
Is it? Yeah. It is too high now, but that's what I mean. I want to see if we can get... I want to get the pullback. I want to get short. Look at the volume. That's what I'm getting at. So you had two pieces of data that kind of helped this, which was crypto and that jobs data coming out. So you have two pieces of 4470. If this 4470 holds, watch out. If this does not break right there, if this area holds on futures, guys, watch out for more upside, and you're going to really test a 50-day right here. 447 on futures. Alright, I'm going to put up the 1 minute, because I'm going to scalp. I need to do something. I need to make some money, so I'm going to get busy.
Is probably not going to be as significant as some of the others. I think the one that I use a cable pounder is Apple, because in my opinion, going through this iPhone 15 cycle, it's massively underestimated by the street just how big this install base upgrade is going to be. And I think Cupertino continues to play chess, others play checkers.
You got Salesforce after the bell tomorrow. As we're kind of on roll for Wednesday afternoon earnings calls. But this is kind of a bellwether for enterprise demand. Any expectations on that front with regard to kind of the strength of the overall enterprise software industry?
Nice job, bro. Nice job. Pretty ballsy making that on a 5-minute candle, but you're right. You're right. I agree, buddy. It took it right back on a 5-minute candle. Took it directly back in one shot. That's a sign. All right, that's a sign of what's to come that you got sitting up there waiting. Because we have PCE. I'm not even worried about GDP numbers. Right? We can just save them. Don't even give it to us. But here's the thing on this pullback. Yes, we have an engulfing candle. But I don't think taking out one candle is enough. But look at the decrease in volume on the pullback. Notice the volume. Notice how it's getting lower. Like the sellers aren't stepping up, right? Or in other words, stepping down, right? Sellers aren't coming in and selling, at a lower price. Let's see if they let it come back up, which they should. You still have a fair amount of selling. I think you have selling. Now, look, there goes the buying, stepping right in, overtaking that selling. I was getting ready to say I think you have more selling than you do buying, but it just, it's progress, I guess. Good news is good news, bad news is bad news. We'll see. Because what'll happen is we really want to see what this does tomorrow. Because we could continue up all day, right? But do we just give it all back tomorrow? Just like we did last week. We had that huge candle to the downside, and then we took it back in 2 days. Well, it was at the 23.6 fib from this rally. Perfect pullback, This could be a longer term high or low. It's got to pull back into the 50-day. Doesn't have to do it right now either. It could do it tomorrow. It could do it later on today or this afternoon. Nice. Right, but that's where it's at, right? 1 to 3 on the upside. Exactly. And it is. It is. Because I think it's I think you just have more of it like stepping away, like the sellers aren't really piling in on it because this was the data This data we got was bullish, right? For the Fed to stop, for the Fed to start getting into cutting rates, right? They need this labor market to soften. This gave you the softening of the labor market. Plain and simple. That's it. Nothing more, nothing less.
For a limited time, get $300 off select hearing aid models. Visit JobberEnhance.com.
I think I have a pimple on my nose. I'm trying to. Let's see here. Fuck me. I'm getting frustrated because it's already 11 o'clock, guys, and I don't feel comfortable going short just yet, and I feel comfortable going long. I need some volatility. I'm not sure what I'm gonna do, cause time is almost up, right? It's 11 o'clock. Like, it's now or nothing. And the move's already been made. That move's been to the upside. Fucking frustrating day, man. And Meta was holding up pretty well. Google was strong this morning. Fuck, man. Unbelievable. It's only Tuesday. I gotta relax because it's only Tuesday, but that's frustrating. It's frustrating. I put myself in a position, but Microsoft is still, or was at least. Look at Microsoft. You gotta be kidding me. I would have already been in the money. What the fuck? So I grabbed these yesterday at just about at that 100 day. I want to see where they're at. Hopefully I don't get sick. Yeah. Guys, I got these things at 20. It was like 24 cents. Oh my god. They're at 66, man. That's over 200%. They're at 200% right now. It's crazy, right? And I was only down like 6% red. And I took it because it gave it back to me. I wasn't sure how the data was going to be. Microsoft seemed a little weak. I should have just stuck to my plan that we regain the 100-day and put my stop loss where it needs to be. Right? Put my stop loss where it needs to be and be comfortable with the loss. Right? I should have just continued to say, as long as we're above the 100-day, why am I selling it? Why? I know why I did. I know why I did. But that's crazy. That's why, yeah, right? That's so crazy, man. That's so fucking crazy. They're almost 70 cents now. I think we got them yesterday at like, what did we get them for? 24, 26? Or, I mean, 22, 24 cents? It was the low 20s. So I remember saying it yesterday, we pretty much got these contracts on the low. I think the low was like 20, and we got in at like 24, 22, maybe 26 cents. Oh, shit. Alright, so what I'm going to do is I'm just going to keep watching the SPY and see if there's any type of weakness. You can't go long and you can go short, but I would give yourself time or short it outright, because that's what I would do, because that's the only, because if you get puts on the SPY, get some time, or just make sure you're getting in when you know you're going to get some movement, because this thing could just sit here and it could just sit above this 50-day. 200%. Instead of being green, I took a loss. And my plan was to hold it. So that's what I got to get better at. I got to say, next time if I get into something, I am not selling it until that 100-day breaks. I'll be right back. I'm gonna look for some small caps. Alright, DNA. This thing has a little bit of volume with it here. Kinda, right? Not really. A little bit. A little bit. Selling's increasing, I feel like, though. So that's it. Job openings. The labor market's starting to soften. We're seeing it firsthand. That's what the Fed wants. This is the data that's going to help them get to a point of lowering rates. Ginkgo Bioworks, shares rise. Yeah. So Google Cloud. This is news off of Google Cloud. Here, Daddy, move this for you. You're my sweet girl. This thing doesn't seem to be that volatile, though, this DNA. Doesn't seem like there's a ton of volume. Yeah, held that Yeah, it is pumping. I noticed that this morning when I came on. I said, yeah. And that's what, it's what you got to do. Yeah, I said that when I came on this morning to watch Google because it was sitting up at the highs and the other ones weren't. You want something to eat? You want something different to eat? What is that? What is that? You hear it, a scanner? She's so funny. What is it? Alright, so there's Google still going, still ripping. What's Tesla doing? So last night, or listen guys, let me rephrase that. This morning at 3 o'clock this morning, I was looking at Tesla's daily chart. Getting a look at Snap. Snap's starting to go. So there's a bunch of AI talk again, I guess. Yeah. She's just been doing it lately. I don't know why. She's just been coming in. She'll just like, she's good, but then she'll just come in at she'll come in and just I'll be dead asleep and she knows it, and she'll go right up next to me and just whine right in my face. I'm like, you got food. What do you need? Like, stop doing it. Yesterday I was trying to yesterday I was waking her up and stuff. She kept trying to swat at me, and I'm like, how does it feel? Like, I'm not letting you fucking sleep all day so you can just sit there and keep me up. All right. I mean, ultimately, I gotta get some sleep so I can wake up early and come up with my game plan in the morning. This, I mean, I try and do it the night before, but can only do so much. Like, cause you know, you don't know what you're gonna wake up to. But yeah, we had news. We had Jolt's job openings. Jolt, it's a little bit more than job openings too, though. It's also, it ties in quits, people that retire, people that quit, and people that get laid off. But let me see here. Hold on. So yes, there was less job openings, which is in turn what the Fed wants to see. They want to see the labor market soften. So you're starting to see it. This was the first sign of the labor market softening. Because like I said this morning, you're not going to get a break through the 50-day. Yeah. Yeah, right. Right. Like I said this morning, I'm like, we do not break this 50-day on the first try unless there's a reason, right? Unless there's data to back it up. She's trying to get some Red Bull. There's none left. There's none left. Do you want something else to eat? Do you want me to give you something else that's fresh? She's actually my first cat that I've had. It's my little girl. She's just knocking over everything that's on my desk with her tail. Like, on purpose. And she's just smacking the shit out of the desk with her tail and just... she's knocking over water bottles. Yeah, it has it. That's good, man. Yeah. Exactly. I mean, it is crazy, but it's, you know, it's, we got the data that we were looking for. It is. Just like that, in 2-3 hours, right? It's 11 o'clock, and what the thing is see how we're sitting up here? They're just holding it. So, you could just sit here, put in a flag to climb higher. Maybe we get a gap up tomorrow. That was big news today. That's going to help. That's going to help the data. See how it's pulled the RSI back? Man, I might even want to be a sucker to get long again, but I know we're just going to sit up here. Right? Maybe I get one for the end of the week, but they're already, the premiums are already jacked up on those, so I got to get myself into some small caps or something. And what I want you guys to take notice of, though, all right? We have a couple things going on right here that you guys are going to want to look for. So look here. There's Jim Bianco on CNBC. So right here, guys, we haven't made the 50-day support. We will do that, but more importantly, look at this. You have a triple top here that we haven't made support. Look, I'm telling you guys right now, we will revisit this area from yesterday, and we will make it support. You have not made it support yet. So this is where you want to look for your pullback. It may take 2, 3, 4 days. It might take a week. You will see 443 again, I promise. I promise. We're going to see this level again. The market does it all the time. It'll just leave an area and it won't pull back. It won't break and retest that area, and it'll just go. Right? It'll just go. It doesn't have to come back and test it, but chances are this double bottom crazy ass rally, it's only a matter of a day to a week that we're going to retest it. Give it a couple days, if not a week. Maybe it takes longer, but we will retest 443. I promise. I promise. Yeah, you gotta catch. Yeah, you gotta catch TLT on the right day. Yeah, she does. She does. She does. Especially if I mess with her while she's cleaning herself. Look, she just knocked over my pen and shit after I did that. I don't know. I can read her well. Obviously, she's my cat. I've had her for some years, so I kind of can read her mindset and how she's feeling. So, yeah, TLT. So, like right now, TLT actually would be a nice long off of those yields, but it's pulling back. So that's telling me that yields are going back to the upside. That it ain't over yet. And that's what I said I was going to trade on this week was yields, right? As long as yields pull back, the dollar will pull back. The market will get that'll be less weight that the market has to worry about on its shoulders, and it can bring itself to the upside. I feel like we're overextended just a little bit. We should get something that'll bring this dollar down and bring yields down. Even if we bring it down and then rally later on, I just feel like we're overextended. There it is. It's trying to break. It'll either hold this flag that we've put in since July, or it's gonna, it might just consolidate, hit the top side of that mark that I have there, this yellow middle line. See if it bounces back and tries to reject up here around 427 to 4.25. That's so weird. Hold on. Yeah, so right up here. So TLT, let me go back on that real quick. If you get a day where the labor market continues to soften and it comes to a point the day that the Fed cuts rates at a Fed meeting, that's when you want to play TLT. They cut rates, you get long as they're cutting it, and I'm telling you, you'll get a 2-3 day rip. Right? You'll get a rip. So that's why I play TLT instead of corporate, because corporate isn't changed on a dime like TLT is, right? Like that's more government. I mean, it isn't, but it kind of is, right? Because the Fed controls the short term of the yield curve, the 2-year, pretty much. So if they were to cut rates, that'll bring yields down, which will let that ticket get higher, but. I don't know. There's a reason why I go after TLT instead of like HYG, LQD, and JNK and shit like that. There he is. I was wondering about you. You been all right, man? Oh, you're good, bro. It's all good. I just want to make sure you was all right. I haven't seen you in a while, and oh, no problem, man. Trust me, it'll come in, especially if we continue to get this jobs data and stuff. TLT is gonna be a good one to play. Good stuff, bro. Good stuff. I'm glad. I just didn't see you for a couple days, and I just wanted to make sure you was all right. That's all it is. That's all. From here on out, I'm going to be buying until something changes. I'm going to continue to be long on the dips. I don't know how else to, I mean, right now, I would just spend the rest of the lunch and stuff figuring out where it is that I'm going to be a buyer. We can probably expect a gap up tomorrow. Let me see what we have tomorrow. I know we have GDP revisions. Right here. So we have, so there's S&P Schiller Home Price Index. Yeah, but like TLT, if we were able to get them last week when I posted it, oh man, that would have been great. I forgot about it. I just forgot about TLT last week. I made it my thumbnail Sunday because I seen it, and I seen yields were like at their peak, and I'm like, man, this is the time. This is where you could get a nice chunk, at least trade it for a couple days, and you know, just stack some money away, take that risk off, collect your money, collect your profit, and then wait for that another day for that to happen again, and you just, you know, you get it on the days where it gives you that big move to the upside. Oh, absolutely. I mean, 89%, I would say, is like a B. That's probably still even a B plus where I'm at. Should be around a B plus, roughly. Because I would say what like an A plus is like from like 100 to 97 maybe, and then an A to an A minus would be like 97 to 92, 93, right? And then a B plus would be from like 93 to 88, right? 89 maybe, a B. So yeah, damn right it is. Great job, man. I haven't been to school in years. I learned from the streets. School of Hard Knocks. No, I'm just playing. I'm just playing. Is above 90. That's what I figured. It's like what, 93? I think. That's about what it is here too. Great job, though. Good job, man. As long as you're getting, like, I mean, and here's the thing. Ask yourself how many questions or and whatnot were on it. You know what I mean? Because the more that there is, all it takes is for you to get, like let's say if I have, like, 100. I give you 100 questions versus giving you 8 questions. Right? Your risk to reward is skewed there. So, I don't know. I would still consider that a decent, I would still consider that a win in my book. Let me go give her some fresh food real quick. Wow. Wow. Nice. That's awesome. Yeah, an A plus is above 90. Come on. Let me go give her some fresh food. I'll be right back. PCE quarter over quarter. But we don't have PCE until Friday. I don't understand why this is giving us. So this is the revised Q2 revised estimates.
Our brands have been able to hold this pricing and demonstrate both dollar and volume growth during this time period.
You know, obviously part of that too is that higher costs are encouraging more Americans to eat.
Personal spending core PCE index for July.
Obviously that's a boon to some of the pantry staples, but how do you square these trends with the pricing decisions of the goods you
Oh wow, really?
goods have gone up for you?
I would be itching myself too. Man, a week away. It has been a week since I've seen it. That's why I've been wondering. I was like, man, I hope he's all right.
We have been able to protect our dollar and most importantly, our brands and play in very resilient.
Give me 1 second. Give me 1 second. I'll be right back. You might, guys, we actually might be able to get another ride on TLT. That might be where our opportunity might be. Because look at this. If this 10-year, guys, watch if the 10-year rejects this this area here at 4.1. If it's able to reject it. Because what's going to happen is if this data continues to come out like this, that means the Fed's going to be able to cut. And they're going to start bringing this down. So I would watch to see you. I would not consider this a head and shoulders. I mean, you could if you take it from here to here, right? But that's, you know, just because something looks like that, like you'll know when you see a head and shoulders, right? You'll know when you see it because it'll show itself. If we cannot get back above, like, even this yellow line here, like 4.19s, like, you could start seeing some real downside on here. And if here, up here is where we want to get long TLT and look for calls for the rejection, as long as this data continues to come out that the labor market is softening and that, right? Right? Because we know inflation's coming down. Now it's just the labor market.
Where we expect people to show up in the middle of those weeks, and it's working because what happens is relationships are built.
Volume is coming in. Yeah. That's what I thought. I was thinking, that's why I was thinking, like, you know, you get that pullback, you're going to get people to go long again because we could get a pullback. But we are up 0.8% or 0.86%, right? We're almost up a full percentage point. So there is still a little more room to run, but I'm going to sit back and watch it for a minute to see if it just puts in a pennant in like a lower high. And then maybe look for a little more upside maybe. But you know, that's what this is, the data that'll send the markets higher. That's all I have to say. Let me go give her some fresh food real quick. Exactly. Really, even towards the end of the day, it'll sit up here. It's going to consolidate. Just try and locate where you think the sellers will step back in. But I don't know if you're going to get sellers to step in because they don't. What's the bear case now? Right? Inflation's coming down. The labor market's coming down. Fed's doing what they want where they can cut rates. Yeah. I mean, eventually, because I think they didn't give it any of this stuff enough time. They said it was transient. They were saying it was transitory after just a few months, and then they were saying that they need to go to like 20% in just a few months with interest rates. They don't give it enough time. All right, well, I guess. Oh my God, there it goes. It's a low volume push higher. I should have used that opportunity to buy a little bit. Man. This sucks, man. I might have to just go into a college football show now because it's just. That's it. You know, if you didn't catch it, you have to just wait for it to pull back to the 50-day moving average. And remember that 50 day is going to be pulling itself up along with it. So, so maybe I think I'm just going to go, we'll do something else. Like, I got to wait for this to pull back. Either I can go through some small caps and see if we can get them to do something, but that's it. Right, we had to be on this. We were long Microsoft yesterday. You know, you had to be long as soon as you got that data to say that the labor market softened up. You had to know that when it came in lower, that's what the market wants to see because that's what the Fed wants to see. So bad news is good news. That's where we're at. Bad news is good news. And I wouldn't consider less job openings bad news, right? The labor market's still really tight. There's still a fair amount of job openings. Just less than previously reported.
Leave running behind. The new turbocharged Volkswagen Atlas does life beautifully. Even the most fun things take preparation. So go about your summer. Be prepared.
What, turkey butt? Mara just hit a new high. It's on, just went on the scanner. Oh, come on.
Well, we had that big tricksy ruling from the D.C. court in favor of Grayscale. They're challenging the SEC decision to deny allowing them to convert to the Bitcoin trust. They're ruling in favor of Grayscale, and so we're seeing.
All right, so you're going to want to watch these Bitcoin stocks. I should have just, I almost bought Riot outright. Or it was BTBT, one of the two. There her is. What doing, baby girl? No, let me flip the page. There you go. Come on, do you want to lay down? There you go. There you go. There you go. Yeah, she usually lays here with me. She wasn't doing it for a while, so it was kind of worrying me. Man, this is crazy, guys. This is so crazy. This is actually really frustrating. Look at this candle. Look at it go. We're running and gunning for 450. We're getting ready to try and put in an 8-point type of day. I think we run out of steam at 448, so you might have $1 left. If you get long, you might have $1.
So if they all sort of move to the upside, others, names in this group, like SAP, for example, software names that open down as well, 11:30.
Why is TVIC red? Alright, so I think I might just start going over some college football. We got college football in a couple days. I think that's what I might do. Hold on, let me see here. Yeah, I think it will too. The S&Ps. I think it will too. Like I said, I'm going to look for this 4... Look, it's already up here. That's insane. Let's look for this 448 area. You have a gap fill up here. Look, remember, guys, we have a gap fill up here. You still have a huge gap fill up here, so we could be at all-time, you know, back up near all-time highs before you know it. I did not watch, I haven't seen that yet, no. I forget. No, I haven't watched it. Is it on Netflix? I'll have to watch it. I take it it's good? I take it it's pretty good? I could turn it on now, but... Yeah, I'll check it out tonight. So part of me is like wondering if like I should just buy, like I need to buy the dip. Like it's not that I'm like questioning buy the dip, but do we just continue from here? I mean, I still think we get a retest. We still have data, PCE and stuff, this week. So I just got to be patient. It's hard for me to be patient. This is just, it's really upsetting to sit here and watch this. And to know I was in calls, right? And to know I was in calls. It's brutal. Brutal. I don't know. I need to get this little girl to stop sleeping all day and wake up early instead of just coming in and having a couple minutes to decide what I'm going to do, because that ain't going to work. She's still pushing. I'm going to look for resistance at 448 on the money, guys. So this is where I'm going to be looking for resistance right here. Right there. That's my target for the S&Ps for today. Right there. Look at gold too, right? Huh? That's gold. Yeah, look at that dump on the dollar. Dollar's taking a dump. That'll help out the calls, guys. That's going to help the calls. Just watch, guys. This is where the dollar had a previous pivot area, and it broke it with a vengeance, guys. Watch out. The SPY can continue to climb. We can continue to climb, guys. I had a feeling that this dollar was a bit overdone. And it's playing out as such. What happened? Are we getting ready to break out of this range already, guys? This could be a huge 1.5% day, guys. Listen, if this 10-year pulls itself back to 4%, don't be blind to the fact that the SPY could go. You could see the SPY up a whole nother 0.5%. I'm telling you right now. But I don't feel like that's going to be the case. I feel like you could get a little bit of support here. But this was the first good sign that the labor market is starting to soften. So like I said yesterday, with that happening, if we know that the yield curve usually is uninverted during the recession, you should start to see the uninversion now. Now you should start seeing it uninvert possibly. We'll see. Was this the first sign of the labor market softening up? Nah, not yet. Just YouTube. Just here, man. think it's almost time for TLT, man. And we missed it. We had the perfect shot. This is where we called it out. Right here. Sunday night, Monday morning. Bang. I'm surprised that we're not seeing more volume. It's got volume. It's got steady buy volume. But so usually, like, if you look, like, this is the bond guys telling us, like, we should start to get data that's going to support the calls. You know, this was key. This right here, this 2-day rally was key. Kind of told us that we were going to get the data that the Fed's wanting to see, and you can look at it however you want, but I don't know what the hell any of that is. So I got to figure out what it is. Oh, that's right, because I want to see if we can catch back up to this 50 day. I was watching YouTube last night, guys. Oh my gosh. There's some of the most ridiculous shit out there. Now, I'm not, you know, I have respect for everybody and stuff like that, right? But some of the stuff I watched and just found yesterday, I just would type in random stuff and to see some of these characters, like this guy with his hair way to fuck up, like he knows what the hell he's even talking about. Because I was watching in the beginning, he's like, here, yeah, use this. And like, he's just covering stupid-ass news and just being entertaining and goofy. Buy my stock signals. He says, this is all you got to do. You buy it, and it goes up when this goes here, whatever, and then we sell it when it comes, and then we do the opposite, right? When it goes up, we sell it off. But yet when he goes into the other ones, he's like, I don't know what it's... So I told you to short. That doesn't mean I'm telling you to short right now. I don't know. It's going to go up, but then I don't know. But wait, you just said 5 minutes ago that it goes up and it goes down. So which is it? People are funny. You know what I mean? People are funny because this is not... Look at this price action. That's as bullish as he gets, guys. Oh, this is a 2-minute chart. I was like, whoa. Guys, look at that. No red candle. Look how they're tight, and it's just going. See what that? This is exactly a pattern that you need to know. Even in the morning, you're gonna get it, and it's just gonna go all day, all day. I like to take advantage of this price action. If you get it coming out of the bell at 9:30 and be long by like 9:50, be long before 10 o'clock or short. This type of price action tells you a lot. Where it's really where the open and the close is tight, they're tightly together, and it's just moving in that direction. It's an algorithm. It's an algorithm. Like computers just buying, right? They're just buying and buying and buying. And they're not. It's not selling off much, and it's just consistent, just an uptrend. Watch. We'll obviously get a little resistance up here at 448, but watch. If this thing continues, it can just go and go, and you're like, how much further can it go? And it'll just keep going. Yeah. Really, man. I mean, this. But I'm like, because it's like they're selling people a product that if you were to buy a product from some of these people, like it speaks more about the person that's buying it and what are their hopes and goals. Like the contradiction, like this is what, look, I told you guys to buy here and sell here, but when he comes up to a new one, he's like, I'm not telling you to buy it. You know, I don't know when this is going to go up, but when he looks at the past, it was really easy to sit there and say you were to go short when it goes up and go long when it goes down, because you're looking at it from the future, right? But when it comes to the present, trying to tell present price action, future price action, he can't do it. And isn't willing to lay his neck out there if his system and shit really worked. It was just funny. I'll have to show it to you guys. Because there's like the whole like his whole demeanor changes. So, and I don't know. It's just entertainment. But they make some of them make themselves just look so stupid. So stupid. I mean, I will come out and say everything that I do and what I think. You know what I mean? And I have a reason backed behind it. If it's wrong, it's wrong. I don't care, right? I care in the sense, if I'm way wrong, then I'm obviously not reading the markets, right? I'm obviously, there's obviously something I'm not seeing. Just like everybody sees a Head and Shoulders. Like, yes, you do. Everybody sees the same patterns. But to get... Because there's a clear difference between a Head and Shoulders, right? Like if I could show you guys a Head and Shoulders, like matter of fact, let's look here at TLT. All right, daily chart. I'm on the daily chart. Let me do this. I'm going to show you guys like a daily. This is the S&P daily. I'm going to show you guys a Head and Shoulders on the daily. So when you see it, you know you see it because it's clear. Like this here, that's not a Head and Shoulders. Come on. All right, there we go. It was in 2021, at the end of 2020. It was in like August, I thought. Oh, that's right. It did just put in a Head and Shoulders the other day. I don't know. There usually you'll have like a clear. You'll have the shoulders will be clear. The neckline will be clear. Like it'll just be decent. It'll be pretty good. I'm pretty sure that's where it was. Thing is, I don't think we're going to be able to see it on the daily chart. I think it was right in here. I'm almost positive it was right in here in August. Oh, fuck it, dog. I can't remember now. Damn it. Or was it 2022? I'm just really curious where it did do it at. Yeah, it had to be right in there. It had to be right in here.
GLG, TD Holdings, shares halted on a circuit breaker to the downside. It's Gulf, we have a Gulf, GLG.
Yes. Yes, I know. 4,500 is going to break 4050. Yeah, and you're looking at futures. So Google has a cloud event, guys. Watch out for that. Look at this rally. Insane. Insane. Futures is where it's at, man. Look at it. It's such a big move, it feels like.
The bar's a little higher. Investors want monetization, more product, more use cases. So Google's next event today will be a good indication of where sentiment is at. key unit that the company is investing in to reduce its dependence on search. It is also at the center of Google's generative AI efforts, which it hopes will help it catch up to the number one and number two
see
players,
here.
Amazon and Microsoft. About an hour and a half
Find
ago,
something.
Google unveiled AI tools for corporate Gmail customers at $30 a month, and that matches Microsoft's similar Copilot offering, which it announced on July 18th. Now, on that day, Microsoft's stock jumped.
Look at Tesla up 6%, guys. What the fuck? It's just funny that I get rid of my calls and this is what happens. It's so fucking hilarious. Brutal. Brutal. Oh, man. I got kicked in the nuts on this one. Should have stuck to my stop loss under the 100-day. That's not a lot of selling. There wasn't a lot of selling that I seen there. Yeah, stepping in a little bit there, but still not much. Doesn't seem like much. Like as far as there, yeah, see like now we're starting to get some orders come in there. Look, there's quite a few 2,500 share sell orders that are coming through. That wasn't there before. I'm going to figure out what it is I'm going to do, guys. I'm going to let this thing just settle up a little bit. I might go start a college football channel and do a little podcast or something there. Talk about football, the upcoming games that are coming up. So if you would like to join us, you can join us. I'm going to keep this stream up for a little bit. I'm not going anywhere just yet. But I do thank you guys for stopping by, hitting the like button, subscribing and stuff. Sorry that it was just, you know, you had to be able to take advantage of it quickly when the data came out and knew that you had to take advantage quickly. It's a little unfortunate that I was, you know, I was in the right, my head was in the right space yesterday. Got myself into some pretty good position and just, you know, it is what it is. It happens, right? It happens. So, but yeah, thank you guys for joining us again. If you just joined us now, hit the like button, subscribe. If you guys have any questions too, you know, anything you'd like to know, just ask away, whatever.
That have to go right for September to not live up to its billing of being this historically weak month, although maybe not so much when you've already had a pretty good run into in August like we've had, and economic data being good but not too good was high on the list. Now, jolts, check, right? Fed wants the labor market to cool a little bit. Confidence, check. Consumers still doing well, but let's not get off to the races any more than we already have. Is now we about to turn the calendar. How do we see this?
Could go either way. I mean, I'm data dependent. The Fed's data dependent. The markets are data dependent. And to your point, Scott, you know, September 1st, this Friday, first day of the month, what do we get? We get the labor report. Everybody's going to be paying attention to average hourly earnings, non-farm payrolls, et cetera, as the first tell for what inflation did. Not a direct reading of inflation, but the first tell of what inflation did in August and what the Fed might do in September. I still think at the end of the day, this is about inflation and the Fed. Although that story's pretty long in the tooth, it is pretty long in the tooth. But Steph made a good point about the broadening of the rally. Okay, I want and you want that broadening to continue. I think it will continue if the Fed is done. If the Fed is not done, we're still going to be doing this hand-wringing about a recession.
We're not going to know, you know, for a minute whether the Fed is done. We had just in the last week or couple weeks, you know, suggested, well, the mind of this market had changed. It became no longer a buy the dip market. It was a sell the rip market. I mean, the activity of the last week or so would suggest otherwise.
Boy, how it changes quickly.
That it's back to, to buying the dip. And by the way, HSBC today says we think this presents a pretty good tactical entry point into risk assets, above all into U.S. equities. We've seen in many respects, Josh, the correction that hasn't happened. You know, we started to get a little bit of an upset in the market, and then the conversation was, and all the notes were, all right, we are going to have a bigger correction. We could go down 10%. We're due for it, blah, blah, blah. Well, the S&P's down 2.2% in the month of August, which was so terrible. Not really.
I have to be honest with you. I think our committee absolutely nailed this summer. We were long and strong through July, one of the best months ever. And then in August, during that pullback, I can't think of anyone, any of our regulars in the cast, that said anything other than it's just a
the
little
guy
bit of
just got done saying,
combined
Josh,
with seasonality
about
August.
being data dependent.
You're talking about companies that came in, reported earnings with their stock prices up 20% from May, reported amazing earnings, sold off 5%, and people were ready to call for the next bear market. We didn't do that on this show. We don't get everything right, believe me. Especially not me, but to a person, Stephanie, Jim, I think we all said stocks are up a lot. It's okay if they retrace some of that rally on a sell the news reaction to earnings. That's all it was. We didn't get more dramatic than that, and so that's what we're living through right now. I want to say one thing here, just statistically. Try and understand this. The VIX is now sub 15. It's back at 14.5. It's down 4% on the day. The VIX is down 15% in the past week. That entire volatility spike was from the sell the news reactions in earnings. There's no other news that generated that. I'm sorry, but the Fed's speech was milquetoast. It was exactly what we thought it would be, maybe even more bland. So the VIX hit its low for the year in June. That was probably too low at 12. We had a roaring rally in July, and then we gave some of that back. And look, even look at the XLE. It's now back to being positive on the year. It's up 2% on the year. It was down 12% year to date through May. It's 24% off that level, index-wide, which means there are stocks in there that are up 20, 30%.
Well, we're going to get to that later. We're going to get to that later. Actually, Josh, hold your thought here, too, because I'm told Steve Kovac is going to join us right now for a news alert. Seems Apple has sent out an invitation. Is that the case?
That is the case, Scott.
Oh,
This is going to be
there.
the expected iPhone 15 event. September 12th is the date. Now, look, same thing that we talk about every year, Scott. New iPhones, probably some new watches. Those are going to be the key things. As far as what to expect, Apple has basically admitted they're going to do this. The biggest change to these iPhones is going to be the plug. That charger on the bottom is going to move towards USB-C. That's the kind of universal plug that Android devices use and basically every other gadget on the planet uses now. So we're going to hear a lot about chargers and plugs and things like that coming up at this event, Scott. But this is, as expected, September 12th is the date. And they usually start selling those devices a week and a half later. So probably the following Friday is when you can expect to see those new iPhones go on sale, Scott.
All right, good stuff. Steve Kovac, thank you very much. It just lets us continue this conversation about tech, guys, because, again, we're going for 6 of 7 up days on the NASDAQ. We asked the question whether tech is stabilizing. That was on the checklist. Has to, if September is going to be all right. I want to discuss the fact that, when all these stocks were going up, the knock on it was, oh, it's horrible. It's multiple expansion only. The earnings aren't living up to any of that. Well, I want to talk about where valuations have gone from the beginning of August to today versus the historical average for a lot of these stocks. Now, Apple on August 1st was 30 times. Today it's 27.5. Its 10-year average was 18. So it's well ahead of its historical average. However, if you dig deeper into these names, Microsoft today, 28.5. August 1st, it was 30. Historical average, 23. Now it gets interesting. Alphabet, 23.5 today, 23.5 on August the 1st, 23 is the 10-year average. Amazon, wow, it's really expensive. Today it's 47.5. It was 60 on August 1st. The 10-year average is 122. And on for NVIDIA and Meta. We see that here. My point is that valuations have come in, Steph, so that's one of the, now some of them may still be above their historical averages, but nonetheless, they've come down.
I'm going to figure out what it is and I'm going to do, guys.
Meta, 18.5 today.
I think that's it for the day.
August 1st,
at least till the
21.
afternoon.
The historical average is 27.5.
So I'll leave this stuff up.
I think out of the entire list, that's actually the most interesting one, right? Because it is trading
I would look for a
well
pullback
below
on
its
like
10-year
Microsoft
average
and
at
stuff in this
27.5
area
times.
right
It's traded
here.
18 times. Just a couple of
Look
weeks
for a
ago, it was at
pullback
21
into, like,
times.
326.
Only issue I have is that in the past year, it's gone from 14 times to 21 times. So you did have definitely a re-rating, but that is because it's the year of the efficiency, but also the surprise was that
like just
revenues
above
are going to start to
326.
accelerate, and they are. 11% last quarter. We can do 25, 30% in the second half of the year, or in the fourth quarter into the first quarter. The point of it being, they have a great product cycle. They don't get enough credit for AI, in my opinion, Scott. AI advertising has been real impactful. They said that all of their advertisers are using at least one AI ad. That's number one. And we're in early innings, right?
Higher.
And it's driving higher engagement,
It just
7%
broke out of
higher for Blue,
that
for
panic,
Facebook
guys.
Blue in the past quarter. And so we're just beginning for them, and I just don't think they get the credit. So I think a combination of cutting costs, OPEX, CAPEX, new product cycle, AI, the lack of appreciation, in my opinion, and then you have this multiple pulling back. I was trimming a couple of weeks ago. I'd absolutely buy it back if we see a little bit more of a pullback. Say we do get the volatility in September.
I feel like one of the stories that hasn't gotten talked about enough, Josh Brown, is Alphabet. Alphabet's up 54%.
Say it.
Okay, listen to this, okay? Alphabet's up 54% year to date. And I mention it and I go to you first because I know you want it. And Jimmy, I'm going to come to you too. So they hold this event today, Google Cloud Next, out in San Francisco. Now, NVIDIA gets all the love. Microsoft gets a lot of that love too. Now, It was on January 23rd that Microsoft announced that $10 billion investment in OpenAI. Everybody was like, oh my God, Microsoft's kicking everybody's butt in AI. Google's dropped the ball. They had DeepMind in-house. They did nothing. They lost the race to AI before everybody even got to the starting gate. Now,
that was wrong.
Listen, May 1st, the likes, Brad Gerstner came on, sold it. He said, they dropped the ball. And that really reflected where market sentiment was at that moment. The prevailing view was that Alphabet dropped the ball and everybody else had this massive head start into where AI was going to go. Well, you want to know what Alphabet and Microsoft have done since January the 23rd? Alphabet's up 38%. Microsoft is up 36.5%. The point being that the demise of Alphabet was greatly exaggerated. And I don't think it gets talked about enough.
Yo, play the tape of me saying that because... Come on. I said that for like 3 months. What are you people talking about? There is no AI without Alphabet. What are we doing here? Anyway, listen, I'm going to make this very, very simple for you. Not for you, for like the collective, the royal
collective you. The collective us.
You don't, right. No, this is, like all kidding aside, look at my face and listen to me speak, okay? So I choose my words very carefully, and I hate repeating myself. YouTube is bigger than Netflix. Do you understand that? This is a $1.7 trillion market cap, and if YouTube were standalone, you have no idea what its valuation would be. It's not standalone. It's a part of Apple. It's bigger than Netflix. It has a higher annual run rate than Netflix revenue. I'm serious. That's true. Has more users than most of the other streaming platforms combined. And if you talk to somebody who's under 30, they don't live any sort of lifestyle without YouTube being front and center. Everything else is a secondary or tertiary option for their entertainment. YouTube is about 8.5% of all TV viewing. So we talk about like who's going to buy Netflix and Disney Plus. Can they get from 100 million to 102 million subs? And who cares? YouTube is already far beyond all of those platforms. And that's just one part of the Alphabet story. So I am bullish here. I never believed this narrative that OpenAI, a not-for-profit thing that started 10 minutes ago, was all of a sudden going to beat Google search up. It didn't play out that way, and it never will. And that's why I remain long the stock. One other thing, Steph, no offense. 5-year numbers. I bet most people don't know this. You probably do. Alphabet is compounding at 16% a year for shareholders. Meta is 10. That is a
but that's because
huge
last year
disparity.
was horrific. But that was because last year the stock was
Whatever.
down 60% on the year. Come on, that's
Just saying.
ridiculous. We've now seen a
I'm just
reacceleration.
saying.
Stop. That is not that. Apples and oranges, Josh.
These are the
Sorry.
numbers.
No,
These
no,
are the numbers.
apples and oranges.
The point, though,
You want to know the 10-year number?
Hold on.
Wait.
Jim owns Alphabet, too.
I own
what a
actually.
difference 7 to 8 months makes,
Yeah.
right? From where that narrative was on that day, where Alphabet was getting crushed, both stock-wise and narrative-wise.
So let's talk about this. And first, thank you, Josh. Thank you very much. I share your enthusiasm. I'm going to dare to say anger about what was going on 6, 7, 8 months ago. I'm not only long this stock. You know, Scott, and most people know I'm underweight tech, but I'm actually overweight Google, Alphabet, versus the S&P 500. Because the multiple has been so easy to digest for so long. And that instance, I forget if it was December or January, where they stumbled out of the gate on Bard. It gave some wrong answers. Stock went down below 100. That was an opportunity to load up on the stock.
Let me reiterate.
I'm 100% with you.
23.5 times today, 23.5 times on August 1st, 23 times is the 10-year historical average for the forward PE.
It is very digestible. And to even, hang on one second, Steph, to even people like me, and I'm going to dare say Steph as well, who really pay attention to multiples, and maybe we look at 23 and say, it's a little high, not for an asset-light, cash-heavy company like Google. This isn't like, you're buying Caterpillar, which I happen to like, don't be offended, at 23 times. This is Google. This is asset-light, cash-flowing machine.
Okay, but then I don't have beef with Alphabet at all because I don't think it's all that expensive. I just happen to think that Meta is a lot more.
You got drawn into this. You don't have to take the bait.
No, but I think Meta is actually cheaper, and I think there's more upside because no one appreciates the acceleration that we're about to see in the total revenue story. The issue I was about to bring up was Apple. I don't understand
Well, they have
why.
to appreciate Meta. I mean, it's up 150% year to date.
Yeah, but it was
so
down
what was underappreciated is now seemingly caught up to itself.
I don't know about that. I mean, yeah, maybe I would agree with you. That's why I've been trimming it. But I still think that there's a story here with all these products and the AI just beginning for this company and the free cash flow and the cost cuts. I think and the valuation is pretty good, right? But I would say for Apple, I just want to switch for half a second because I know you own it.
Mm-hmm.
I don't understand why you pay 27.5 times, which is well above their historical average for like 7 to 9%
I'll give you a few reasons.
Maybe you will on September 12th.
Okay.
I mean, I'll give you a few.
This is their moment, right? The September upgrade cycle is everything.
I hope I don't need that white thingy for the charger.
Are you going to need it?
I hope they get rid of that.
But
no, yeah, but my point being, I don't mind paying 18 times for 25% revenue growth, right? Or accelerating revenue growth and operating leverage, as we talk about all the time. I don't know what you're really getting in terms. I mean, I would say double digits, obviously, for Alphabet. Okay, I get that. I get YouTube. I understand their assets. I've owned it in the past.
No, but maybe you got to pay up a little more for the most powerful installed base in the history of technology.
I don't know. I just think that's a lot. I think it's a really expensive multiple for what you're getting, and I think you can find other names at cheaper valuations.
So the other one, speaking of AI, Broadcom, which I'm coming back to you on because they report Thursday.
Yeah.
And this is the one that people say, you know, you get a lot of the bang for that you get with NVIDIA, but you get it for a cheaper buck because the valuation's not the same.
Right.
Right? Today it gets the target raised to $925 from $830 at Piper Sandler. Thursday after the bell. It's up 50% in 6 months.
I know.
You saw what happened to NVIDIA when it was up 50% in 3 months, and it reported a blowout quarter again.
Yeah.
So what does that mean?
I know, and it started the year again at 14 times forward, and it's now at 21 times, right? So it's had a nice run. The expectations are really high. I think they're going to deliver. I love the diversification that this company offers. AI, cloud, data center networking. Apple is a 20% customer, so I like the diversification. It's not a pure play AI like the NVIDIA story. So I get why NVIDIA trades at a higher multiple, but I think this is really growth at a reasonable price. They've got $18 billion in free cash flow, $9 billion buyback left on the docket. They're probably going to raise their dividend next quarter, which they typically do. And AI networking is going to go from 10% last year of total revenues to maybe 25% next year. That's real growth, in my opinion. And that's why I say 21 multiple for that kind of growth I can live with.
Jimmy, you just bought NVIDIA. Why'd you choose NVIDIA over Broadcom, right?
Well, look, NVIDIA is in a class by itself, I feel. Broadcom's a fabulous stock. I'm not taking anything away from it, but I feel like as far as AI goes, there's something special about NVIDIA. Look, you took the numbers that they're putting up, the billions of dollars of revenues that they're beating on a consistent basis leads me to believe that that's going to continue to happen.
I got you, but you're a valuation-sensitive person.
Which is why, and this is a great point. I mean, this is a great point for the viewers to know. I have heartburn buying this stock. I do. Now, frankly, it's up from where I bought it, so I'm happy. But what I'm doing, and I've said this all along, I bought a 1% position of a stock that's likely to be 4 or 5% a year from now in my portfolio. My hope is that there's going to be some moments like last week where I can add to it, but there is no way to expect that this stock is going to trade at, mid-teens or even mid-20s multiples anytime soon. Not unless something goes dramatically wrong fundamentally, operationally at the company, which there is no sign of. There's no whiff, no hint of it. They simply can't produce enough of the chips to meet demand, which means they're going to control price. And that seems like it's going to go on for a long time. So it's a money machine right now.
Hit Salesforce for me, too. They report tomorrow after the bell. Speaking of stocks that have done a lot, multiples a little higher. It's up 60% year to date. It's trading
have sold it.
28, 29 forward.
I shouldn't have sold it.
That.
I did sell it. And here's what you do with it now. Look, I'm not inclined to get back into it. I've got a portfolio of other things that I like really well. We're going to talk about one of them later on, so I'm not going to tease that now. But with Salesforce, 28 times forward, actually this year's earnings, which ends in January. That's a pretty forgiving multiple. It's hard to see them doing something so terrible on their earnings that the stock goes down meaningfully. The question is, will the revenue growth rate support future price hikes from here? Price rises in the share price? We're just going to have to wait and see. The one thing that concerns me about me is who at a major enterprise level does not use Salesforce already?
Wait, the one thing that concerns you about you
No,
That's
about
what you just said.
Salesforce. No, seriously, like if you're the...
You did just
if you're-
say that, though. It was a Freudian slip. I get it. It's okay.
Got a lot of thoughts in my mind.
The one thing that concerns me about me.
Did I say that?
You did. You did.
And you're going to let me off that easily?
No,
okay,
I'm not. That's why I brought it up to underscore it.
We're going to move on.
Underscoring it.
If you're a big company, Scott, and you're the CTO of a big company, and you don't have Salesforce in your IT lineup, what are you thinking? Meaning, most companies already have Salesforce, so the growth is questionable.
Which is why total revenues are only going to grow up about 10.9% in the quarter.
That would be disappointing.
Okay, let's do this. Let's squeeze a break in because we have a number of moves to get to in our next block. Josh has sold a name that he's talked about a number of times. Stephanie's sold one, trimmed one, bought more of a couple things. We'll do it next. All right, we're working on a good day there. Stocks Dow's up 231. I mentioned we have a number of committee moves to get to. Josh Brown, Dutch Bros, no more. Why'd you sell it?
I was wrong on the stock. I've been wrong for a while. They just fired the CEO, who I think was like the guy that got them to be able to go public, but has really failed in his, 7 or 8 quarters talking to Wall Street. They have had good results, but the stock price just never worked. So they got rid of him. They brought in someone who is the president, is now going to be the CEO, and she comes from Starbucks. And I'm sure she'll find a way to better communicate with the street, but they've just been terrible at it, and I don't want to wait anymore. I had some opportunities to buy some other things that I like better. I added to NextEra, NEE, under 70, which I think is a steal. I also added to Toast, which I think over the next couple of years could conceivably double or more if they execute. And I just like those opportunities better than waiting for Dutch Bros to get its act together. So it was not a difficult trade for me to make.
Yeah. It's funny, Josh referenced Starbucks. You sold it.
Yeah.
How long you owned it for?
2 years.
Why'd you sell it now?
Well, I took gains. It's up. I was up 57%. I was up 57%, and I still like the story. I'm a little worried about their pricing power and the price points and how high it is. Even as inflation comes down and consumer hangs in, I just don't know if they're going to get the pricing that I initially expected. But I still very strongly believe in the China rebound and the opportunity for the company. And so, if the stock were to pull back, Scott, I would absolutely buy back. I'm actually considering taking that money and buying more Nike because Nike has been miserable, and I think it's a better value.
Yes, it had that historic
relative.
losing streak.
Yeah, and that's what I think that there's a better opportunity, right? So Starbucks is perfectly fine. If you have a long-term time horizon, you hold on to it. I needed the cash because I wanted to buy other things. You know, I have a new position in CDW, and a little bit of that thought is they have 30% exposure to PCs, and I think PCs are bottoming, especially if you listen to AMD last quarter and you listen to Intel. Both saw sequential increases. Best Buy said something to that effect, that PCs are bottoming today. So I like that story a lot. And then Lamb. I mean, you know, I've sold Lamb. It's down 7% in the past month, and I still think it's a great story. The earnings power is substantial. Margins are going higher. Market share gains are substantial. And I think, you know, the WFE spend, we're in the bottoming process. I don't know if we're bottoming this quarter or next, but I wanted to have a bigger position. By the way, I did trim Ingersoll Rand just because it's had such a nice run. I'm still 400 basis points overweight.
Okay, so you bought more Lamb, bought more CDW, trimmed IR, Ingersoll Rand, but I want to get back to Starbucks for a moment. When you say you still love the story, what's there to love about a stock that's done absolutely nothing year to date and is 14.5% from its 52-week high?
No, I mean,
and there's worries about China. What's there to love?
I think there are worries about China, and I don't buy it because I think to have 46% comps last quarter in China is amazing.
Well, why has the stock done nothing?
Because I think people are nervous overall about China and that it's not sustainable. That's number one. And that number two, I think people are also nervous about the price points. But this company has size and scale, great balance sheet, good management team. We have a new CEO, has to prove himself for sure, although at Reckitt he was very good. But I think that it's not cheap. At 28 times forward, it got as high as 32 times. So, I mean, it's just not done anything. After 2 years, though, it has had a very nice run from the lows. In 2020, it's up 72%. So it's had a nice run. I just think maybe it takes a breather for a little bit longer, and we'll see if it continues to do nothing or pull back, then maybe I'll buy back.
Farmer Jim?
Steph, I'm with you on this, on both names. Now, I'm being a little bit price sensitive here on Nike. If I get this 10% lower, I am in big. Historically,
you're waiting for
times
you're waiting for 10% lower than Nike just had a historic losing streak, like 12 days.
Follow me on
You're
this.
waiting for it another 10%?
Yeah, I think that's wise to do. I mean, historically, that's where I've made good money, is buying this stock in the low to mid 20s. And that would be a 24 times forward multiple. But Steph's making a great point here, okay, because Starbucks, a little different hair on this dog. I'm not even going to call it a dog. But if it comes down another 10%, guess where it is? It's at that same 24-ish time multiple, 24, 25 times multiple. So if,
well, I mean, Jim, if every stock in the market comes down another 10%, the multiples get cheaper. You know.
Wait, Scott, I mean, there is a little bit, you're missing my point, so I'll try to make it clear. These are similar stocks. They're similar stocks.
They are.
Okay? If your disapprobation about my waiting, I like that word, about my waiting on Nike is correct, maybe I'll get it with Starbucks. I'll be fine.
Josh Brown, do you have a take on these, including Nike? I'd love to hear your perspective if you have one.
Nike's probably a 52-week low coming very soon. This is not a convincing enough bounce for me to get interested in terms of price action. And, you know, like buying it on the valuation really doesn't tell you about what the next 30 to 60 days will do. So if you're a trader, there's nothing here to do. And if you're an investor, you probably would ignore any signal coming from price. And you're probably buying it, you know, based on a valuation that just like makes sense to you in your own head. But I don't understand the setup. Actually, it has more in common with Disney than you think, and that's not meant in a good way. Starbucks, you know, again, if you're a trader, this is not. There are a lot of stocks making 52-week highs. This is just not on your radar.
Hang on a second. Hang on a second. You made a reference to Disney, which has been a terrible stock. Why do you make the equation there between the two?
They have the same type of shareholder. These are like classic blue chip Dow component, growth at a reasonable price, highly visible consumer brands. They're global businesses. They're great businesses. They're just not always great stocks. So Starbucks, Nike, Disney. These
Disney
are
has,
the same people are the owners of these stocks.
Disney has huge competition. Starbucks has no competition.
I agree.
So it's not.
I agree.
It's not.
Well, that's not true. It's not.
Disney has underperformed because they have a lot of problems in a lot of their businesses, and you haven't made money in this stock in forever. At least in Starbucks, you actually have. They have size and they have scale. They have huge opportunities for growth around the world. And so in one area in particular, as we talk about all the time, in China, that's been problematic. But eventually that consumer is going to, we're seeing the reopen. We're seeing it in Macau. Jim knows that. He sees that. I'm seeing it even in Estee Lauder, which has been horrible. But a lot of companies on the consumer side, and they're facing China, they're actually starting to see a recovery. And that's one of the reasons why I think Starbucks hasn't done that well. Disney, totally different animal. I mean, you know, streaming is really hard. They have to fix that, and they have to spend a lot of money. At the same time, they're cost cutting, and they're cost cutting on content. So look, I owned Disney, and I sold it. Thankfully, I made a little bit of money, and now I'm not involved. But I have no interest in getting back into that one. Whereas in Starbucks, should we see a pullback further, then I might get back in.
Josh, real quick, and then I'm going to take a break.
I don't disagree with what she's saying, and if I had to rank these three, like which one would I most prefer to buy the dip on, it would definitely be Starbucks. I've owned the stock before. I've traded it multiple times. I think it's great. I don't agree that they have no competition. I think where I would say to Stephanie is everyone has competition. Starbucks is just doing really well versus its competitors, and Disney right now is not.
All right, the headlines from Silvana Henao. Hi, Silvana.
Hey, Scott. The National Hurricane Center has updated its forecast on the potential storm surge from Hurricane Idalia as it approaches Florida's Big Bend region. It is now warning of catastrophic storm surge inundation of 10 to 15 feet above ground level in that area. Governor DeSantis has mobilized the National Guard, and President Biden has approved a disaster declaration. One of the congressional committees investigating fraud during the pandemic is demanding the Justice Department turn over materials that detail COVID relief money stolen by international criminal groups. The GOP-controlled House Select Subcommittee on the Coronavirus Pandemic made the request in a letter obtained exclusively by NBC News. The Labor Department's latest estimate of total fraud during the first 18 months of the pandemic, $47 billion. And the Kremlin says Russian President Vladimir Putin would not attend the funeral for Yevgeny Prigozhin. Allies of the Wagner chief posted a note on social media in the last hour saying a farewell ceremony has taken place. Scott?
Appreciate that, Silvana. And now up next, the Bitcoin breakout, the big headline today that has the entire crypto complex rallying. The details are next.
Eastern.
We're back and we're following new developments in the crypto world today as a U.S. federal court paves the way for the first ever Bitcoin ETF. Bob Pisani here at Post 9 with the details. It only makes sense that you do this as the host of ETF Edge. I mean, you know more about this space than anybody.
Well, it's an exciting development, and this may be a really big development here. So we had a D.C. court rule in favor of Grayscale in challenging the SEC decision to deny allowing them to convert their Bitcoin trust to an ETF. This was a big court case. The D.C. court agreed with Grayscale, and they said the Bitcoin exchange traded product is materially similar to the Bitcoin futures exchange products that the SEC had already approved. The court said, I'm quoting here from the court case, the denial of Grayscale's proposal was arbitrary and capricious because the commission failed to explain its different treatment of similar products. The court concluded that the NYSE Arca had presented substantial evidence that Grayscale is similar across the relevant regulatory factors to Bitcoin futures ETPs. The commission failed to adequately explain why it approved the listing of two Bitcoin futures but not Grayscale's proposed Bitcoin ETP. In the absence of a coherent explanation, this unlike regulatory treatment of like products is unlawful. That's a pretty harsh condemnation here. So where does this leave a spot Bitcoin ETF? Well, it certainly puts pressure on the SEC. Now, recall that ARC's application for a spot Bitcoin ETF was published in the Federal Register on May 15th. Now, they've got a maximum time of 240 days, the SEC, to approve or deny the application. That would put maximum time January 10, 2024. There's other applications in from BlackRock, Van Eck, Invesco, and others. So what's next? It doesn't necessarily mean we will get approval of a spot Bitcoin ETF soon. The SEC could appeal. That's potential. And there are potential other issues around custody, for example. My sense is I've read this pretty carefully.
I'm sure you have.
It's pretty harsh. And so, yes, they could appeal. My sense is it's so harsh that they'd have to come back with some pretty strong arguments, and they may decide simply not to appeal at this point.
Well, I mean,
they could put it away for up until January potentially, but an appeal becomes less likely because it's so harsh.
If it gets approved, I mean, theoretically, it just opens the floodgates for these products.
Yes.
From anybody and everybody who is in that business.
Yes, and there are 7 or 8 that are out there. I'll tell you what happened here. They got caught up in their own logic. They were under pressure to approve a Bitcoin ETF. They didn't want to because the concerns about manipulation on these Bitcoin exchanges, legitimate concern. So they said, okay, we're not doing that, but we're going to approve a Bitcoin futures ETF. And the court saw through that. The court said, these are like products. You approve one and didn't approve the other. You can't hide behind the idea that this is a regulated product because it's a futures product. The court saw through that, and that was the logic trap. The tragedy is it doesn't make these concerns about manipulation on the exchanges go away. Those issues are still there. The court just said, you're precluded. You already approved the futures one.
Let's get Josh. What's your take here? I know you have one because you've talked about this in the past.
I would say the most interesting immediate reaction to this is the rally in Coinbase. For me, that 15% rally, I think it was up as much as 17% today, is very counterintuitive because if you introduce a retail-friendly product that can be held in normal brokerage accounts in a wrapper that every retail investor knows how to use, like a Bitcoin spot ETF, especially if you end up with 7 of them, including something from Fidelity, something from BlackRock, Van Eck will do one, etc. If that happens, what does anyone honestly need to use Coinbase for if they're primarily doing Bitcoin and ETH, which is basically the whole market cap of crypto right now? So that stock rallying is strange unless it's short covering because people think it means the SEC is running out of steam and momentum and will maybe be curtailed from bringing more suits. I'm not a lawyer, so I have no opinion on that, but my best guess is volumes for Coinbase quarter over quarter, I think are like 50 billion to 20 billion. I don't think that gets better with the introduction of 7 new Bitcoin ETFs. I think it actually gets worse. So that's an interesting counterintuitive move to just bring out here.
Jimmy, what's your take?
I think Bob pointed out one of the big things that this doesn't solve is the manipulation. It doesn't solve some other issues as well. The fact that it's used often in ransomware. The fact that there is actually an infinite supply of cryptocurrencies out there. I mean, this is still not something I would invest in. All this does is make speculation easier. Now, speculation.
You wouldn't invest any of your client assets into Bitcoin ETFs if they were?
Absolutely not. Absolutely not. And here's why. It is speculative. Now, speculation is not a bad word, okay? People make money speculating, but my clients come to me having already made their money through hard-earned work. They want me to invest in something that they and I know and understand. I can't tell you which way Bitcoin or any of these cryptocurrencies is going to move. I can tell you there's an infinite supply of cryptocurrencies. So you didn't list all the, I mean, I know you know them, Bob, but you didn't list all the risks that this doesn't solve.
Yeah, last point. Look, most of us are neutral on the question of Bitcoin and the price of Bitcoin, although blockchain is a very exciting technology.
Of course.
I am a big believer in blockchain. I know you are, Stephanie, as well. Decentralized finance, smart contracts, brilliant uses. This is an offshoot of course, the blockchain, and I think there are some legitimate issues about whether there's a really strong use case that can be made for it. But I believe very strongly in that technology.
All right, good stuff, Bob. Thank you. Okay, that's Bob Pisani. Up next, Mike Santoli. He'll be here for his midday word, just a couple minutes away.
Go to FabLetters.com.
Welcome back. Senior markets commentator Mike Santoli here with us. It's no longer a buy the dip market.
Yeah, I had to go back to that, right? That was just a couple of weeks ago.
Yeah.
Goldman's Flow folks saying that. Look, they were talking about some of the intraday mechanics and the zero-day options. It seemed like the dealers were going to be more postured toward pushing the market lower into supply. Whatever the takeaway was, clearly not enough changed below the surface. In other words, earnings estimates have continued to inch higher in the last few weeks. Yields, yep, they got scary for a little while.
Yep.
Threatened to break out. Maybe they still will, but for now, they're still in the range that we've seen in the last several months.
If not fall, I mean, look at today, right?
Yeah.
Yields down, the data, jolts and confidence. It's part of the important story that needs to be told this week with the other data.
Has made a reappearance to a degree. Nothing in the JOLTS data, of course, is inconsistent with, you know what, this economy is going to decelerate fast and the job market's going to stall, but we're just not there yet. So, you know, you can kind of frame it however you like, but for now, it takes the edge off the runaway yield story. We didn't really have to reprice the Fed path very much after Powell, so that's something you could at least say, all right, maybe a bullet dodged at that moment. So, again, still not a cheap market. We got above the 50-day average in the S&P. It now looks like we broke that downtrend that was in place since the peak in late July, and see where it goes from there.
Want to address tech real quick? I mean, NASDAQ's an outperformer yet again, and it's been a nice comeback after, you know, the sky's falling in tech. Well, I don't know, not so much.
It was the outperformer on the way up. It had a little bit of a sharper reset lower, a real proper correction in a lot of the biggest stocks. So we'll see if, again, if that was enough. Watching NVIDIA for sure, up a few percent today. Still, you know, looking up at that intraday high that it put in the reflex after the results, above 500. So we'll see.
Good stuff. I'll see you on closing bell. Okay. All right, Mike Santoli. Coming up, it's in a league of its own. That is what one firm is calling this sector. We're going to tell you about the only group in the green over the last month. Stephanie making a move there as well. We'll get specific next. Welcome back. Energy, the only sector in the green this month. All right, Steph, you bought more of a Dow component. Yeah?
Yeah.
Chevron.
Chevron.
Tell me why.
Yeah, the stock has acted poorly relative to the rest of the group, right? It's down 12%. It trades at 12 times earnings. You get a 3.8 yield. I've always liked it. I like their diversified revenue mix, right? Upstream, downstream chemicals. Nat gas is 25% of their mix, which I don't think gets enough attention on. They have a $3 billion buyback, 7% net debt. I like it. I think it's going to play catch up if energy continues to go. I still think energy is going to continue to go.
You know, Josh, I recall you saying that you thought energy was poised for a move higher. Strategas points out they call it in a league of its own. Most stocks above the 50 and 200-day moving averages. For a market that has seen momentum erode all summer, the energy sector remains the noted exception in our work, impressively sporting 100% of constituents above the 50-day moving average and over 90% above the 200-day.
Yeah. Listen, these stocks did not budge in August. Most of them were going up in a time where a lot of other stocks were correcting that had outperformed them. But gas prices at the pump just experienced their fourth largest increase during the summer season since 2004. So there's some notable action here, not just in crude and natural gas, but in some of the related products. So I like this group. I think they're under-owned once again. They had an amazing year in 2022. The earnings then caught up to the stock prices. Now they've consolidated for 7-8 months. I think they can be bought. I own IEO, which is an index ETF, owning all of the domestic producers. And then I added a little bit of RIG as like a speculative play, and mostly because Jimmy's so handsome and he talked me into it.
Yeah, Jimmy owns RIG as well. Cheniere and ExxonMobil.
I'm a big believer in the energy space. Scott, Josh, you're handsome too. Thank you, my friend. I think there's a ton of fundamental reasons to be long energy here. Natural gas is way too low for what is still going to be a supply shortage in Europe this winter. We have to fill the strategic petroleum reserve. And what happens if China does break out of its malaise? Demand is going to go up. Supply is constrained, not only overseas, but here in the U.S. I mean, it's harder and harder to get shale oil out. So I love a really more high beta play like Transocean. I think that's a great way to get the best bang for your buck. ExxonMobil, Chevron, Texaco, I look at them as twins. They're great here. Roughly 10 times earnings, 3% dividend yield. Why wouldn't you own them? Last thing on this, if you look at the XLE, all it's done this year is consolidate the 2 years worth of gains before that. That's a setup for another leg higher.
Okay. Quick thought on that?
Yeah, no, I totally agree. I'm 10% overweight my benchmark in my portfolio in energy. I have a big weighting in SLB, Schlumberger, as you very well know. That's my biggest position, but Chevron's catching up. And Diamondback Energy, also very cheap at 9 times forward estimates, cutting cost and really good assets. So I think there's plenty you can choose from.
Okay, we will step away for a couple. We'll come back. We'll do final trades on the other side.
.com. Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
Closing bell, 3 o'clock Eastern. Well, it's setting up to be a really interesting market day. We'll walk you right up to the end of it. See where we close today. Cameron Dawson, Malcolm Etheridge, Low Tony's going to talk to us about tech, and Kevin Simpson. He's always got some trades going on. So we'll reveal the latest ones, 3 o'clock Eastern time. I hope all of you will join me. Josh Brown, final trade, you're first.
Staying long Alphabet, Playboy.
All right. Bookending our show with GOOGL, Farmer Jim.
In honor of my playa, Josh, there, we're going to go with Transocean. Forget the downturn over the last month. It's absolutely meaningless. What you're looking for here is those idle rigs to be put on contract. They're going to be put on contract at high day rates. Just wait, and then the stock will rise.
That was horrible. Don't do that ever again.
You're right. I know. That was
not everything works.
No,
seriously.
No, that definitely did not.
Don't do that again.
Got it. Box checked.
Stephanie Link.
Alamco, it's trading at 14 times earnings. It's down 3% in the year. You know I'm a big fan of animal health, growing at 10% CAGR, $59 billion industry. They have a great pipeline. This is a spin from Eli Lilly from 2018 that went bust. It was done at $24 a share. The stock's at about 12. So I like the valuation and the story, and so I'll be buying it.
All right, good stuff. See you all in closing bell. The exchange is now.
I'm John Fort in for Kelly Evans, and here's what's ahead. Consumer confidence might have dropped this month, but our market guest isn't worried. She is betting on a strong consumer and a strong economy, and on a group of stocks she says is positioned for gains because of that. She's going to join us with her picks. Plus, the first list is out. 10 drugs targeted for Medicare price negotiations. Former FDA Commissioner Dr. Scott Gottlieb says there will be a lot of unintended consequences to this. He joins us ahead as we look at the potential impact on companies, patients,
and investors. And on the heels of the latest Case-Shiller housing report, Robert Shiller himself is here with the findings and what clues they may offer about where home prices are going to go from here. But we begin with today's market. Bob Pisani at the New York Stock Exchange. Bob.
And John, what we care about these days, of course, is inflation and the jobs issues. And we got an important data point today. We had a weaker than expected JOLTS report for the month. Now, what this implies is the soft landing. It's supportive of the soft landing. Job growth, job availability slows down a little bit. That's a key component of the soft landing thesis, and the market responded very quickly to that. The S&P is in a little bit of an upswing in the last few days. We were, 43.69 just a week or so ago, and look at us now, 44.85. A big rally there. The S&P 500 is above its 50-day moving average again for the first time since the middle of August, and that's true of the Dow and the Nasdaq Composite. They both are also above their 50-day moving average. The Dow's being led up by a variety of stocks. Goldman Sachs is leading, Apple, Nike, Caterpillar. Only laggard out there is really consumer staples like Coca-Cola and Procter & Gamble lagging as well. Nasdaq's been strong. We have Tesla up about 6%. Take a look at some of the big cap tech stocks as well. Nice rally. Most tech opened flat to down, but NVIDIA's moving quickly. Intel's up. Microsoft is up. Amazon is on the upside. And again, big day once we got that JOLTS report at 10 o'clock. Another sector that's moving today is most of the regional banks, not some of the money center banks, but Comerica, PNC Financial, Zions, all moving on the upside. Finally, we had a big piece of news in the middle of the day, a D.C. court ruling in favor of Grayscale, challenging that SEC decision to deny them the right to convert their Bitcoin trust to an ETF. That's a big, big push for the potential for a Bitcoin ETF, not happening immediately, but a big ruling in favor of the direction of approving a Bitcoin ETF. You can see Grayscale Bitcoin Trust, which trades over the counter, by the way, up 17%, and some of the other sectors, crypto stocks, Marathon, Riot, and Coinbase, all up in the mid-teens. John, back to you.
All right, Bob Pisani, thank you. Now my next guest says the market will continue to improve as recession fears recede. This will be good news for economically sensitive stocks, including tech. Joining me now is Marky Patel, Senior Portfolio Manager for Multi-Asset Solutions at Allspring Global Investments. Marky, risk appears to be on this morning. I mean, Coinbase is up, C3 AI is up 6%, NVIDIA. You say that perhaps the concerns about rates and the markets have been overdone?
Yes, I think so. People have been really hoping for a recession because historically you would expect with such a big increase in short rates we'd be on the brink of one. But the economy keeps on chugging along. First and second quarter earnings were great. Third quarter looks pretty good. And you can see these economically sensitive sectors are moving. So clearly the market does not think we're on the brink of a recession. So that's really what's lifting those parts of the market.
How much more of a lift are we going to get, though? Because we got PCE coming up, and then we got the jobs report, where I think wage data is going to be particularly in focus. And, we've got United Auto Workers perhaps about to strike. So even if it looks like wages are under control for now, maybe not for long.
Well, I think those are all rather small factors influencing the market, but basically the economy's good. There's no sector that's really out of balance. And really, we've seen over the last year, the economy, consumers and business is rather insensitive to these huge increases in short-term rates. The banks, yes, they had a little scuffle there, but the other parts of the economy really aren't bothered by these higher rates. They're benefiting from higher savings rates. And so I don't think a small change in labor rates, something like that, is going to change. Plus, really, when unemployment is at 3.5%, it's really hard to get very negative about what's going to happen to wages. I think they'll be very firm and continue to move up modestly.
Okay, let's get more granular so people can look at their portfolios. In this environment, you like semiconductors. How do you slice that? Because, I mean, NVIDIA, it's kind of almost living in a world all its own. Maybe you can put AMD in there as well, a couple others. But what do you like about semiconductors?
Well, I've liked them for a long time because they have one of the best growing characteristics of any part of the economy, and they'll continue to benefit and maybe even accelerate with artificial intelligence, with continued move of data to the cloud. So we think they will continue to be one of the best performing parts of the market. And even though it's true, a lot of the semis, they've been extremely volatile stocks. Many of them are up tremendously so far this year. But just because they're up isn't a reason to ditch them and not like them. We think they still have room to move up because their earnings are going to move up.
You also like industrials and some of the diagnostics within healthcare. Why is that?
Well, the industrials, because we think that having been a sector that's been sluggish for really decades, having share taken away, the U.S. industrial base has turned the corner. Our industrial companies are very competitive. We've seen the move for nearshoring and reshoring, so we think companies are going to increase capital expenditures. That will help the industrial companies as they continue to be part of this trend. And particularly with the strong economy, we think that the industrial outlook for those that have high intellectual property, high technological component will do very well. In the healthcare space, we like the tools and diagnostics, but honestly, looking at the healthcare space, lots of value there, but we really don't think we're going to see big moves in that sector because they have government regulation, problems with generics, problems with doing acquisitions, and a few bankruptcies. So we think they're great value, but you really have to wait. We don't think they're going to be the performers this year.
Okay, we're going to talk about some of that choppiness a little later on in the show. Margie Patel, thanks for kicking that off for us from Allspring Global Investments. And for more investment ideas, be sure to tune into a special back-to-school edition of Mad Money with Jim Cramer. That is tonight. The series continues all week long at 6 p.m. Eastern. Now, consumers pulled back more than expected in August on inflation concerns, but my next guest says there's one trend she's watching that suggests the consumer remains resilient and savvy. Joining me now is Katie Thomas, lead at the Kearney Consumer Institute. Katie, what's that trend that you're seeing?
Well, we're just seeing consumers really embrace the optionality they have. So while the consumer picture is certainly a complex one across the board, from increased inflation to increased wages and trying to make sense of it all, the consumer is exploring their options and they're ultimately still spending. They've really figured out where they want to spend, where they want to save, and how to make that work across the entire wallet, which is why we've seen retail sales continue to do well. Some thoughtfulness maybe around where they'll spend in groceries so that they can buy a Taylor Swift ticket or even just buy the pumpkin spice latte for the first time this year.
But we've seen a lot of noise in these numbers. Best Buy, for example, this morning, appliances not doing well, smartphones not doing well. It was really Best Buy's attention to costs that have allowed the stock to be rallying today on their profitability. And that seems to be a bit of a trend. Retailers, paying more attention to the bottom line, not having loose return policies, being very strict about who gets to watch your Netflix subscription, right?
Yes, absolutely. So one thing we are seeing is a lot of, whether it's, yes, strictness with subscription offerings from Netflix, Costco, some other retailers, to tighter return policies. And that's where it's going to be an interesting interplay for consumers and where they actually choose to spend. So if you're a retailer that's tightened up your return policy for relatively obvious reasons, trying to reshape behaviors from ordering a lot and returning a lot, could still be very alienating to a core consumer base that is used to those kind of practices and those kinds of behaviors. So that's a great example of something that I would keep an eye on as you think about which retailers and which manufacturers may do well.
Now, you say over half the consumers that you recently surveyed think their financial situation will get better moving forward. Square that for me with what we heard from Macy's and some others about the impact of higher interest rates on credit usage and the restricted availability of credit to a lot of consumers who are going to have to start paying student loans again before too long.
Yeah, absolutely. Well, I think that's where you just start to see the complexity of the picture and who exactly is impacted by what. So while, of course, we saw 50% of consumers are optimistic, we also did talk to them about how impacted they are by interest rates, and only about a third of them said they felt like they were directly impacted. So it's always about kind of sectioning out these different consumers' subsets and how they might be impacted.
So is your sense, are those people who don't need to buy a house anytime soon, maybe who are sitting on a mortgage in the sub 4% range and who don't have overextended credit?
Yes, exactly. So you do see a set of consumers, when we talked to them about how financially stable they felt, a lot of consumers across income segments said they felt financially stable right now, which means there are many people that actually do know how to live within their means. And that's what they're doing at times like this. And they're really focused on what they deem to be necessities, and they're purchasing those items instead of, purchasing things that are more discretionary.
Yeah, at the individual level, it makes a lot of sense to save, but then at the macro level, we want the consumer to keep spending, which is always tough. Real quick, you say consumers aren't trading down, they're trading off. What's the difference?
Well, so I think we use this blanket term oftentimes, trading down. It usually insinuates that they're going to a cheaper product. But a lot of times when we talk to consumers directly, they tell us it's really about that price value equation and where they feel like they're getting the best bang for their buck. It's not simply trading down to a cheaper item. If it does not deliver, they will go back to what they were buying before. So it's really about thinking about that entire equation and how they're spending across the wallet. 70% of consumers will save in one category to spend in another. So it's not a simple linear equation of every product, every category, consumers just looking at the next option down.
Yeah. They're still going to see Beyonce. They're still getting those tickets. They're not,
right? Barbie, you name it.
Yeah, they're still, all right. Katie Thomas, thank you. Coming up, pricing pressures front and center with the first 10 drugs on deck for Medicare negotiations, which aren't really negotiations. Well, we got the list, the trade, and the cost for caregivers next. Plus, home prices keep climbing with the latest Case-Shiller index now only 2 basis points away from last summer's all-time high. But could the Fed put an end to those housing gains? We will ask the index's co-founder, Professor Robert Shiller. And the exchange is back right after this.
This is The Exchange on CNBC.
Aid prices.
Welcome back. The Biden administration releasing the list of the first 10 prescription drugs it will target for Medicare price negotiations. It's the first time Medicare will be able to directly negotiate prices with pharma companies. It's part of the Inflation Reduction Act and intended to lower costly drug prices for 66 million older Americans enrolled in the program. But it doesn't come without criticism, and according to former FDA Commissioner Dr. Scott Gottlieb, a lot of unintended consequences. He's here with that angle. For the trades and the impact on the pharma space, we're joined by BMO's Evan Seigerman, and CNBC's Sharon Epperson has a closer look at how this could impact the cost of caregiving. Dr. Gottlieb, starting with you, we're sort of saying negotiation, but it's kind of like that scene in Friday about whose bike it is. I don't know how much of a negotiation this really is, right? I mean, prices are coming down, and that's going to make people want to make other drugs.
Yeah, look, it's not really a negotiation. They had to create the guise of negotiation to make this legally sustainable, and it's being challenged in court right now. I suspect that the prices that Medicare is going to administer here are going to be on par with probably what they extract in terms of discounts in the Veterans Administration. So it's going to be on par with VA pricing. They're due to send the manufacturers the first tranche of the sort of proposed prices. I suspect there'll be very little give and take on that, and then they'll arrive at the final price and announce those. There's going to be unintended consequences here. There's a lot of cliffs that are created by this law. There's a big delta between how much exclusivity is afforded small molecule drugs, only 9 years, versus biologics, 13 years under the law. So this is really a synthetic loss of exclusivity on these drugs once they come into these price regulation. So that gap between the returns on small molecule drugs and biologics are driving a lot of manufacturers right now to look at developing biologics against certain targets, and also rethinking going into indications that are predominantly Medicare indications. I suspect you won't see a lot of new business development looking at small molecule solutions for Alzheimer's, for example. You won't want to take a small molecule drug into a predominantly Medicare population. And that's unfortunate because certain biological targets can only be reached with small molecule drugs.
Well, some countries seem to already get these drugs for less than we pay for them here in the U.S. So why do we get the unintended consequences?
Look, the Medicare Part D program itself is quite competitive. If you look at the price concessions afforded to the government in the Part D program through the competitive bidding between different plans, a lot of times the discounts that are extracted are greater than the discounts that are extracted by European price-setting authorities. We created the Medicare Part D program, and I was there when we did it back in the early 2000s, to create a competitively bid structure on the assumption that you would extract savings, but you would also make sure that the capital got allocated to hopefully the best public health endeavors. And so that if companies were chasing returns on capital, on the whole, the places with the best returns on capital would also be the places where you'd have the biggest public health impact. And I think by and large that has worked, and that was the reason to create a competitively bid scheme. Now we're coming in with price controls. So we're upending that scheme, and we're saying the government can pick and choose winners more effectively. And I think that's going to cause a lot of misallocation in capital.
How long before we see that?
We're seeing it right now. You saw statements from the CEO of Novartis and Lilly that they've shelved certain programs, and certainly in the venture capital market, and I work for a venture capital firm, I see business plans. You're not seeing business plans come through, for example, for small molecule solutions for Alzheimer's. I haven't seen a business plan like that in years, really, at this point. I think you're going to see people pull back from markets where it's a predominantly Medicare market, trying to be solved with a solution that's going to be subject to earlier price regulation. And unfortunately, there's certain things like intracellular targets and targets on protein pockets that you really can only attack with a small molecule drug. Final point here is that if more of the investment does shift towards the large molecules, which is what's happening, those are harder to genericize and more expensive to administer. So ultimately, you're moving into drugs that are costlier in the long run and away from drugs that are cheaper, like the small molecule pill-based drugs.
Let me rephrase that last question then. Not how long until you see it, but how long until the electorate feels it and perhaps has more of an opinion about it?
Yeah, look, probably within 5 years. I think it's hard to know what you don't have. So I think in some respects the costs of this are hidden. But you're going to start to see capital come out of these markets, and then you're going to start to see the government step in and say we need to subsidize certain things. As soon as you see that, as soon as you see the government stepping in and say we need to find ways to subsidize new treatments for Alzheimer's, that's an indication that investment capital have left those markets.
All right. Dr. Scott Gottlieb, thank you. Now let's move on to the impact on drug makers' stocks. Some of the biggest revenue makers for Bristol Myers Squibb, Pfizer, and Merck are on this list. So let's turn to Evan Seigerman, biopharma analyst at BMO Capital Markets. Evan, what's the impact? How long before we see it here? It looks like it's a margin hit.
I think it's a margin hit, but really the list today that came out was not a huge surprise. You know, things like Eliquis, we knew that was going to be on the list. And for what it's worth, that's going generic around 2027. I think to Dr. Gottlieb's point, it's the investment up front that's changing now. Drug companies are focused on biologics, front-loading R&D so that when they do launch, they can have the largest indication possible. In terms of a margin hit, I could see an increase in R&D up front for some cancer drugs. They're going to front-load that and pressuring margins near term.
So what are companies more likely to invest in? We can see what they're less likely to invest in,
right,
even technology-wise, as a result of just the possibility of this thing continuing to happen in the future.
Well, I see a lot more investment in biologics, which Dr. Gottlieb said, less investment in small molecule oncology drugs. So think Imbruvica, which is on the list. You know, I know some companies are rethinking how they pursue and develop small molecule oncology assets, which is really a shame because that's a great way to get cancer drugs to patients easily. They don't need to go to an infusion facility. So unfortunately, things like that are likely to be deprioritized. In addition, weight loss drugs are probably going to be prioritized because Medicare does not cover things like Wegovy in weight loss.
Okay, go more into it. We talk a lot about weight loss drugs lately.
Of course.
You know, people are fiending for them. So what's the impact here on weight loss drugs?
So remember, Medicare does not cover weight loss drugs at the moment. If they were to cover weight loss drugs, that would be a different story. But Wegovy presumably won't be up for negotiation unless they figure out a way to do it via the Ozempic negotiation that's expected in 2027. I expect that you could see a bifurcation between diabetes drugs and weight loss drugs. Lilly has a drug, retatrutide, which could be developed exclusively in weight loss to kind of get around any potential negotiation.
You mentioned diabetes. What happens under the Inflation Reduction Act for insulin?
Insulin, I think, is capped at $35 per patient per month, which is great. I think that access to insulin is super important. I'm really talking about non-insulin products. So I think the GLP-1 drugs or the small molecules like Jardiance and Januvia. Those will be negotiated, but I think access to insulin is super important, and that's a great part of the IRA.
What happens to the pipeline for innovation as a result of this? Types of companies, as Dr. Gottlieb was saying, that might not be getting funded, and maybe even types of companies that might have less competition now that are already in the pipeline.
Well, companies that are in the orphan disease space like Vertex, going to be a very interesting investment because they're not subject to negotiation at all. They're not really in the Medicare segment. Along those lines, if you are looking at a Medicare population, so 65 plus, a large molecule biologic drugs are going to be far more interesting than, say, a small molecule. Small molecules are probably going to be relegated to non-Medicare populations. So think for younger folks to kind of prevent that 9-year clock that he's talking about.
All right. Evan Seigerman, thanks for joining us with that perspective. And we were talking about the cost of care. About 48 million Americans are caring for someone over the age of 18, with many of them caring for an aging parent or relative. And the value of that unpaid care is around $600 billion a year, according to AARP. Sharon Epperson with me now with more on that. Sharon?
Well, you know, this is troubling to a lot of caregivers because out-of-pocket costs for health-related and long-term care expenses are often far greater than expected. I met 3 siblings who are taking care of their mom at home, and we talked about the emotional and the financial strain of being family caregivers. After Ernestine Taylor had a stroke 4 years ago, her daughter stepped in to take care of her.
They're so good to me.
Daphne, a retired project manager and oldest sister, took the lead.
It was all a learning process.
Along with sisters Sheila and Debbie, who are also retired, the 3 worked together to provide their 87-year-old mom around-the-clock care, creating spreadsheets, managing medications, tracking her progress, and navigating expenses.
We've been up and down, around and about, you know, buying things that someone would suggest that you use this, this can help do this, so thousands of dollars.
They've paid out of pocket for medical equipment, transportation, and supplies, not covered by Medicare or insurance, including a $5,000 hospital bed. Nursing home care costs over $100,000 a year. A home health aide, $60,000. And when a family member provides the care, the average spending on caregiving activities is more than a quarter of their annual income.
In the last year, if you could think of what financial sacrifice might you have made? I'm sorry.
It's been hard. It's so complicated. When you start trying to figure out, even just in what we what she might be entitled to, we can just pay off our bills and stay afloat. That's a good thing, and that's what we're trying to do.
Financial advisor Barry Glassman says planning ahead for long-term care can reduce some of the financial strain, but he understands few families actually do it.
It's tough because a person in their 80s doesn't really know when they may need help or what help they may need, if at all.
Family caregivers can get paid through some state Medicaid plans. They may also receive assistance if a loved one is a veteran. But you have to apply for these programs.
We're trying to take care of our mom 24/7. There's just no way in the world that you have time to try and figure this all out.
Piecing together finances for their mom's care has been overwhelming. But these sisters say family and faith offer the support they need on the most trying days. Now, experts say it's important for family members to talk about the what ifs and discuss who will make health care and financial decisions if an elderly parent is unable to make those decisions themselves. Knowing who will take on those responsibilities can help alleviate at least some of the stress, John.
Sharon, this is so important because it affects just about everybody. It seems in a way like elder care is the new college, right?
Absolutely.
It's this cost that maybe there's some assistance for it. Maybe people can plan and save for it, but maybe they can't. It affects retirement and your ability to pay for things. What about the people who aren't wealthy, who can't easily afford this, the people in the middle? What are the steps they can take?
Well, you know, it is something that is a multi-generational problem that people are trying to figure out. And so trying to find that financial assistance can be difficult. There are state Medicaid programs that can help. If you're a veteran, there are programs that can help. There are also some neighborhood programs, community service programs that may be able to provide some assistance, maybe some respite care, so a family caregiver can have a break. But it really takes time. It takes time to find what you can get assistance with, and finding the tax breaks that you may qualify for, whether that is through your employer, through a health savings account or flexible spending account, or even if you're able to declare that parent as a dependent and take a medical expenses deduction or a dependent care credit. So there are ways to find that, but you got to piece it all together, and that kind of patchwork effect is something that can just be so overwhelming.
Well, we're a country with an aging population, fewer young people coming in.
Yep.
Maybe we need a 529 for elder care.
Absolutely. 2034, there will be more people over the age of 65 than there are under 18. So we need to address this.
Thanks for sounding the alarm, our
Sure.
Sharon Epperson. Coming up, another day, another company rolling out a new AI feature, but could this one actually have a head start on monetizing artificial intelligence? The name and the strategy ahead on The Exchange.
Good afternoon. I'm Tyler Matheson. Here's your CNBC News update at this hour. Miami Mayor Francis Suarez is suspending his campaign for president. Suarez is the first primary candidate to drop out of the race. The decision comes less than a week after his campaign failed to qualify for the Milwaukee primary debate on the GOP side. The Justice Department today announced the takedown of a malware platform used by cyber criminals. It's called QuackBot. And investigators say it deployed ransomware that caused hundreds of millions of dollars of damage with more than 700,000 victims around the world. Security researchers say they believe the hacking network originated in Russia. And a 127-year-old New York water main broke under Times Square, flooding subway stations and streets there. The state's Department of Environmental Protection said crews found the source of the leak in an hour and shut the water off. The 3 subway lines were suspended and the intersection closed to automobile traffic. John, back to you.
Tyler, thank you. Coming up, home prices are back to last summer's levels almost, but will further rate hikes derail their momentum? Yale professor Robert Shiller joins us with his take next. And before we head to break, let's get some show and tell, where we show you a chart, tell the story. J.M. Smucker on track for its longest winning streak since June after posting an earnings beat and raising its profit guidance. Here's what CEO Mark Smucker told Squawk on the Street this morning.
We still consider that we are in an inflationary environment, although we have seen some relief on coffee. But we have been very focused on making sure that if we do pass along inflation, we do it in a very prudent way, work with our retail customers, and do so in a way that is cost justified. Our brands have been able to hold this pricing and demonstrate both dollar and volume growth during this time period.
Is the club.
Welcome back to The Exchange. The latest reading of the Case-Shiller Index, notable for tracking the price of the same home over time, showing a slight uptick in home prices of 0.7% in June from the previous as demand continues to outpace supply. But looking at a year-over-year basis, prices were flat, indicating housing might be nearing a bottom. But still, mortgage rates are sitting at multi-decade highs. The rate on the 30-year fixed mortgage currently at 7.29%, and housing supply is now at a near 25-year low. For more here, let's bring in the man behind the Case-Shiller Index, well, one of them, Robert Shiller, also a professor of economics at Yale University. Robert, what do you make of this? This is a weird time where inventory is so low, prices remaining high.
Yeah, and with as you showed, the mortgage rate has gone up a lot, and yet people are still pushing, in many cities, pushing prices up. Our overall 1 year estimated change was exactly 0%. So like half the cities are going up and half are going down. So overall, nothing. In spite of news about the mortgage rate, which is quite dramatic.
Is it really employment and wages that you think are fueling this? Because, I mean, people are making more money, even though inflation is hitting a significant portion of the population. And as long as people are making money, they seem to be spending it on rent, on perhaps new mortgages, feeling decent about it. Is that sort of last Jenga piece that's keeping this thing from falling down?
Maybe. It's kind of a rejoicing that, or it looks like COVID is behind us. I liken the mood maybe to the markets after World War II. The war is over. Let's celebrate. And people thought that there would be a huge demand for houses as we got back to normal.
Well, about 5 years after rates were this high, we got the financial crisis and the mortgage crisis. How much pressure builds up in a system like this, and does it cause more volatility eventually in the housing market, or does it not work that way in relation to the macro?
Well, the old story is that of a speculative bubble. Prices start going up, and then they're become talked about as maybe it's crazy, but people don't sell right away. You get out. It's hard, especially with houses. It's a big deal to put your house on the market, so it goes longer than you'd think. And right now, people's expectations don't seem to be extremely high, but they're acting as if they're hanging in there and sort of well, maybe a bubble situation. Maybe it's going down from here.
Are you tracking at all the impact of Airbnb and kind of the secondary home rental market? Right now in New York, of course, there's a crackdown on that. There's probably a bunch of housing inventory that's no longer rentable on that kind of platform. And maybe that causes some more inventory to come on the market when people decide, hey, I can't get cash flow out of this like I thought I could. I'm going to put it up for sale. Are you seeing that at all across other markets?
Well, I haven't been studying that, but I think you're absolutely right about Airbnb is part of the computer revolution. Part of the dominant story right now is about Airbnb and ChatGPT and other innovations that have to do with the internet. So we think that we're in a world which is changing. Not we, everyone, lots of people are thinking. And at this point, it's the prices are holding. They haven't fallen like they did, home prices. They haven't fallen like they did after 2007.
All right. In a
We'll
world that's
see.
changing, yeah, eventually that's going to change too. Robert Shiller, we just don't know when. That's the important thing. Appreciate you being with us.
Okay.
Coming up, shares of this social media company popping today after announcing a new AI feature and a new way to make money. The name and the details next.
Eastern.
Welcome back. Our mystery chart was Snap. Shares are higher today after the company announced a new AI feature and its plans to monetize it. Julia Boorstin joins me now with that story. Julia, Snap has a way of doing this.
Yeah, AI also gets people's attention. Snap announcing a new AI feature and a new way it is trying to make money with AI. Snap Dreams, that's what they're calling a new tool that turns photos into AI-generated selfies. So you can turn yourself into a mermaid or a Renaissance princess. And then, of course, Snap encourages its users to share these AI-generated images with their friends. Now, perhaps most interesting, the first AI selfies are free. And then after that, it costs 99 cents for another 8 selfies. This follows Snap's $4 a month Snapchat Plus subscription service, which hit 4 million subscribers as of the end of June. All of this shows Snap's big push to diversify its revenue stream with both subscriptions and now one-off purchases as well. So the question is whether all of this is enough to help mitigate concerns about the weak outlook for the second half of the year that Snap shared in its last earnings report. Snap stock had been down 20% in the past 2 months before today's gains. Snap about 3.5%. Now, analysts are still wary. 73% have a hold on the stock, 12% have a sell, only 15% have a buy. John?
Julie, this reminds me of a couple of things. One is when Apple introduced in-app purchase, and another when some of the dating apps, Match, Bumble, et cetera, started, having these packages unlocked for certain features. I guess my question is whether there's enough volume on Snap to create the kind of network effects that would keep those purchases going and make them significant.
Well, look, there's a lot of volume on Snap when it comes to communication. I think that's one thing that's so interesting here, is that for the most part, Snap has been monetizing around the entertainment. You send a message to a friend, you go watch some content on Snap that maybe is professionally generated. There you see some ads mixed in with it. Then you go back and respond to the message that your friend just sent back. So it was all about the entertainment and the advertising in between the communication with friends. What they're doing here, both with the subscription and now with this initiative, is trying to directly monetize the communication itself. They want to make sure that they're making money and they're giving you lots of tools and reasons for you to keep sending your friends selfies. If a selfie in front of the restaurant you're at is interesting enough, they're going to let you send a selfie as a mermaid. So I think it's an interesting shift here, and it shows this interest in broader diversification away from advertising, which investors seem to think, at least today, is a good thing.
Julie, if I remember correctly, last year, Snap was one of the first companies to do a major headcount cut when they saw the slowdown in advertising spend and revenue. Is your sense, analyst sense, that they've sort of stabilized enough to have a platform on which to grow from here, or is revenue still shaky enough that there could be more volatility ahead?
Well, I think the reason we saw the stock drop so much after the most recent earnings call was because I think investors and analysts had hoped that things were going to continue on the upswing. We've certainly seen a lot of optimism out of Meta about their growth trajectory that's sent that stock higher this year. And I think there was some concern about a wariness about the second half of the year. We've seen quite a turnaround from talk of what they called an advertising winter. Now it seems like it's much more stable than that. But I think it's still too soon to say whether or not Snap is really going to be lagging in that department. Snap is much, much smaller than a Meta is. And so far, this year at least, that hasn't helped them. And Meta scale has really been a huge advantage. So we'll see what happens after this quarter, and we'll see if it's just as bad as they had warned or if they're really starting to turn things around more.
All right. We know you'll be watching it. Julia Boorstin, thank you. Speaking of the bigger players in AI, we've got a rare and exclusive interview with Google Cloud CEO Thomas Kurian, fresh off Google's Cloud Next event today in San Francisco. We're going to talk about the company's latest push into AI, a whole lot more. That's on Overtime with me and Morgan Brennan at 4 p.m. Eastern. Still ahead, near-term options in PVH imply an 11% move in either direction after earnings. Hewlett-Packard hasn't missed earnings estimates in 5 years, and Ambarella's management warned last quarter it doesn't see a swift end to its inventory correction. We will get the action, the story, and the trade on all three ahead of their results on Earnings Exchange, and that is next. And as we head to break, Take a look at the Dow near session highs, with Verizon leading the way after getting an upgrade to buy at Citi. The exchange is back after this. Welcome back to The Exchange. Tech, the consumer, and the tech consumer. So that's what we're watching in today's earnings exchange. We're looking ahead to reports from PVH, Hewlett-Packard, and HPE, Hewlett-Packard Enterprise, and Ambarella. Here with our trade is Jewel Financial founder Quint Tatro. Let's start with PVH, owner of brands like Calvin Klein and Tommy Hilfiger. Shares taken a hit in the retail rout last week, but analysts at UBS see a weakening consumer and higher promotions as a bigger risk to PVH than shrink. Quint, you're not touching it here, though. Why?
Yeah, this is danger signs, and anything's obviously possible surrounding an earnings announcement, especially with pretty high implied volatility. But this looks like a value trap to me. I mean, when you look at this company from the fundamentals, it doesn't look that bad. I mean, it's selling 7 times forward and looking to grow those earnings about 11%. In fact, it's trading below book value. But when you dive into the balance sheet over the last year, you can see that the company has significantly diminished its cash holding and significantly increased its inventories, which is a big red flag when you're talking about fundamental analysis. So this one is just a no touch for me until I really see the business turnaround and the consumer turnaround and that inventory level starting to drop considerably.
I mean, I contrast this chart with Abercrombie. Is PVH just not as cool as Abercrombie?
I don't have style. It's been a very long time since I was in the cool camp, so I couldn't tell you.
Yeah, well, my kids are not buying from PVH right now.
The chart's not as cool, I'll tell you that much.
That much we can see, for sure. All right, next up, HP and its software. Well, it's enterprise-centric cousin, Hewlett-Packard Enterprise, with servers and software. Shares of both are higher for the year, with HPQ, that's the consumer side, PCs and printers, up nearly 18%. And while those shares are outperforming, Barclays expects PC demand to be in line or even below estimates in HP's third quarter, staying more pessimistic on a hardware in a tough macro environment, while it sees AI to be the strongest long-term revenue driver for HPE. Quint, you too are buying the enterprise and selling the PCs and printers?
Yeah, it goes back to the original strategy, I think, why they separated these two out. And the long-term view, is the enterprise side is the place to be. And that's why that is, the one that we would slap with a buy rating. The legacy or the HPQ, the more, computer-driven segment is a no touch for us. But when you dive in, the fundamentals, top down look okay. I mean, they're relatively the same earnings multiple. Growth rates aren't all that attractive, but the balance sheet is a huge differentiator for us. And I mean, the enterprise side is the darling balance sheet, with the debt still on the HPQ side, which is basically showing a negative book value. And it's just not something that we want to touch here on the HPQ side. I could see the enterprise side, especially with the AI development that they're seeing, do really well. So we'd be a buyer of the enterprise and avoid the legacy side.
Same time, though, on the enterprise side, there's this shift toward accelerators, the likes of NVIDIA, away from more CPU-driven hardware. And HPE makes a lot of CPU-driven hardware, so they're going to be able to weather that?
Yeah, that's a good point, John. I think they will, and I think, like a lot of earnings reports, they're going to focus on the AI-driven side. We're going to probably hear that a lot in their earnings report. It's obviously a buzzword now, but I do think, much like an IBM, a legacy, computers driven service business, I think you're going to see an uptick there, and the opportunity is there. It's a fundamental healthy balance sheet with modest earnings growth and an attractive valuation. So I think there's some upside there.
All right, finally, chipmaker Ambarella shares are lower by about 10% in August as semiconductors more broadly took a hit. But Morgan Stanley is staying bullish, saying autonomous vehicles and generative AI are long-term growth drivers. And while Ambarella not yet profitable, Morgan sees generative revenue starting next year. Quint, is this a big chip play or no?
Yes, I want it to be. Now, in full disclosure, John, I'm going to be a big bandwagon. I don't yet have a position. I'm not a big buy ahead of the big earnings, report kind of guy. But this company has all the makings of an ancillary AI play that's not getting a lot of attention. I mean, they're the leading semiconductor manufacturer for chips that go into the cameras that are going to help everything from the autonomous driving to, smart infrastructure. They have no debt, and they're trying to turn the corner of profitability. So this has all the makings. They just need one good quarter. I don't think you need to get ahead of it. Meaning, yes, you might miss that initial pop if the quarter is, now, and all of a sudden they turn the quarter. I would suspect that they would have a big bump up. But I think once they do show their true path to profitability, the buzz surrounding this name, it's going to be a momentum stock and one that you more than likely will want to jump aboard after the earnings report.
That is the challenge, though, as we saw from Best Buy's earnings this morning. The consumer not so much buying the devices right now. We've seen that from Qualcomm as well. A lot of the things that Ambarella's tech is going into. When does that AI shift from the data center into the consumer story? It might be a while. Quint Tatro of Jewel Financial, thank you. And that's going to do it for The Exchange. Power Lunch is up next after a quick break.
Fuck. Sorry, bro. Yes, I agree. I almost spilled Red Bull on my fucking computer. But yes, I hope so too, man. Give me 1 second. It's on my monitor. What the fuck, man?
One.com.
Good afternoon, everybody, and welcome to Power Lunch. I'm Tyler Matheson, along with Contessa Brewer. Glad to have you here. And today, we are watching several stories at the intersection of business and politics. President Biden about to speak about drug prices. The FDIC plans to force banks to protect themselves in case of failures. And the SEC losing a court case and potentially clearing the way for a Bitcoin ETF.
And in fact, that's where we're seeing a big market reaction here. A judge ruling in favor of Grayscale in its attempt to convert its Bitcoin trust into an ETF. That is soaring the cryptocurrencies higher as well. You can see Grayscale up 16%. You've got Bitcoin up 7% and Ether up 5 1/3. Checking on the broader markets now, the Dow Jones Industrials, well, now we're still looking at Coinbase. Thanks, guys. Dow Industrials are up about 0.5%, and you've got the S&P 500 1 1/3, and the Nasdaq Composite up 1.5%.
Let's start, meantime, with our top story, and that is President Biden about to speak very shortly on the first 10 prescription drugs involved in price negotiations with Medicare. The Inflation Reduction Act, which was signed last year, lets Medicare negotiate on prices for the first time ever. On the list are some of the most commonly prescribed drugs of all, including Eliquis, Jardiance, Enbrel. All the major pharma companies are affected: Pfizer, Merck, Eli Lilly, Johnson & Johnson, and the drug makers are already fighting back with lawsuits. Before we hear from the president, let's get the stock angle on all of this. And joining us now for that is Louise Chen, a drug analyst at Cantor Fitzgerald. Louise, welcome. In total, these drugs accounted for, I'm told, $50 billion of just Medicare Part D spending. So there is a lot of money at stake here. What is the effect, if any, of what has been announced today on the prices of the stocks of the companies that manufacture these drugs?
Well, I think right now,
I don't
in the
know
short
if I'm
term,
more upset
none
about
of
spilt
these
Red Bull or
named drugs will have a
maybe
big
on my
impact
monitor.
relative to what the
Obviously
street
more
was
on my
thinking for
monitor,
these
but-
companies. The drugs that were listed were mostly ones that were debated. There were a couple
My-
outliers
my
that people
computer's
didn't expect.
under the
I think the
desk, so
bigger
that if
impact
something
is
does
probably going
spill,
to come in 2028 and
it won't,
2029 when Part B gets rolled into it,
you
and
know,
those are the more expensive drugs that have a
get
much
on
more
it.
meaningful
Shouldn't,
impact
at
on the
least.
bottom line of these companies.
So in other words, even though these drugs are
I
big
just cleaned all
names
this
that
shit up,
lots of
too.
us know, like Jardiance, like Entresto, like Eliquis, Enbrel, I'm looking at the board over here. I
can't see
in
anything.
some,
I don't
you do
even
not
get anything
think
to
that
it.
that the negotiation that
Oh,
Medicare may be able to do, subject to court cases, is going to affect in a material way the bottom lines of these companies.
Yeah, I think, well, it will affect the bottom line of the companies, but I think this has already been anticipated, right? I'll give you an example. Pfizer is one of my companies that I cover. Bristol and Pfizer have a product, Eliquis. Eliquis is slated to
That
go
probably
generic.
wasn't the best
So it is
idea.
something that has already been anticipated in the models on the street. Another example is a product, Stelara, that J&J has. That was a rather unexpected addition to the list, but that one is also slated to go generic, and that's how people have been modeling it. So for now, the first tranche, I think, was an easy pass, first time around for these price negotiations. But I do think over time, things will get a lot more complicated.
I know that you're going to be watching closely the lawsuits that have been filed by the manufacturers against this move by the White House. What do you anticipate will be the resolution? I mean, if you had any way to predict the future on this front, do you think that we're going to see this actually go into effect and that you're going to see the impact on the drug companies themselves?
Yeah, I think the potential for it to go into effect is 50-50 at this point. A lot of questions I get from different investors on the street is, how soon we could see some sort of resolution. And I don't anticipate that will be in the near term. I think this go through the course, at least for the next year or so.
On what basis are the drug companies attacking this plan? In other words, the right for Medicare and Medicaid, I suppose, to negotiate prices. What's the legal defense here that they're using?
Yeah, so the legal defenses, there's different ones for different companies. I think the main one is a violation of the First and Fifth Amendment, to a smaller extent, the Eighth Amendment. And then also AstraZeneca came out arguing that it violates the Orphan Drug Act. So they're all going after different angles. And I think seems like the bus is getting bigger with pharma companies suing the government on this.
And part of this, and you rightly pointed out to where this goes into effect and then years later, but what does the redesign itself do to the impact on developing new drugs for market?
And that is really the biggest question of the day, right? Can the government and industry work together to preserve innovation? Right. And if I listen to some of the comments that CMS made this morning, they did say that innovation is really key and they want to protect it. So there are ways to have a win-win situation between both government and pharma where they will attack the drugs that will be most beneficial to patients. And that's my thought on it.
I'm still a little perplexed as to how the First Amendment comes into this. I thought that had to do with freedom of speech and so forth, but maybe there is a way. But let me ask you a different question, if I might, and that is about whether, if this plan goes into effect and Medicare, Medicaid are able to negotiate the prices of drugs in their programs, will then commercial insurers that are not Medicare or Medicaid, will they do the same thing? In other words, will Blue Cross Blue Shield, will the pharmacy benefit managers be able, or will they push to negotiate?
So far, I've done
So this is a big point of debate, and I think it's an unknown. I think obviously pharma would like it to be more isolated and to be separated to Medicare versus commercial payers. But there is something where it happens that commercial payers might say, hey, your drug is too expensive. Look what Medicare said, and we want better discounts as well. Or it may be an opportunity for pharma to push some of that burden over to commercial payers. So I don't think we know yet. It remains to be seen.
We are showing you the White House now, where we're expecting any moment to hear from President Biden on his new plan to negotiate these prescription drug prices for the Medicare beneficiaries. Let's bring in now the former FDA Commissioner, Dr. Scott Gottlieb, who is also a CNBC contributor. And Dr. Gottlieb, I heard you say earlier that there would be unintended consequences from this plan. Can you lay those out for us?
Yeah, changes in how capital is going to get allocated. So this is really a synthetic loss of exclusivity, and Congress intended it to be so. So small molecule drugs are going to come under price controls after 9 years, large molecule drugs after 13 years. So it creates a real incentive to try to go after biological targets with large molecules rather than small molecules. And you're already seeing shifts in investment towards those ends. Unfortunately, there's certain biological targets that just can't be reached with antibodies and other large molecules. And I think a lot of those are going to go undrugged. Remember, there's really no benefit from what's being announced today to consumers directly. The benefits of this law, and there are benefits in this law, and they're quite substantial, is an elimination of the 5% cost sharing in a catastrophic range of Medicare, and also a cap on out-of-pocket costs in Medicare Part D at $2,000. Now, some of the savings that they're achieving here will go towards paying that, but most of the savings that's being achieved from these price regulations is actually going outside the Medicare program towards things like green subsidies. There's $286 billion over 10 years in savings that's projected. I don't think they're going to realize all that. But the vast majority of that money is not going to Medicare beneficiaries. It's going outside the program. So there's really only a lot of downside from what's happening today in terms of, are we going to see fewer investments in the kinds of innovations that benefit Medicare beneficiaries? And I think that that's going to be the case. I think it's going to be very hard, for example, to develop a small molecule drug targeted to a disease like Alzheimer's, where it's largely a Medicare population.
But why shouldn't
the fuck? That really just happened.
Be subject to negotiation in the same way that hospitals have to negotiate what the fees are, and doctors have to negotiate with the insurance companies what the fees are? Well, like, why shouldn't drug manufacturers have to undergo that same process of capitalist haggling?
Unbelievable.
Right. Well, in the Medicare Part D program, they do. I was around when we created that Part D program in the early 2000s, and the idea was to allow these drugs to be competitively bid so that different plans competed to try to offer beneficiaries the lowest price drug benefit. by extracting savings from the drug companies. And if you look at the pricing, the real pricing in that program, the prices that don't get published, the kinds of discounts offered by the major manufacturers, and as you know, I'm on the board of Pfizer and I know the industry pretty well, the kinds of discounts offered inside Medicare Part
When you
D
going to
sometimes
Carolina,
are
Brody?
in excess of what
I don't even know if you're
European
here or
countries
not. I'm
extract
just
through administered pricing. So there's a lot of discounting in the Part D program. The reason why we wanted it to be a competitively bid
But if
scheme
you
like
are, when
that,
you going?
where private plans competed to try to extract savings, was that we thought it would lead to the best allocation of capital on the whole. That if drug companies were competing to try to offer drugs in a competitive market and try to offer drugs that they could price at a premium, they would be allocating capital on the whole to the best public health use endeavors. And you have to believe that pricing does follow some semblance of what's having the biggest public health impact. And I think on the whole, that is the case. Really good drugs end up getting priced more. Now you have the government coming in and saying,
Hello?
we don't want a competitively bid scheme like that. We're going to set the prices. And
No, I
it
was
really
just doing that
upends
to see
the
the
allocation
sound
of capital,
between,
and that's the bottom line. Now capital is going to be allocated according
the
to government
sound
rules. And if
between
you look at the prices that they set today,
what's
the way they
playing and
scoped
what's
in,
not.
for example,
Like,
the
the
insulin,
sound between what's
which
playing
looked like a
on
policy
here
outcome in
and
search of a rationale, that's the kind of decision making that you're going to get from CMS. Decision making that's not fully grounded in their own stated policies. That creates a lot of market uncertainties.
Please correct me, Dr. Gottlieb, if I misunderstood you, but I think you said that
I hope I didn't
that
just
the
mess it up
benefits
by
that will
using that
redound to
fucking
consumers as a result of this would be
wipes. That's what I
relatively
was-
small. If that is
That's
what
what
you
I'm
said,
worried
please say, yeah, you got it right. But then my question becomes, is there a larger benefit that redounds to taxpayers as a whole under this? Maybe not to individual consumers, but to taxpayers.
Right. Well, I wouldn't trivialize the benefits to consumers. Eliminating the 5% cost share in the catastrophic range, which was a big burden on people who had serious diseases like cancer, and capping the out-of-pocket cost at $2,000 is significant. The administration deserves a lot of credit for that. That's going to reduce a lot of hardship. My point was that the vast majority of the savings being achieved by these price controls are not going to pay for those benefits to consumers. They're going just to save the government money. But it's not as if the government's taking that money and is going to pay down the deficit
wonder if we
or
got
find
enough
other constructive
to make a
uses
play
to provide
today.
broader health care benefits to consumers.
I'm like kind of sick to my stomach, man. This is 2 days in a row. We didn't have the greatest week last week, which was one of the best opportunistic weeks in a.
Is a good
Like
use
if there
of
was
the
one
savings
and
extracted from the Medicare program, then you'd be in favor of this
my,
law. I don't think that's a good use. If they had said we're taking that $286 billion that we're extracting from the
I
drug
gotta
companies
blame
and
her
using it
because
to
she
help
wanted to keep
offset
me up
costs
till
of health care
like 5
to
o'clock
families,
in the morning.
that would have been constructive, and I would have been supportive of that. I think as long as the money that was extracted from the system
did you guys get
stays
your
within
invite
the system,
for
is
the
used to
Apple
help
event?
consumers get better health care,
I gotta
you
check
can
the mail
find that
for
to be an
mine.
enviable use of those sources of funds.
Well, you know, and I
I've
had
been
that
invited
investigative story
before.
earlier this
I'm
year
just curious
that
to know if they
revealed
invited me
$100 billion roughly is the
this
annual
time.
loss for Medicare health waste, fraud, abuse. And very little gets spent on enforcement
might
there.
think
There's
I'm
an
playing, but I'm
opportunity,
really
if the goal is to save taxpayers money, there's a real opportunity on that front to do it in that way as well. Dr. Gottlieb, it's always a
Oh,
pleasure
Jesus
to talk to you.
Christ.
Louise Chen, thank
Ain't
you so
nobody
much
worrying
for
about
joining
his
us and talking a
dumb
little
ass.
bit about the stock impact here on the companies themselves. Coming up, Apple sends out an invite to September 12th event. Could this be the unveiling of the iPhone 15? We'll discuss that in Tech Check. And a quick power check before we go to break. Tesla, the leading stock in the S&P 500 today. Its Chinese rival, NIO, missed on earnings, which could show Tesla is winning market share. Well, on the other side of the vehicle coin, PACCAR, which makes commercial trucks, that stock on pace for its worst day in nearly a year, down 3%. And once again, here's the White House, a live shot here, waiting for the president any moment when he starts his remarks on these drug prices. We'll listen in.
ICCT. Oh wow, that's hilarious.
Welcome back to Power Lunch, everybody. Bitcoin up rather distinctly 7.5% or thereabouts. Ruling this morning may have cleared the way for a
There's people that are stuck in ICCT. This thing did have some good volume in the morning. Kinda. Yeah. Wow, that sucks. It's been halted since 12 o'clock. What's going on with this thing? Does anybody know?
Welcome back to Power Lunch, everybody. Bitcoin up rather distinctly 7.5% or thereabouts as a court ruling this morning may have cleared the way for a Bitcoin ETF. Kate Rooney has more for us. Kate?
Hey there, Tyler. So crypto bulls are now one step closer to that long-awaited approval of a Bitcoin ETF. A court of appeals siding with Grayscale in its lawsuit against the SEC this morning. The agency had denied Grayscale's multiple attempts to convert its $20 billion Grayscale Bitcoin trust into an ETF. It's also known as GBTC. That's up double digits today. It was the original way for investors to get Bitcoin exposure. It used to trade at a premium to the price of Bitcoin, but now trades at a pretty deep discount to the value of Bitcoin based on some fears that trust would need to be unwound if it couldn't convert into an ETF. It's also facing some lawsuits over fees. The judge today, though, saying that the SEC's initial decision was, quote, capricious and arbitrary, and that the commission failed to adequately explain why it approved the listing of two Bitcoin futures products, but not Grayscale's proposed Bitcoin spot ETF, and that in the absence of a coherent explanation, the regulatory treatment, as they put it, was unlawful. Grayscale, meanwhile, calling this a monumental step forward, and they say they're going to be pursuing next steps.
Oh shoot, she's still on CNBC. They didn't get rid of her.
This also, as far as the impact here, one venture investor I was talking to told me that the ETF approval is mostly about
we
optics
just
here.
did everything that Trumpy did. We don't want to give that white man credit.
The world's largest asset
he didn't do nothing
on board as well. You've got BlackRock,
and we just kind of just left it the way he left it because it was so good that the team we put together.
And it's seen as a way to
made it really easy on us.
Crypto investor base by unlocking exposure to Bitcoin in a brokerage account, and spot ETFs are considered a more efficient way to track the price versus futures ETFs. But
just like Scott Gottlieb said, guys, if you guys heard anything Scott Gottlieb said.
Thank you very much for that.
We're going to go to the White House now. The president talking about the drug price adjustments.
Good afternoon, everyone. Good afternoon. Please have a seat. Good afternoon. It's a room full of leaders. Well, thank you, everyone, for being here and for all the work that you have done leading up to today. I want to thank, of course, our nation's champion, President Biden, for your leadership and commitment to lowering costs for working families in every way. And thank you to all of the members of Congress for the work that you have done and continue to do to help us achieve this type of progress. So we are here today with the firm belief that in the United States of America, no senior should ever have to choose between whether they are able to fill a prescription or fill their refrigerator with food. But for you, yes.
It was already Kat before he came into office.
Because we know for years, far too many of our seniors, millions of our seniors across the country have struggled to afford their prescriptions. And too many of our seniors risked their health as they may have delayed to refill their prescription, or they cut their pills in half to try and stretch out the length of time that they could take their medication. So since we took office, President Biden and I and our administration has taken historic action to cut the cost of prescription medication for our seniors. We capped the cost of insulin at $35 a month.
Oh, shit, man. I don't know. If you guys I know you guys probably don't care right now.
We will
but
cap the total
I'm gonna be
cost
quite
of
honest with you.
prescription
This is the
drugs
same
at
exact problem that you
$2,000
have
a
with
year.
college tuition. The government gets involved and there's no competition because they know that
And
that's
we
going
have
to get
made
paid one way or
vaccines
another.
free of charge,
Right?
which will save
That's going to
seniors
get paid one way or
hundreds of
another. They're
dollars
okay with
every
charging
year.
really high prices.
Yes.
There's no competition.
And we finally allowed Medicare to negotiate the price of medications with big pharma companies
Unless you're just going to revert back to what
to
I
the
was doing. and
benefit
get at.
of 65 million Americans at least.
So Google ended
And
up
as many
pulling
of
back.
you know, we've worked
I don't
together over
know
the course
why.
of
I
my
don't know what
career. I've
exactly the
seen the
reason was
stakes of
for it.
this fight firsthand. When I was Attorney General of California, I met with countless families.
Here, I'll let you guys listen to it. Yeah, see, it's not even like they're even breaking away. It's like we're gonna just break away from this. Like, it's a fucking joke. It's a joke. Let's go to Tesla. Look, Moderna was moving off of that, kind of. Feel like it was trying to. Alright, so what I'm going to do is look for a few. I'm going to see if there's some opportunity here to go into the last hour and a half of the day. The S&Ps are still running. They're just still ripping and running. So I'm going to get rid of this stuff. I'm going to clean my charts up a little bit. Oh, man, I want to get puts so bad, guys. But it looks like we're turning that into that prior resistance. We're turning that prior resistance into support. Right? Am I wrong? Look at that. We've already broken it. We've broken 448 and we're turning it into support. Please get away from it. Nobody gives a shit. People, we don't care. One little ounce of good isn't gonna do anything for the gallon of bad that's been going on. Or take back the lives of the innocent people that have been killed over in Ukraine that they started.
Unless you needed the drugs yourself, or knew someone who did, it wasn't as real. Boy, we've been fighting big pharma for a long time. Long time. Stephen, as my mother would say, God love you, son.
Oh, it's not my good thing. My mic wasn't on. That's probably a good thing. It's probably a good thing. Fucking retard up here talking about being at the dinner table again, just like he does every other time he's on the microphone. When we were sitting at the dinner table, my dad, he turns diabetes into, it's not about a paycheck, it's about dignity. Jesus Christ. Look, here he goes again. I remember. Oh man, he's definitely done for. I remember. Oh my God.
Next morning I got up and asked Mom, I said, what's the matter with Dad? He said, the company just said they're not going to pay insurance anymore, health insurance. Well, you know, that's tough enough. But imagine when you have life-saving drugs you need to keep you alive. Do you have enough insurance? Can you afford your medical bills? Do you have to sell the house in order to pay for everything? For all of you out there, I get it, and millions of Americans get it. I promise you.
Where did that story go? And then he just stopped. He just stopped. Oh my gosh. Sorry, this what's on the monitor. What you guys are seeing is about like 30 seconds behind than what's on TV.
Which in a sense is misnamed. We did lower inflation, but there are many other things in that legislation. One of the most significant laws ever enacted, especially when it comes to reducing the cost of prescription drugs. We pay more for prescription drugs than any other major economy in the world. Than any other major economy in the world. You can walk into a local drugstore across the country, you're paying 2 to 3 times more for the exact same prescription manufactured by the exact same company that it would cost you in Canada or France or anywhere else around the world. Think about that. A drug company that makes a drug here in America, if it's sold in Chicago, you can buy the same drug in Toronto or Paris cheaper than you can buy it in Toronto. I mean, in Chicago. And unlike other parts of the healthcare system, Big Pharma got...
Benzinga is such a fucking scam. You can't even use it anymore. Just nothing but just... They just want your information. They've changed, man. I'm telling you guys. They've changed. They've changed. AXAL. AXLA.
VA pays 50% less than Medicare can and negotiating the same lower prices for years.
Alright, AXLA. If this thing can get some volume in it, this thing might be good, guys, but it's not. You would need to see it right now.
So they can charge whatever they can. But this is finally, we had enough votes by a matter of
You had enough votes when you came into office, but you decided to turn it down. Just to say, look what I did. You did the same exact thing old Trumpy did. I don't even want to hear it. Just like all the other half the shit that you left that he did and didn't change and want to take credit for. Well, it's not even Trump. I'm going to say the team he put together because that's really what it is. That's all a president is. Who can put the team together and say yes or no to what they do in the House and Congress. So, or Senate, whatever. And Scott Gottlieb just shut you down on that one, bud.
The Inflation Reduction Act is already making a huge difference. Take insulin, as referenced by Stephen. It cost that drug $10 to make. The guy who invented the drug, who came up with it, didn't patent it because he wanted it available for everybody.
129.
Charging 30 times that $10, more than that. Now, because of the Inflation Reduction Act, seniors on Medicare like Steve are paying $35 a month instead of $400 a month. And it matters. 3 months after the Inflation Reduction Act went into effect, all 3 of the major insulin manufacturers lowered their prices for insulin for everyone. For everyone. Not just seniors, everyone. That's originally what I had proposed, everyone. We lost on getting everyone, but we kept seniors. When we act, change happens. You know, and today I'm proud to announce that Medicare has selected the first 10 additional drugs for negotiation under the Inflation Reduction Act. 10 additional. Drugs that treat everything from heart failure, blood clots, diabetes, kidney disease, arthritis, blood cancers, Crohn's disease, and so much more. Medicare spends $50 billion a year on these 10 drugs.
And the money comes right back to your pocket.
$3.4 billion in out-of-pocket costs.
Oh, Lord. Man, that was such a nice long yesterday by getting along Microsoft. Oh, Lord. And I said, let's see where we close today, and I didn't do it. Man, those things were the money. What the fuck? Unreal. Well, we already know this morning they were up 200%. I am kind of curious where they're at now. So they're down a little bit. That's why, like, people say, you know, when they see me take profits early, like, so when we looked at them, when I looked at these earlier, okay, they were 66 cents. I got in these at like 22, 24 cents, right? They were up over 200%. And, right? And then now look at it, it's still up here, but they're less. So that's why you want to take profits or like start paying attention to the option price and start paying attention to the option price and start seeing where it's gotten cheap at for like the next run, or like get it on that pullback and just rinse and repeat, you know, for every drawdown that it has, try and grab it at the bottom of that drawdown, whether it's at resistance or support or whatever. You know, where there's a will, there's a way. Because I usually do this stuff. I've done it before. I still continue to do it. That's why I bought them yesterday, right? I had the 100-day moving average. The low on those contracts was 18 cents. I'm getting them at like 22 cents. How much cheaper could I ask for on a Monday when I still have 4 or 5, 6 days, right? So, yeah.
Those moves are designed to protect borrowers in case of more bank failures, such as the sudden collapse of Silicon Valley Bank that we saw in March. Our banking reporters, Huson and Leslie Picker, are covering the story, reporting, and regional banks face another hit as regulators force them to raise debt levels. Hugh and Leslie join us.
I feel like it's going to pull itself back a little bit here. Trying to...
enacting some of the same requirements and rules that the largest banks have already had to comply with. One of those is this long-term debt requirement, which essentially acts as a buffer in case of failure. If a bank, as we saw in kind of March, April timeframe, if a bank fails, having a long-term debt component can effectively serve as kind of a buffer between the bank failing and needing to be costly for depositors, both insured and uninsured. So that's kind of the thinking there. They're also redoing some of the requirements for living wills, essentially a wind-down plan for a bank in the event of failure. All of this banking lobbying
lobbyists are saying could be more costly to their bottom lines.
Okay, so Hugh, when you're looking at this, one, how does the debt provide this buffer? And then what's the long-term impact?
So the debt is, just think of it as a pile of money that's there. It's long-term debt, so it should really represent the increasing or decreasing risk that a bank needs to be rescued and saved by the government. And if it's there, it essentially will be a buffer against losses. That buffer protecting essentially the public. When you think about the public, you're talking about uninsured depositors who are, who have their money at a given bank, and ultimately the FDIC, which has got their insurance fund. And so what we've seen here, and Morgan Stanley has written a note about this yesterday, is
And look, guys, there it was, right to that second range. Right to that second range.
they're already under the gun in terms of profits because of rising interest rates.
Five in particular?
Five banks in particular. So they named five specific banks, Regions, Fifth Third, and a few others.
M&T Bank, Citizens Financial, and Northern Trust.
And Citizens Financial, and their analysis was that they're already below this requirement for long-term debt. They're going to have to issue debt, which, by the way, should be more expensive given some of the downgrades to the banking industry in general in terms of their credit ratings.
There goes the SPY, guys. There goes the SPY. It's 2:30 right now. Could we get an almost 2% day? I don't know.
This would be debt that they would issue at whatever the market rate is. And that debt does what?
You're getting some decent selling here.
It can't be used for anything but this kind of protection. It can't be used as long-term debt often is for capital expenses to expand branches or improve technology.
What's the Dow doing? That's why I got long yesterday, because the Dow had a big weighting in Microsoft. Probably pull it back here, and look at that. It held. I wonder if that was our failed breakout right there, guys. I don't know if you guys just saw that or not. We got an increase in volume stepping up here. I want to see if we can pull this thing back into tomorrow. What do we have tomorrow? So we have some data tomorrow, don't we? I mean, I know we do. We have Wednesday, Thursday, and Fridays. Really, that's so insane. It makes me sick to my stomach. I should have managed that position better, but whatever. Today's not Thursday. Today's Tuesday. Oh, yeah, I thought that said Thursday. So, Redbook 4.2, previously 2.9. Redbook is increasing by 4% week of August, same week previously year. Johnson Redbook Index is sales weighted of year-over-year same-store sales growth in a sample of large general merchandise. So, but we had retail sales drop, but this year-over-year Redbook, Redbook was up 4%. That's crazy. It's weird. That's why previously 2.9 there was no consensus or forecast. Okay, S&P Case-Shiller home price month over month. Actually, S&P Shiller home price year over year, month over month. Job openings.
DraftKings, you spoiling me now with these big payouts. Retired NFL smart guy Ryan Fitzpatrick. Break it down for us.
Just place your bet, and the bonus bets instantly appear in your account, like magic.
too much magic. It's too much magic.
Want to turn $5 into 200 instantly in bonus bets? Download the DraftKings Sportsbook app because life's more fun when you're in on the action. The crown is yours.
So Germany has their inflation rate number. We're going to want to watch these because this is going to give us a little insight to what we could be seeing this month as well, or for last month. And again, this data is backwards looking, so ADP employment change, retail inventories, goods, trade balance, wholesale inventory, GDP price, quarter over quarter. Let's see here. We should start to see GDP starting to top out, I feel like. That should be about it. GDP deflator in the United States increased 2.2%, record high of 131 in the second quarter of 2023, below 4.1 and below forecast 3%. GDP prices last previous June PCE prices quarter over quarter. Let's see here.
The more we understand you, the better we can help you. That's what U.S. Bank is for.
Wholesale inventories. So we really don't have much tomorrow morning that's going to really move the markets. It's not until Thursday. So as long as, I think that JOLTS jobs data was 324. ADP employment. So that's what it's going to be about, right? Inflation and employment. That's where the market is focused, guys. Actually, I'm going to get into that in the live stream. That's what I'm going to get into in the live stream. Read all about it. Extra.
Apple sets the date for its next big event. Will we see the iPhone 15? That is the topic for today's Tech Check. Joining us to talk about it, Steve Kovac and Deirdre Bosa. What should we look for here, Steve?
New iPhones, of course. Yeah. What else, Tyler? It's September. It's Apple. New iPhones.
It's iPhone season.
Right.
It's like Apple picking season.
That's exactly it. But look, just as has been the story with Apple for so long, it's going to be incremental updates year over year. But if you wait 3 or 4 years, it does feel like more of an upgrade. So here, according to just numerous reports out there, including analyst Ming-Chin Kuo, who is just always correct about these Apple rumors, the big change coming is going to be to that largest iPhone, the Max, the Pro Max. It's going to get this new kind of camera technology that they call periscope. That means it can zoom in better. That's all that really means.
All right.
It's an optical zoom versus a digital zoom. Better pictures, great.
So
This is what everyone's going to be talking about, though, is the change from that lightning plug, the plug that they've been using at the bottom of the iPhone for, last decade or so, is going to change to something called USB-C. Now, if you're an Android phone user or you use a more recent laptop, you're used to that. Those are the new kind of USB-C plugs that have been popping up everywhere. Now Apple is going to adopt that.
Smaller USB.
Correct, yeah.
A mini USB.
And this is actually probably going to be a good thing. A lot of the reason Apple's doing this is because EU put out new regulations saying companies have to do this. So Apple has admitted itself that they're likely going to do it. And it also means that you don't have to go hunting for different chargers for all your different devices. One charger will charge everything from your iPhone to your laptop to your tablet to your
I just want to find out if we're out of the woods yet.
Exactly.
Deirdre, it was illuminating to me how much iPhone has infiltrated life. When I picked up a framed picture this weekend and I started to try to zoom in on it by doing this, I'm like, on a real print picture, what was I thinking there? How much pressure is on Apple to keep innovating from companies like Google and the Android phones and everybody else?
Not much pressure. They don't need to. They just will copy them. All right, so there's your 2-year pulling back to that 50-day moving average on the daily. That's it. That's been prior support. I think we're going to need some real data. This thing doesn't really hang around its moving averages. I'm sure it's probably hangs around a 20-day moving average more so than this, but Where's the dollar? There goes the dollar. So once again, it's not it hasn't you know, we're not out of the woods yet, but once again, my weekend video, the dollar is overextended. Try to tell them. Try to tell them. Tried to tell them. Uh-oh, looks like she's wanting to go. Man, I can't get long up here, guys. And I'm telling you right now, this thing can just go and go and go and go. Oh my God, it's still gonna go. You gotta be shitting me. This is the thing with bear or, you know, bull market rallies coming out of these bear markets. They can just go and go and go and go and go. I mean, you definitely have support at or resistance up here, 449. 449. I'm not sure what I should be. Let's look around the markets. Did you guys see ARK today? ARK was freaking ripping this morning, guys. ARK was ripping. Katie Stockton. Give it up to Katie. Listen, I'm going to tell you guys right now, I love the women of CNBC. Especially the ones that come in like, so, sorry, I was wanting to hear her, but especially like Liz Young and all, they're so smart, right? Got to give it up to the women of finance. At least I do. And they're beautiful while they do it. But I think, let's see, Bristol Myers. What is the catalyst, though, to send Bristol Myers BMY? BMY.
being formation, a double bottom, if you will, with a breakout, and that breakout acts as a positive
Digital
catalyst
Realty.
on the chart. So we feel that this is an interesting turnaround play. It has some yield to it, and the price objectives that you can get using the Fibonacci retracement levels are close to about 143 initially. So still impressive.
I want to know what the catalyst is for this, though. Squib, what? DLR. DLR. Shit, I can't remember what the last one was, guys. I know it was Bristol Myers. It should be on here. Digital Realty. There it is. BMY. Let me see something. I see. Okay.
It's a smart hearing solution that makes hearing aids more convenient
Okay.
and less expensive. It connects with your phone so you can
Okay.
stream calls and music. With Jabra Enhance Select's premium package, better hearing doesn't have to start in a doctor's office. It starts with a free online hearing test you could take almost anywhere. So you can get your hearing aids custom programmed for you and delivered in days. From there, you can fine-tune your settings with your remote.
I really like that pick by her, BMY. I really like this, actually. I'm not sure like what the catalyst would be, if there even is a catalyst, to get this thing going. Like you would think if everyone's working, everyone has money, I don't know. It's weird. I don't know what the catalyst is to get this thing moving in the right direction. But it's at a point right now where this is a cool, like, volatile stock here.
All of us who know when it comes to getting your hands on some coveted NVIDIA GPUs, and Oracle knows NVIDIA pretty well. The two have partnered for years in the cloud computing industry, and that's why UBS is upgrading Oracle. It's, quote, underappreciated edge in terms of GPU capacity and cloud infrastructure, which they bet will attract new customers. Most companies, we know this, we talk about it all the time, are rushing to build their own generative AI models, and that means they have to scramble for the hardware. Most often the hardware being NVIDIA GPUs. UBS believes we could be sitting on a 6 to 12 month GPU shortage, which is quite substantial, even though NVIDIA said that they do have the supply. So that means any company, like Oracle in this case, with a stockpile, is already ahead of the game, or what they call a, quote, speed to deployment.
All right. What do you guys want to look at? What are you guys watching? And who thinks this rally here just continues and just is on a charge and doesn't stop till we fill this gap here? You have a gap fill up here, 449.50. Well, it's 449.65, and then we have another one up here. Nobody was talking about that gap. You had a wick, right? But I'm not going to sit here and say until you close that area, like you had that candle close up here, all you did was go up and reverse it. Right? All you did was do that little Missy Elliott, flip it and reverse it. You need to close up there. You got to stay the night. Right? You got to stay the night. You can't just think you're gonna come on over and then just turn around and leave and think that, you know, think that you just, you know, you spent time or something, right? You feel what I'm saying? Tesla. I was looking at Tesla last night, and I was looking at Meta well, again, not last night, but at 3 o'clock this morning. And I noticed a lot, like with Meta, look at this daily chart on Meta, and look how it just is sitting on the 9 EMA with support and rejections on it, right? On this daily 9 EMA. It did it the whole way up, right? Did it the whole way up. Bang, 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 bang. So, look at it. Resistance. Boop. Made it resistance again. So it breaks it. Sits around on it. Look, breaks it. Boom. Boom. Look at that. I mean, it doesn't get much cleaner than that. There you have 9 EMA and a resistance level. That's why it gaps up above it. And then there's your 50-day. That's another nice one. Look at that solid 50-day rejection, guys. Look at that. 1, 2, 3. Or we could say 1, 2, 3, 4. 1, 2, 1, 2, 3, 4. That 50 days a bitch for Meta. It's not able to get up through it. I'm gonna have that on watch. I'm gonna have that on watch. I'm really curious. Man, I just feel like I don't want to get cute and try and get short this market to think I can get a pullback, because this thing could just keep going. The buying could just go and not stop is what I'm getting at. Right? The buying could just continue because, you know, the job's going where it's supposed to be. So right now, throw that quarter in the soft bucket landing. Hard landing, soft landing. There's another one to the soft landing, guys. Jobs data is slowing down. That's what the Fed wants. It's too tight. I think we're good. I think we're going to be okay for just a little bit, right? You're really going to start seeing it when you start seeing this this data, when you start coming into October and bills got to be paid, debt's got to be paid.
And finally, at what age do people make their best financial decisions? The answer is age 53 or 54.
Really? Damn. I did pretty good then. I started at like 29, 30, 42. All right, last hour of the day, guys. Let's hammer it home. I'm going to do I'm going to do a small video. I'm going to release it for the watch list. 2, I'm going to try and do a college football stream tonight. If you guys would like to join us, that would be awesome. Love to have you. Ask questions. I want to try and really hone in on doing stuff all night tonight. I'm not going to go to bed. I don't care. I'm going to set up a background and try and have people call in. Right? So, there will be a PayPal for that. Not for the live stream, but. Let's see here. Let me see here. I don't know what to do, guys. I feel like. Let's see how we close this. I think seeing how we close this is going to be really important. Post 9. I haven't seen her in a while. Cameron Dawson. It's like a movie. Cameron Dawson is like a movie star's name or something. Look how we're rising and that RSI is just falling, guys. That's actually a sign of strength, right? That's going to give it more power to make a new high.
It was about interest rates. It was about valuations and positioning. So that would say that seasonality likely means you're in this sideways chop. Does it mean we return to that up into the right market of May, June, and July? Maybe not, but that's very different than expecting a big deep drawdown.
I think you were looking for a little bit more of a drawdown than we probably got, though, from our last conversations. You know, once we started to look a little edgy in the market.
There goes Meta. I was just looking at Meta. It's stuck here at the 50-day, so I'm gonna watch Meta. If it's not able to get up through this, I definitely want to see what I can do with that short.
Meaning that we saw some movement in the participation of things like
Double tops.
names under the 50-day moving average, but they never got to the place of being fully washed out, which would suggest that yes, we have seen markets bounce back. We've not made a new high. We've not surpassed that 4,600 level. It will be interesting to see how we.
Is that a cup and handle? Low volume pullback? Holy shit. Look at that, team. That's insane.
Why have we hung in there? What's been the determining factor as to why this correction that we started a month in?
Oh, I could tell you, Judge, inflation's coming down. We're almost at the end of the rate hikes and earnings.
Actually gone higher over the last 3 weeks, not lower. You started the month at $218 a share for 2023. Now we're at $222 a share. You've seen a similar move higher in 2024 earnings. A lot of that is because
Fuck, I should have taken it. I should have taken a picture of that.
look at economic surprises, really strong over the last 3 months. That has started to roll over more today with the weaker JOLTS data. But I think as long as earnings hold up and you see this continue.
The weight loss gave me my life back.
About now, maybe it doesn't come to fruition. To your point, that's going to be key. How about yields?
Well, yields did back off today, and I think that does explain the leadership that we had. Tech and growth doing better than the rest of the market. I think that the trend in yields for at least the 10-year is still higher. That is one of the few areas of the market that has a very resolute uptrend at this point, which means that I don't know how much I would count on a drop in yields in the very near term to be the ultimate boost and driver for this market. The thing that's been so interesting about 23 is high yields have not mattered for valuations or for the market. So how much will they matter if they start moving in the other direction?
I don't know. Why would they start moving in the other direction higher? What do you make of the move lower today? Right? What were we just at, like 433, 431? Here we are 412.
It's because
Futures positioning. Of course, some of that can be offset by positioning in other places, but obviously what we have is an environment where yields are very sensitive to incoming data. Today was immaculate in the jobs data. This idea that you could see job openings continue to come down and not have it yet show up in real job activity, not initial jobless claims popping higher. That will remain to be seen on Friday.
I hate being in this position. I hate being in this position where it's like,
Reverse these bets where the bond market started pricing in less interest rate hikes by the Fed.
you know,
You'll have that upward pressure again, and maybe this yield move continues to drift higher.
I mean, we need the data to be good. We just can't have it be too good.
Yeah.
In a sense, and that's what the JOLTS number was today. It was a little light. It still showed, you know, you got a good labor market.
Well, and I think that the big question for JOLTS going forward is it still a leading indicator? JOLTS and quits are usually seen as leading indicator for things like payrolls and unemployment. We've seen JOLTS and quits come down a lot. They've normalized back towards pre-pandemic levels. Do they continue to fall, meaning that they are presaging something more nefarious in the jobs market? Or do we have this perfect scenario where we can see an easing in the jobs market, but no actual increase in unemployment, which is what, of course, the Fed wants?
What about tech? Before we turn the conversation and bring in two people who really are in their wheelhouse when we talk about tech, what about your view of a trade that was, you know, looking really dicey?
Yeah.
And I don't know, it now feels like it's trying to get its momentum back and may have.
Yeah, we saw tech underperform from mid-July to mid-August, and now it's been outperforming since mid-August. And I think that we do have to ask the question of tech valuations.
oh, from mid-August?
Higher from here, meaning that they are back near their 2021 highs. That puts the onus then on earnings to drive the upside in tech. just because how much can you move tech that much higher above 2021, which was incredibly elevated multiples, without the benefit of earnings growth, which we are seeing earnings revisions higher for tech.
Multiples have come in across the board for the mega caps since the beginning of August till today. Now, obviously, you're going to get that when you had a little bit of the upset in the performance, but nonetheless, valuations have started to ease off a little bit. Let's expand the conversation. Bring in CNBC contributors Malcolm Etheridge of CIC Wealth and Lo Tony of Plexo Capital. Gentlemen, it's good to have you here today. So, Malcolm, I look at the notes, and it sounds like you want to run for the hills. Investors should be looking for opportunities to de-risk.
Well, I think, Scott, today is also giving investors that. My thesis, basically since Q2 earnings season started, back in early August, was that investors were going to be shrugging off any positive news that we got out of earnings, even with revisions being slightly positive for some of the tech names that we wanted to hear from. If you just look at an NVIDIA, for example, the day after they reported, blew it out of the water as far as earnings were concerned, had decent revision, had decent guidance going forward as well, and the market responded still, the S&P, I mean, specifically, with a sell-off. So up 0.5% when the market opened after NVIDIA, down 1.5%, and it's because until we get some clarity following the next CPI report in the middle of this month, and then
No, we have non-farm payroll.
is probably going to continue to trade sideways, looking for that specific guidance from the Fed of whether the end is here or they're not ready to declare mission accomplished. And so I just think
NVIDIA's almost gotten all of it back. And if anything,
Yeah, he's
50% in 3 months going into the number. I would think that you would think that a bit of a cool down,
yeah.
if it was one, was good.
NVIDIA was supposed to take the entire market with it, though, as far as a rally is concerned, following such a bang-up earnings report, and it didn't.
I gotta get good at this shit, man. I gotta get good at this shit. I really do. I'm not talking about the markets.
The bulls are in fact correct that the wave is still continuing, and those people like myself who are saying it's time to, look for the exit ramp, de-risk a little bit here.
Let's see here, guys. Let me see here. I want to do a giveaway.
In particular, the market without question was priced to perfection. We're starting to get back to that point now. I do think we need to pause because, look, the Fed has to come back and make sure they maintain credibility looking ahead.
All right, so we got jolts.
Seems to be, responding favorably so far to the jobs report. I think also just thinking about this thesis around a soft landing, the ability to be able to, kind of still have the jobs pull back a little bit in terms of that adding heat to the market, while still we've got 1.5 jobs available for every unemployed person. So we're at a good stability point, but without question, the Fed has signaled that, more cuts, if more cuts are necessary, they will take that action. So I think the market just needs to see where the Fed is going to move, and to the comment just made, we do
That is crazy.
performance to justify a lot of these valuations.
Well, I was going to ask you about valuations. I mean, let's take NVIDIA, for example, Lo. The beginning of this month, NVIDIA traded at 48 times forward. Today, it's 34. A lot of people talk about these bloated valuations for stocks like that. Oh, it's so expensive. The 10-year average for NVIDIA is 34.5. So we're right back to the historical 10-year average for a name like that.
And so then that poses the question of, was it overvalued to begin with? Look, I'm a big bull on NVIDIA, all of the Magnificent Seven. I believe that all of the hype that we're seeing around AI, which is largely driving NVIDIA, I think in hindsight, if we look ahead 5-10 years, we might even see that we had underhyped where we will land in the future. But for the moment, I do think that it's fine to be able to continue to see the performance that we expect.
That was such a good fight, guys. That was such a good fight. I'm not sure if you guys saw it or not. I think that women's fight,
the 10-year
and obviously the
average for
Sean O'Malley
NVIDIA
fight,
is 34.5.
So we're right back to the historical 10-year
That
average
was the
for
night.
a name like that.
Her and that other girl, they put on
And so then that
a
poses
really.
the
I
question
couldn't
of
stop
was it
watching that
overvalued
fight.
to begin with. Look,
I
I'm
don't
a
think
big
they got
bull
enough
on
credit
NVIDIA, all
for
of
the fight that her and that other
Magnificent
girl
Seven. I
had.
believe that all of the hype that we're seeing around AI, which is largely driving NVIDIA, I think in hindsight, if we look ahead 5-10 years, we might even see that we had underhyped where we will land in the future. But for the moment, I do think that it's fine to be able to continue to see the performance that we expect, continue to understand these macro conditions and how the Fed will make moves as a result of them.
Malcolm, you have a lot of these stocks. When you say de-risk, would you de-risk from these?
Well, as you might recall, I was actually selling, trimming my positions over the last couple of months as we were getting these higher highs and notching these, record prices. I've been taking chips off the table, preparing for the opportunity to scoop these names back up at a bit of a discount whenever the inevitable downturn does come. I'm still in the camp that believes that the yield curve inverting is an ominous sign that just has yet to be proven true. And I also believe that the Fed is going to say something at some point that lets folks know that they are dead serious about tightening until something breaks. So I believe that September we'll probably find out that there's another rate hike in the cards for us. If it doesn't happen in September, definitely in November. And I think those things together are going to provide folks like me who love these tech names an opportunity to come in and scoop them up at a bit of a discount compared to what I'd have to pay to own them now.
You had the discount, right? They were on sale by some respects, right? They had corrected. You don't think you missed that great opportunity? Because here we go, talking about the NASDAQ once again as the outperformer.
The one I will give you that I missed flat out is Palo Alto Networks. I really wanted to scoop that one up when it got closer to 208, 207, something like that, and I got greedy waiting on it to get to 203 and completely missed the trade. But I will say I don't think that today's rally is indicative of anything other than the pop that we just saw in Coinbase.
I was actually looking for that
the
same
Magnificent
exact.
Seven, specifically Tesla and Nvidia, are directly linked to what's happening with the price of Bitcoin. If you look at how Bitcoin has been trading the last 5 or 6 days and compare that against the NASDAQ, I think traders are buying both of those simultaneously. And so we're getting an artificial pop in Coinbase, in Bitcoin because of good news on the court ruling. And I think you can make a direct correlation between retail traders specifically buying that name as well as Nvidia, as well as Tesla.
I'm not even talking about just today. I mean, the NASDAQ's up 3.25% over the last week. Cameron, to you. Can this market take that next leap forward and avoid a historically bad month of September without tech?
No, I think tech is really important, not just because of its size, but of course for the psychology of the market. So having tech participate in the upside would be very, very important for the market to break into new highs. It does not mean that we have the narrow market that we had going into this year. It's really good to see the broadening out. So things like industrials participating, energy doing better. That's more supportive of the market having a sustained move higher. But I do not think without tech, you can see a break into new highs that be sustained.
The other thing, Malcolm, I couldn't help but think about when I was thinking about Alphabet today is I think we all remember, because I think it happened on this show, after the Microsoft and OpenAI investment, you were a unhappy Alphabet shareholder, and you said, I'm thinking about selling this name. They dropped the ball. They gave up the lead, yada, yada, yada. You know where I'm going with that. I looked back, okay? Alphabet, since the ChatGPT day, is up 37%. Microsoft, since the ChatGPT day, is up 36.5%. Year to date, Alphabet up 52. Microsoft up 36. In other words, the death of Alphabet's AI aspirations were greatly exaggerated, Malcolm.
I can't believe it took you this long to beat me up on that one.
Well, I haven't seen you in a minute. I was on vacation.
And I'm glad to see you were thinking about me on your vacation. But what I will say is I did at least take the gains from selling out of that Alphabet position, which I will readily admit I got completely wrong. At least I could say I was too early. I still believe that there's no way that they can compete there without cannibalizing their one true business. But at least I got the next trade right, which was to buy Schwab and buy shares of SoFi with the proceeds of that trade. But I will concede to you, I completely was way too early with that one, making that declaration when I did.
Low, did we write
Well,
off
page views
Alphabet
don't
too
matter
soon
now. I guess we
in
laid off
this whole arms race,
this
which
guy,
it
Matt
clearly
Fitzgerald.
is?
He
And
was a blog.
they
Yeah, I
weren't
know
going to
shit.
just,
Nobody wants to lay
you know,
people off. Like, he's like, oh, like, I want to fucking lay people off. He's like, well, page views don't matter now. I guess we laid off this guy, Matt Fitzgerald. He was a blog. Yeah, I know shit. Nobody wants to lay people off. Like, he's like, well, our page views, I guess we just won't blog. No, you pick up the fucking slack. Nobody wants to fucking lay people off. They're fat and lazy out there. And there's emphasis on fucking fat. So, yes, we lose a guy. Other people have to pick up the slack. Because we're laying people off doesn't mean we fucking just are willing to do less. It's like, well, he's a good guy. What, you sure you want to lay him off? I don't want to fucking lay anybody off. Guilt trip by fucking Nate. He was one of the good ones. Shut the fuck up, Nate. I'll fight you. Fine. We'll get rid of you. We'll save him. He can do your job, and we'll save fucking $100 grand. More. Fucking the dog. Less time preparing your speech. More time fucking, oh, well, what are we just not going to blog on the weekend? No, fucking blog. Fucking hate him. And then you'll know where to be found, and Stuhlstein's know where to be found. We're having this whole thing in the back of my head is like, this is good content about the real fucking business. Because Nate's a fucking dummy. Called Gaz. It's like, Baldy.
That would mean that the Fed would presumably, Malcolm, have to be done or close to done. It doesn't sound like you're convinced that they are. And I'll let you make the last comment here for our conversation about how much that matters to your perspective and what you really need to see to change your overall perspective, which sounds pretty negative to me.
Yeah, I'm negative as long as Jerome Powell is leaving it out there that we're going to remain data dependent. Because as the saying goes among poker players, Scott, you can either play the man or you can play the cards on the table, with the man being Jerome Powell and the cards on the table being the economy. I'm inclined to believe him completely when he says that getting to 2% is paramount, and I believe that he, as a student of history, is determined to prove that he's way more Vogler than he is Burns, and so he knows that he has to stay foot on the gas, take the slings and arrows, twist until something breaks, and I just don't see us as being there yet with nothing having broken significantly enough, save for maybe Silicon Valley Bank.
All right, and that was, yeah, and I mean, the Fed was a part of that story of why perhaps we haven't had a larger market problem in that cycle as well. I enjoyed it very much. Thank you, everybody. Malcolm, we'll talk to you soon. Low, you as well, of course. And Cameron, we'll see you back here on the desk one day soon. I'm sure of that. Let's get to our question of the day. We want to know, will tech resume its rally and outperform in September? Head to @CNBC Closing Bell on X to vote the results.
Oh my gosh. I don't know what to do, guys. You know, it's 3:30. The day is done. You know. Unbelievable. That's a trend day if I've ever seen one, guys and girls. Trend day if I've ever seen one. And look at ARK. Look at that. Dude, straight up. That's insane. That is crazy, guys. That's so insane.
All right, Christina, thank you very much. We'll see you a little bit later on. We are just getting started, though, right here on Closing Bell. Up next, 5-star stock advice. Capital Wealth Planning's Kevin Simpson breaking down his latest moves in his portfolio. Will reveal how he's putting his money to work as the summer comes to a close, unfortunately.
1, 2. This is Kathy Wood's you know, where they have the whatchamacallit, where they're connected at the head and stuff like that. Right here, there's your left shoulder, head, and now you're forming the right shoulder.
There's a better way to get a fast small business loan. Go to OnDeck.com, and if approved, get your funds as soon as the
Oh shit, man, this fucking blows, man. I should have just hammered the long after that number came out. I don't know why I didn't. Because we fucking took off and never looked back. Never looked back. There's probably nobody watching this, so I'll probably end up getting all out of here early, start working on a video for us, and get on with my day, and try and get a whatchamacallit done tonight, a college football whatchamacallit podcast done. I'm gonna go through and give you guys the picks, some of the picks.
Sleep more deeply and wake up rejuvenated. Purple Mattresses exclusive Gel Flex Grid draws away heat, relieves pressure, and instantly adapts. Sleep better, live purple. Right now, save up to $900 off mattress sets.
Yo, this dude's still out on his boat. He been on his boat literally all summer. My boy has not left this boat in months. He's all roided up. Look at his jaws. Look at his face. You can tell he's roided like a mug. You can see it all in his face. Quits rate fell to 2.3 in July and is now firmly back to pre-pandemic baseline. The Adfana led the Adfana. Oh my gosh, come on! This has historically led the Atlanta Fed wage growth tracker by 9 months and suggesting wage deceleration ahead.
Session highs for stocks right now with about 35 minutes to go. Dow right now is good for 260. And we're green across the board. Been a tough August, though. Getting better, though, and the month's not over. NASDAQ surging today. Tech is leading the way. It's still on track, though, for its worst month since December. Here to share his five-star playbook heading into September, Capital Wealth Planning CIO Kevin Simpson. Welcome back. It's been a tough month.
So you're hot right now.
Yeah, because Nate, that fucking dweeb, comes fucking slinking into my office. He's like, I have a question. So I've been very clear. Anybody who's paid attention, we are going to have layoffs and cuts, and they've started, and it sucks. And people who know me from the beginning, I hate firing people. You can be incompetent, not work, and I generally don't fire because I hate it so much. It's the worst thing to fucking do. Having said that, we're in a position, it's a no-brainer. It's not like I have that moral, well, you can't do it, because nobody will have jobs. We'll all not have jobs. So we have to get back to a break-even thing. We're losing a lot, and it sucks. And we laid a guy off, Matt Fitzgerald, who was hired to be a newsletter guy, which never got developed, but it sucks. Sure, he's a great guy. I actually couldn't pick him out of a lineup, which hurts when we're going down, and I don't know who it is, but we're looking at whatever. So it sucks. I'm sure he's a great guy. Nobody wants to do it. Nate comes slinking in my office. Hey, you fired one of the good ones. He's one of the good ones. It's like, what the fuck do you want me to do? He's like, so this just means, he blogs a lot. He's like, we just don't care about the blog. I guess we won't blog the NFL anymore. And it's going on, and Pat heard it. It's escalating. It's like, no, we're still going to fucking blog the NFL, you fucking rat fuck. People have to step the fuck up. I don't want to lay anybody off, but the last thing I want to do is when we have to, is have Nate be like, you ruined his life. He's one of the good ones.
Did you say that?
No, he didn't say
Okay.
that. He did say, he's one of the good ones. I guess we just don't care about the blog. No, we fucking care. We have 1 million people still. Someone else blog on the weekends. Like, we just won't blog on the weekends. I had to call Gaz because he does the NFL. So I called Gaz. I'm like, what? We don't have the NFL? We just laid off the NFL guy who I don't even know? And, well, maybe you have to blog on the weekend, Nate, you fuck.
Probably around this time. So we're talking about a year out before we can have the conversation about rate cuts. Well, we'll probably have the conversation every day between now and then. But the expectation for rate cuts happening next year, it just makes this higher for longer narrative put in place. And that causes the challenge because you could have economic contraction, you could have a recession, you could have a hard landing. I mean, all of those things become a greater probability the longer you keep rates higher. But the bear case, I don't think, has a whole lot of
News. We have devastating. Welcome back. This is your source, Stu Feiner, with Stu News. We have devastating, urgent announcement to make. Hurricane Dorian pales in comparison to the new storm we have. It's a new hurricane. It's gonna blow your fucking doors off. Meteorologist
blow your fucking
Stu
doors
Feiner
off.
will be tracking the storm. Stu, what is going on? Thank you, Stu. I'll tell you right now, all you viewers, kiss your parents, kiss your children, kiss your loved ones, because you're probably going to die. Look at this storm. Look at what we're looking at here. This is going to murder every bookmaker in the world. This is covering the whole country. It's not just part of the region. It's the entire country. We're going to go to Stu Feiner right now in the eye of the storm, on the scene. Stu, are you okay? It's unbelievable out here, Stu! 175-mile-an-hour winds! I couldn't even fuck if I want to! Pull down my pants! My dick went fucking sideways! It looks like a fucking firestorm! Things are going on fire! Winds everywhere! Rain everywhere! I'm soaking fucking wet! I'm ready to roll! But I'm ready to roll! The way you kill your bookmaker today is this! $50 best bet baseball! Fucking love it! 20 die winner! Ready to roll! Ready to roll! Ready to roll!
I'm sorry, guys. I gotta watch it again. My dick is... He's fucking sideways. Oh my god.
Stu News. Welcome back. This is your source, Stu Feiner, with Stu News. We have devastating, urgent announcement to make. Hurricane Dorian pales in comparison to the new storm we have. It's a new hurricane. It's gonna blow your fucking doors off. Meteorologist Stu Feiner will be tracking the storm. Stu, what is going on? Thank you, Stu. I'll tell you right now, all you viewers, kiss your parents, kiss your children, kiss your loved ones, because you're probably going to die. Look at this storm. Look at what we're looking at here. This is going to murder every bookmaker in the world. This is covering the whole country. It's not just part of the region. It's the entire country. We're going to go to Stu Feiner right now in the eye of the storm, on the scene. Stu, are you okay? It's unbelievable out here, Stu! 175-mile-an-hour winds! I couldn't even fuck if I want to! Pull down my pants! My dick went fucking sideways! It looks like a fucking firestorm! Things are going on fire! Winds everywhere! Rain everywhere! I'm soaking fucking wet! I'm ready to roll! But I'm ready to roll! The way you kill your bookmaker today is this! $50 best bet baseball! Fucking love it! 20 die winner! Ready to roll! Ready to roll!
Oh my god. Gotta love Stu, man.
been around 18 historically.
Yeah, for over the past 11 years, when we've seen this elevation in the PE, we've sold the stock. I mean, completely outright. So I've been out of it completely 8 times over the past 11 years. And we're kind of knocking against that ceiling right here. I like the stock. I mean, I just love what they're doing in terms of every aspect of the business model, the share buybacks, the free cash that they have on hand. I mean, it's a really special company. If we sell it at 185 after bringing in a $1 premium, we're out at 186. There would be the probability, the possibility that the stock came back down again, that we have an opportunity to re-enter the position. That's happened quite frequently, and we'll see where it goes. But we'll be talking in 2 weeks to get a sense on Apple. Huh?
Yeah, we'll see you soon. Thank you. Kevin Simpson joining us once again on Hosea. Well, up next, we're tracking the biggest movers as we head into the close. Christina Partsinevelos is standing by with that. Christina?
Well, even though Best Buy is dealing with a more cautious consumer, shares are jumping. Can you guess why? I'll explain next.
In any business, you ride the line between numbers and people. What's right for the business, or what's best for everyone who depends on it. Solving today's challenges while creating future opportunities. It takes balance. CLA, CPAs, consultants, and wealth advisors. We'll get you there.
Don't be Wall Street's useful idiot. Leading banks and brokers are paying you interest rates that are obscenely below market rates. Why? Maybe they made long-term loans at lower rates and would lose money if they paid you higher interest rates. Or maybe they simply think their customers won't notice or care if they don't pay market rates. Whatever the reason, don't let them rip you off. Collect the interest you are entitled to. Move your account to Interactive Brokers. On a $100,000 margin loan, Interactive Brokers charges just 6.83%. Do you know how much your broker charges? Fidelity and Schwab charge over 1.5 times as much. E-Trade and TD Ameritrade are even higher. Move your account to Interactive Brokers and save at least $5,200. Or much more if you're trading big bucks.
My plane has a mechanical problem. I've got to get there as soon as I can.
Breakfast looks delicious, as always. Having a chauffeur car plane side helps keep me on schedule. Hi, Jeff. With all the plane shortages, did you have trouble finding one? I never have any trouble. I simply pick a plane, pay, and I'm ready to badge it to my destination.
Are there any taxis around? I'm really late for my meeting.
Do we have a deal? Missed you at the meeting today. Badge it and don't miss out on the most important moments of your life.
Your return flight comp when you badge it.
These bills are crazy. She has no idea she's sitting on a gold mine. She doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy. Even a term policy? Even a term!
What is additional settings? I've never seen it before. Alright, so that's probably it for me today, guys. I'm gonna try and do some stuff here. My computer is suggesting Neo to me. I don't like that. So yeah. Thank you guys for joining us. I would like to give a big thanks to you guys who have been there. Tesla at the 50-day. What the fuck? Yeah, we're going higher. We're going higher. Going higher.
We're right around the highs of the day, Christina.
We are, and that's why I'm going to start with a positive name, and that would be Best Buy. After earnings and revenues topped estimates. However, there's some red flags there. The big box retailer did trim the higher end of its full-year sales outlook, with the CEO saying the company expects this year to be, quote, the low point in tech demand. On the earnings call,
Let's see here.
back-to-school season has been better than expected. They're optimistic that sales trends will continue improving, so that optimism helped push up the stock price about 4% right now. Shares, though, here's the downer news. Shares of NIO under pressure today after the Chinese EV maker reported a wider than expected loss and a revenue miss. A broader economic slowdown in China, which is hitting so many Chinese names,
It would be really nice if we could get a pullback on this.
Were part of the reason losses more than doubled from a year ago or the year ago period.
Hope you guys had a great day.
Recession, but still down.
I'll be right back, guys. Let me throw up CNBC for you, in case there's still some people here.
Truist, Keith Lerner is back with his forecast for stocks. How he's playing the recent volatility. Dow good for near 270. Watching the S&P 500 as well, which is
Continue improving, so that optimism helped push up the stock price about 4% right now. Shares, though, here's the downer news. Shares of NIO under pressure today after the Chinese EV maker reported a wider than expected loss and a revenue miss. A broader economic slowdown in China, which is hitting so many Chinese names, and the company's transition to a new vehicle platform were part of the reason losses more than doubled from a year ago or the year ago period. Shares are off their worst levels of the session, but still down 2% at $10.81. Scott.
All right, Christina, thank you very much. Christina Partsenevelos. Up next, stocks rallying as we head into the final days of August. Truist, Keith Lerner is back with his forecast for stocks. How he's playing the recent volatility. Dow good for near 270. Watching the S&P 500 as well, which is looks to be back above 4,500 or right there on the doorstep. We're back on Closing Bell after this. Bitcoin shares seeing a pop today. We'll drill down on that as well.
by Bose today.
We're back. Today's rally eating into some of August's loss. Says the risk reward is in fact improving. Not enough, though, to play offense just yet. Let's bring in Keith Lerner, co-CIO and chief market strategist at Truist Wealth. Welcome. Why not yet? What are we waiting for?
Oh, great to be back with you, Scott. So we put out a note last week during the correction that said we saw the move down as a healthy reset. So our advice to our clients is, if you're underweight equities, use that as an opportunity to increase equities towards targets. Markets went from the most overbought we've seen this year to the most oversold since March. The good news is it's responding, right? You want to see if you get an oversold condition, does it respond? And we're seeing that. At the same time, we've seen valuations come in, still far from cheap, but we're seeing earning trends or forward earning estimates at a 52-week high. Altogether, I think that's a positive, Scott, but I still think there's some challenges that lay ahead. I just think that things got overdone, and as we expect, the underlying trend is still somewhat higher. So that's how we're looking at things today.
I mean, there was a point, I don't know, a couple weeks ago where it felt like the trend was broken and that we were going lower. Now that the market's back up, now here we're hearing, these calls that, well, the trend's still up. I mean, it was a different story not 2 weeks ago.
Yeah, well, if we looked at our note from last week when the market was going down, we actually said that was an opportunity, and our title was, "This is a healthy reset," because, what happened coming into August is you had high expectations, right? The economy side, earnings have surprised to the upside, and inflation has been better than expected. So what you saw is a lot of optimism come into the market, which you're bringing up, and the bar for positive surprises became too high. That's why August has been somewhat challenging. But in 2 weeks, before this rally that we're seeing the last couple of days, we saw all of that reset, again, a healthy reset, and that's why we think things are, overall fine. I still think it's going to be a choppy move forward, but in a higher range. And then when you're thinking about equities overall, there's still relative opportunities. We're still seeing communication services today looking at a new, fresh relative high to the overall market. You're seeing discretionary act somewhat better. So, there's still opportunities. One other thing, Scott, outside of the equity market, I know that's where we tend to focus a lot. Just this week within our fixed income portfolio, we added to longer term bonds as yields got to 4 1/4.
Of all the things that have surprised to the upside, which you mentioned, the other thing, and maybe the most important thing, and why the market had a bit of an issue, rates, right? Rates surprised to the upside. Maybe not so much in moving up, but in the magnitude and speed in which they did, and that was upsetting to the market for a bit.
That's right, and I think just having some stability, and today, the big part of the rally today, we have that JOLTS number that comes in weaker than expected, consumer confidence a little bit weaker, but the market's looking at that as, hey, the Fed could ease off a bit, and the 10 years coming down. Look at the 2-year Treasury, the most sensitive rate to the Fed funds futures, and you're seeing that come down double digits today. So I think that's why we're seeing this overall rally as well. But again, I mean, the picture right now is I think modestly positive. We have inflation that's come down somewhat. Valuations corrected a little bit, sentiments come in, and from a technical basis, what you're seeing, of course, the S&P and technology stocks and the Nasdaq, is you're breaking above the 50-day moving average, so that's widely looked at. And I do think we make a run at least closer to that 4,600 level, which was where we peaked out a few weeks ago.
Yeah, right on the doorstep of 4,500. So we'll see. Keith, thank you. We'll see you soon. That's Keith Lerner.
Great to be with you.
Of Truist. Last chance to weigh in on our question of the day. We asked, will tech resume its rally and outperform in September? Head to @CNBC Closing Bell on X. The results after the break.
Alright guys, so I'm going to give you guys a little bit of thoughts real quick. I'm going to give you guys a couple of my thoughts real quick. I want to see a pullback, but I think first comes a gap up. I'm going to be honest. It's not going to surprise me if we do get a gap up. You get an overextension of today. That's not going to surprise me at all whatsoever, guys. Let me go over the charts first, and let me really look and hone in on what's going on a couple different...
All right, the results of our question of the day. We asked, will tech resume its rally and outperform in September? And the majority of you said yes, in fact, it will. 2/3 as a matter of fact.
I do want you guys to be aware about today's volume.
We'll tell you what has the tech giant soaring and what it could mean for the rest of that sector. That and much more when we take you inside the market zone.
Wow. We nearly... You've went $15 in 2 days, guys. Since Friday, Monday, and today. I need a pullback, guys. I need a pullback to at least first 445 is going to be the pullback. I'm going to go over all this on the video. Tune in to the video I'm going to put out. I'll probably just do a video instead of a live. And it'll be worth its weight in gold, I promise. Now look, Meta's still not able to get through that 100-day. Not saying that it can't the last couple minutes of the day. Right? Meta's still rejecting that 50-day moving average. It's kind of putting in a double top right there. Right? It's still struggling to get up through that level. If I pull up the S&Ps, the S&Ps are, I'm pretty sure, what is this, Thursday? Yes, that is Thursday, Friday. Yes, Tuesday, Monday, Friday, Thursday. 1, 2, 3, 4. Yes. So look, the S&Ps are above this level. Meta is not. Let's go to Tesla, right? Tesla above. So what I'm doing is I'm giving you guys examples of relative strength and relative weakness. For now, that can change. That can always change, right? They can continue to rip. That's no problem. There we go. Microsoft. There, we set ourselves up yesterday. Nice little double bottom, 15-minute chart. I'm sure has bullish divergence possibly. And what do we know? It did not, actually. It did not. That's because we didn't know what the data was going to be today. More importantly, we had no idea that the Jolts job data was going to come in the way that it came in today. So this is why knowing the data and playing the data is important. I told you guys, right? I don't like to do that, but I had to mock someone to say there's not much data this week. No, there is market moving data this week. We got it. We got one of them. We still have quite a few more to go. We have a few more to go. The main one comes Thursday. I'll get into all that in the video. Or wait, what? Actually, we get it tomorrow, guys. No. It's got to be Thursday. Yes. Thursday. Thursday is going to be the day. I want to see how we go into tomorrow's positioning. All right. I want to see how we go into tomorrow and how positioning goes into this PCE number, because if the PCE number comes in higher, you know, how do they react on a higher PCE versus a better than expected, as far as like whether it's, you know, good as bad right now, if that's the case.
on the
if
doorstep
that's what you
again
want
at
to call it.
4,500 on the S&P, and
you know,
we're just off the
less
highs
job
of the day
openings,
overall.
but PCE came in, and this is a month prior.
Observation all along the way, all month, that we were in mostly
PCE comes in a little
pullback
higher.
zone.
But what if
Until
it doesn't
further
come in
notice,
higher?
was
What if it comes in
probably
lower?
Mostly just
right? That's
a
also
little bit
an
of a
option.
retrenchment on the
So
valuation.
this number is going to be personal income, personal spending, core PCE.
You haven't necessarily set aside all the challenges, but the sensitivity
we'll see what's to take place. There's still a lot of
was
data,
underscored
guys.
again today.
A lot.
Which shows you the
Non-farm
main thing we
payrolls
were
on
afraid of,
Friday
I think,
also.
is yields going
Right.
runaway on the
Previously,
upside, choking off growth, or
187,000.
forcing the Fed's hand because
Consensus,
inflation was going to
170.
be the main story.
Forecasting
I don't really
180.
think we
So
should
they're
be wishing for
they're saying
a
non-farm
run
payrolls
of
is going
softer
to
than
non-farm
expected
payroll is going to
economic
come in
numbers.
lower
Yes, we got the,
for the month of
the
August
sort of loosening of the labor market
than
evidence
the month
today.
of
That was
July.
comforting. That takes a little bit of the pressure
We shall see.
off the Fed side, but I don't think we want
We
the Fed to
shall
start
see
cutting.
about that.
Fed starts
Unemployment
cutting,
rate as well.
then you're on recession watch
Still very
historically.
low.
Now you can cut and still orchestrate a soft landing. I just think we're okay where we are. We never got super washed out though, so I'm not sure we really pulled the slingshot back that far to the point where we're going to shoot higher in the market right from here. But
We're out of
we've
them,
definitely
Chris. They went up
knocked
nearly
over
200%
some of
today.
Those roadblocks ahead of
Yeah.
us. You know, we got above this little downtrend.
They were,
line
you got to
50
take them.
days.
I think they're actually down off of that 200%. I got in. I think what was the entry price? It was like 22 cents to 24 cents. Because when we looked yesterday, the low, I remember the low was 18 cents. I was buying right next to that 100-day moving average.
Than Microsoft from a stock
Sorry
point
if this is too
year to date,
loud.
and from the date of that GPT announcement.
And Scott, we
The low
also
on those
thought that maybe
contracts
the
yesterday
AI
were
hype
18
cycle
cents. I'm
calmed
buying
down
it
a
by
little
the
bit, but I think
100-day
what
moving
today showed
average,
us
so that's why I
is
bought
that
them.
it is still
And
intact. Now, as
you know,
part of its next event here in
I
San
went down on
Francisco
my
today,
position
Google
size.
had a
I
suite
didn't
of
do my
AI
usual
announcements,
position
including
size.
pricing for AI
Because
tools for
my
Gmail
position size
customers,
also
$30 a pop.
will
Same with
also it'll be
Microsoft's
determined whether I'm
Copilot,
buying the equity,
which,
the
when it
stock
was announced
itself.
in July, sent its
You
shares
know,
to fresh
whether I'm
highs.
buying
Now,
options,
after
whether these
Microsoft
options
later
or the
tempered
equity, like the
expectations,
setup, the
you might
reasoning.
think
So this
that
was
markets would like to see some more uptake
technical
first, but nope,
look. I'm
Google
at the
shares,
100-day
they are
moving
higher
average.
on
We
that
got them
pricing,
here,
as well
right
as
off the
expanded our new
bounce.
partnerships
So we
with
reclaimed
NVIDIA,
it,
GM,
bounced.
Ginkgo Bioworks,
I felt
by the way,
like, you
up
know,
more than
we were making
20%
progress
today,
to the
suggesting
upside
that
to
this
make that run.
enthusiasm over AI
Because
is
the
still very
Dow,
much
right?
has the ability
Here's
to
why
drive
I
markets,
did
and
this
not just
trade.
the mega caps, but some
I
of the
did this
smaller
trade
names
because
as
of
well.
the Dow.
Now, how long this
Microsoft's
lasts?
weighting in
Scott,
the
that's
Dow
still
is like
anyone's guess. We've been
is like the
saying for
second
months.
heaviest.
Investors want to
Third,
know how
right?
all
It's in
of
the
this
top
computing,
5.
all
So I
of
know if
these
the
NVIDIA
Dow
chips
has
lead
bounced
to
and recovered
actual
off of that
application.
100-day
For now, however,
on
markets seem
volume,
happy to
what do I
trade
want to
on
look
that
at? I want to look at
future. Promise
Microsoft.
it
I want
has
to look
been a
at
ride. Put it
UNH. I
well,
want to look at,
Scott.
you know, the top Dow
and
stocks.
Mike's here as well.
Home Depot, right?
I mean, it feels
So
like this quiet
yesterday,
move that
let me go to the
Alphabet
daily chart.
has made, 'cause it was all
It had a
about
really nice
Microsoft, and
clear
then it's been
bounce
really all
off the
about
100-day,
NVIDIA.
and the
that stock
pullbacks
has
were
done
low
awfully
volume.
well.
Sure.
I
I
thought were
also
low.
think that, you know, Alphabet is a stock that is priced and valued in such a way that it doesn't
that's
require
actually
you to
what I
make
was talking
heroic
about. The
assumptions about
pullback
how grand
off of the
AI
50 was low
opportunity is.
volume.
You know,
And then
this
here
year,
we go.
this
So this is
calendar
why I
year,
took
earnings
Microsoft,
estimates
because
are
we
up like 10%
we
the
bounced
last
off
5
of
or
the
6
100-day
months.
on an
It's
increase
trading
in
at
volume. That's
21
what it
times
was.
forward earnings,
We had the
barely
increase
now,
in volume
back
off
to
of
a
the 100-day
premium
moving
above
average on
Meta.
the daily
The point
chart.
is, there's
So
a
I
lot
said,
going on in
give
the
me
here
a
and
down
now in
name.
terms
What's a
of
down
earnings
name?
support,
Microsoft. What else does
where
Microsoft
this can
have?
be just an
Microsoft also
accelerator or
has
kicker down the
this
road. So
European,
this also
this
argues
European,
against the we were in some kind of an AI bubble
this
a couple of months ago.
European
Yes, you had a lot of
thing
enthusiasm.
coming up. That's
Maybe
why I
some
didn't go
stuff
with
got
Apple,
mispriced, but
right?
we didn't
Along
see
with
an
the
IPO
waiting.
rush yet.
Selling those 4 Apple
stocks
calls
like
that
Alphabet and
closed
Microsoft,
yesterday
yeah,
so
sure,
bad.
they were getting a little
It's
bit
okay,
of a,
man.
of a
Don't
tailwind
you locked
from it,
in
but it's not
gains,
as if
bro?
they got
You
the
can't.
silly levels.
Because
in
who's
terms
to
of
say
absolute
that this
valuation.
And
JOLTS
by the
job
way,
data
important
came
interview
out differently,
coming up,
and then everything
exclusive,
went
in
down.
fact, with
We had a down day
Google
today,
Cloud's CEO.
right? We
That's
could
an
have very
overtime,
well
and it
had
is
the
just
S&Ps
a few
and the
minutes
Qs
away. Don't
finally
miss that.
start
Kay
working
Rooney,
themselves
to
down
you.
to the
Boy,
100-day
I'm
moving
looking at
average,
Grayscale Bitcoin
right?
Trust today up 17%
If
as
the
we
data
speak
came in
this
that there
battle
were
with the SEC.
more job openings, because
Yeah,
the
and
Fed
that's
wants
such an interesting
wants the
investment
labor
vehicle,
market
Scott.
to
So that
loosen.
Grayscale is the company
Right?
in the center of this, but
The
they
Philly
have
Fed
this
member came out and said that
GBTC
really
was the
stressed
first
on that
publicly
Friday.
traded vehicle for
He said we
Bitcoin,
can
a
get
way
this
to
if we can
exposure.
get
At
the
one
labor
point, it was
market
trading
down.
at a huge premium to
And with
Bitcoin
this
in the
spending that's
past
coming around in
year or so. It's
October,
actually been
we
trading
could
at
be
a
lowering
discount. So
rates,
see,
first of the
that
year.
try to kind of catch up to the price of Bitcoin. So that's
So
sort of the
it
dynamic
was all
there.
on the data,
But to set the stage
right?
a little bit,
Don't get
Grayscale,
upset. You
this
locked
company
in
we're talking
profit.
about had multiple attempts to
What's
convert
worse?
that $20
What's even a
billion
worse feeling? I'm
Bitcoin
telling you,
trust into
is
an
having
ETF.
a
They
green
sued the
position
SEC,
go red.
This DC
And
Court of
even
Appeals
if it's
today siding
just a
with
little bit
Grayscale in
green.
that lawsuit
What are you doing,
against
Turkey?
the SEC. The judge
You okay?
essentially saying
So
that
yeah,
the
I'm going to do a
SEC's
video here in a
decision
couple
was
minutes.
hypocritical. Like called
I'm
it
going to give you guys
capricious,
some ideas
arbitrary. They said that
on
the commission
relative
failed to
strength, relative
adequately
weakness, like
explain
what
why they approved the
I'm going to
listing
show
of
you
two
guys in the video. The
Bitcoin
video I'll
futures
probably make it
products,
about
but they
15,
wouldn't
20 minutes
approve
long,
the Grayscale
or even
proposed
shorter if
Bitcoin
I
ETF.
can.
They say that was
It's going to I'm going to give you
unlawful,
guys
so this ETF
names of
approval,
stocks and
Scott, mostly
sectors
about optics here.
that
It's
you would
really
look
seen
to
as the
say,
final step to
if
getting
we get
crypto
weakness and
into
pullbacks,
mainstream
this is where we
finance. It
want to
would
look
get
to be
the
short.
world's largest
This is
asset
where we want to
managers
look to
on
be
board. You got
long,
BlackRock and
based
Fidelity
on
among those that are
relative
now
strength and
aligned
relative
still
weakness.
for Bitcoin ETF as well,
All
and
right.
it's seen as this way.
You still have
to really
stocks that are
broaden
stuck
out
below
the
the
crypto
50-day.
investor
You
base
have stocks
by
that
unlocking
blew
some
past
exposure
it.
to Bitcoin and
Right, so
brokerage
there's going to be a
accounts,
little bit of
although
a sector
Fidelity now
rotation
offers it, and
coming
so does
into the month
Coinbase,
of
but
September.
It's seen as this
It's going to
way
be a
really-
good video.
really
I suggest
broaden
you
it
guys
there.
watch it.
And then lastly,
But yeah,
the
Chris,
spot Bitcoin
what's up,
ETF
my guy? I
is
hope you're having a great day.
considered
Don't
bit
regret
more
it. It's
accurate
all
in terms
good,
of
man.
tracking
It's all
underlying
good.
prices than a futures ETF. So a lot of excitement around that, and you can see it in Bitcoin prices, Coinbase, a lot of the other crypto-related stocks.
Yeah, no doubt. Kay Rooney, thank you on that. I want to talk about, as we hit the 2-minute warning, and now we're under that, the one sector green for the month, albeit slightly, is energy.
Yeah.
I keep hearing more calls like this is primed. A lot of stocks are above their 50 and 200-day moving averages.
Yes.
Like they are primed for a bump here.
Yep, people love the charts, and for decent reason. And you know,
I'm
energy
just
mostly
feeding
held on to the
my little
big
girl
year it
real
had
quick,
last
and
year,
then I'll
60%
be right
gain.
back.
Continues to
I still think
outperform
we get a
crude.
pullback to
So
buy
it
the dip,
feels
guys.
like
I'm
this
being
mix
honest.
of,
I'm going to give you that
obviously
level in
good
the
chart
SPY
support,
and
but
everything
also
too.
There's a cyclical element.
This
and if
volume,
nothing
take notice
else,
to the volume when we
oil and
close,
gas
guys.
Staying range bound.
It's important.
Keeps you comfortable with the cash flow figures. So everything feeds
There's the
together. I think more
bell.
broadly, one of the things
Let me do
during
this.
little pullback
Tomorrow
we've
is
had in
it
the broad
tomorrow
market
or
is
today that we
didn't
get
see
CRM
cyclicals
earnings?
buckle
We have
against
earnings
defensive. So it
too
wasn't about
from CRM.
worries
I think they're
about
today.
the, earnings growth and worries about
feel like
the
they're today.
macroeconomic cycle. If anything, it was
I
the
think.
opposite. So that's one
Or
of
they're
those things
tomorrow.
in favor
Actually, I think
of
they're
this
tomorrow
was
night.
just mostly a decent little
Come
pullback
on.
to get valuations and
Equities,
sentiment off
show.
the oil. I'm not sure if
Yes,
it's fully
bang.
accomplished, but that has been the case. Credit markets, of course, also ratified
tomorrow,
that point of view. So
8:30.
it also we have the
Yes,
broadening
tomorrow.
of the
I'm
rally,
coming,
which is also in
Turkey.
place.
I'm
Yesterday
coming.
and today could be back-to-back
All right,
80%
guys.
upside volume day.
Great job today. Great job.
People
Great
say
job.
that's a pretty
Whether
good
you
sign of demand.
Yeah,
But
there's always
overall
something to
volumes
learn
are low.
from,
We haven't
guys.
really
There's
seen
always
a
something to learn
momentum
from.
stampede
Don't live in
in the market
regrets.
just yet.
Some big events to still come this week. PCE,
Exactly, yeah.
jobs report, but a pretty resilient market. Dow's going to go out near 300 in the green. S&P bumping right up against 4,500. The story continues in overtime with Morgan and John.
Well, it's a high score today, and you got your scorecard on Wall Street, but winners stay late. Welcome to Closing Bell Overtime. I'm John Fort with Morgan Brennan. Coming up on today's show, we have got a rare and exclusive interview with Google Cloud CEO Thomas Kurian, fresh off Google Cloud Next event today in San Francisco. We will talk about the company's latest push into AI and a whole lot more.
Plus, it's a very busy afternoon for late August earnings. We'll bring you results this hour from HP, HPE, Box, PVH, and Ambarella. But first, let's get straight to today's market rally. Joining us now is Vital Knowledge founder Adam Crisafulli. Adam, great to have you on. I mean, S&P closing at 44.97, just below 4,500. I think the big takeaway is you had some softer data this morning, particularly JOLTS. Yields moved lower, stocks moved higher. Do you fade this rally?
I think it has a little bit further to go in equities, but I don't necessarily see us hitting fresh new highs just yet. I think, the JOLTS report, like you mentioned, was a critical piece of information today. It's the most important event of the session, drove a big rally in treasuries. This is the second kind of data shock that we've received now in less than a week after the flash PMIs from last Wednesday. And so obviously lower yields are positive for stocks, but I think we have to be careful about what's driving yields lower. To the extent it is a resumption of the disinflationary process, that's going to be positive for both treasuries and stocks. To the extent we start to become more concerned about growth, which is my fear, I do think you're going to start to see a little weakening in growth momentum in the coming weeks and months. I think that you're going to see a divergence then in treasuries and equities. So I think the S&P has a bit further to go in terms of the rally, but I would be fading it in about 50 to 60 points or so.
Got it. And then what would you be doing? Buying treasuries?
I think the Treasury rally has a little bit further to go. I think, what you saw with the JOLTS today, part of it has to do with technicals too. The Treasury sentiment was extremely negative. And so I think, to the extent we see further data disappointments, it's going to help Treasuries a lot more than upside data reports is going to hurt them. So I think treasuries have technicals on their side from here, whereas equities don't really have that much of a positioning or sentiment tailwind at the moment.
Okay, so if you're at home and you're looking at your portfolio, we're right about in the middle of the August range. Don't have enough cash or equivalents on the sidelines. What would you say you sell here? And if you have enough, or maybe even a little bit too much, how do you get into the equity market when we are where we are right now? And I don't mean necessarily tomorrow or next week, but throughout the rest of the year.
Yeah, I think some of your yield sensitive names, so some of the areas of the market that have elevated yields that are more sensitive to movement rates, I think those groups could outperform if you do see a sustained rally in treasuries. So I think those are some of the more interesting areas now going forward over the coming weeks and months, because I do think you're going to see a little bit of a weakening in some of the growth data going forward. And we have, a ton of more data left this week, including the ADP jobs report for tomorrow. You have the PCE on Thursday. You have the jobs report on Friday, plus the Eurozone CPI too. So you have a lot more data this week that's going to be crucial for, how treasuries play out going forward.
A couple of people have said to me, in their opinion, wages in particular, this jobs report get more weight. They just matter more. What do you think?
Yeah, no, I think wages are very important. I also think, too, what we've seen for the last several quarters is phenomena of shrinking work week. So you have the hourly wage number has held relatively steady, but the work week is shrinking. So total take-home pay, as measured as hours times wages, that number has been coming in. And so I think that's really the crucial one to watch. Companies are very reluctant, I think, to wholesale cut headcount, just given how the difficulty they had over the last several years in finding people. But they are shrinking work weeks. They're cutting back on the hours worked as kind of a stealth way to rein in some compensation costs. So I think that's going to be the key, is the wage times the work week length for this Friday morning.
Yeah, and of course we know wages have been sticky. There's been a lot of labor negotiations and the like that are potentially going to add some noise to this report in particular. Assuming that this disinflation narrative continues to persist in the market, based on the data we get in the coming days, from a stock perspective, who stands to benefit? Because I know you've talked about this on the program before, but this idea that it's a double-edged sword.
Yeah, so I think you're going to see kind of the evolution of disinflation is going to shift. So we're moving away from pure base effects from commodity prices onto, you're going to see more disinflation in services, so especially shelter and housing, but other parts of services as well going forward. So you're seeing retailers call out disinflation as one headwind. You've seen a lot of retailers talk about increased price promotion. So that sector of the market is already feeling some headwinds, but I think more services areas in the second half of this year and into early next year could start to see some more disinflationary pain, just given that they're coming up very, very difficult compares, just given the enormity of the price increases for the last several years.
I can't figure out where the consumer still is right now, and I wonder if you have a strongest takeaway.
All right, team, I will see you all in just a couple minutes. I'm going to post that video. I have a really awesome watch list for you guys to keep an eye out for tomorrow and everything. I'm going to post that video in about, I don't know, it might take me an hour and a half or so, but I will get that posted. I love y'all. I appreciate y'all. Hit that like button, subscribe if you haven't already done so. We still have 3 more days. Good amount of data, like this man just said. There's still time, guys. We're still going to end the week strong. Let's start this month of September strong. I'll see you guys in just a few minutes. Appreciate you guys. Hit that like button, subscribe. I'll see you guys in just